It's hot. Now you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Jamal. This is the morning show. I was about to say Options Trading Concepts Live. I don't have enough coffee in me yet. I was just telling Jamal that I've worked here for over a decade, and just like 2 months ago, I learned that morning show is not Vanetta.
Look, man, this is like the biggest thing we have to like completely debunk. I said this like 3 years ago to her one morning. I was on the show with her. It was long enough where Tom was on the show, and it was me and Tom doing the morning show. And I said it. I just was like, sure that it's her. And I was like, when did you do this? Sounds amazing. Like, and she was like, oh, that's not me. And I was like, there's some lady we hired. I was like, bullshit. Like, that's you. I don't care what you say. That is you. And every time I hear it more and more, like normally when you hear like some truth, quote unquote, like that, you're typically like, oh yeah, no, it's not her. You feel wrong. The more I hear it, the more it's her.
Yeah.
Like, I don't care what she says.
That's why I never even asked, because I was like, oh, that's Vanetta. It's
like, who else would say Throwhole besides Vanetta?
It does sound, it like sounds like her. If she were to try to make that same voice that person is making, it would sound very similar.
That's what I'm saying. Like, I don't, you know what? It's like Aliens. I am convinced it is her. Okay. And I think she should re-record it. Like, again.
Yeah.
This is what I'm saying. I'm saying it in the affirmative that it's her. I don't care what she says. That is her.
It's crazy. I know you think that it is May 29th, 2026. We've got a Game 7 coming up for OKC San Antonio. But I'm here to tell you that the year is actually 1992. The Cold War just ended. We have The Real World just came on MTV. Cartoon Network just launched. And the youngest CEO to lead a Fortune 500 company, Michael Dell, his stock price is up $100 right now.
I mean, first of all, that was good times. 1992, man. I was 16. It was
Damn.
junior. Yeah, yeah. This time of 1992, I remember it clearly, Mikey. Like, seriously, like it doesn't feel like that long ago. I was 16. I was living in Charlotte, North Carolina. I feel like the Hornets were in the playoffs that year. Like, they had made the playoffs with Alonzo, and Alonzo hit this like last second jumper against the Boston Celtics, and it was like the end of the Boston Celtics era. I was playing a lot of basketball that summer. It was great times. I do remember it. And but this Dell, dude. Remember yesterday we were talking about putting on trades.
Yeah, I laughed when I saw this. I looked at last night, the stock price, and I started laughing because I was like, I thought I was bullish, but I mean, this is going to be a losing calendar spread, which is not great.
I'm the one who mentioned the 400, and I was like, yeah, well, you know, maybe it'll get the 400. Like, and I was like, oh shit! Last night, yesterday, when it was like 420, 430, like, oh my god, wow,
it's insane. I can't believe it. But yeah,
shout out to Luis, man. Luis gave Chris and I a great idea. We do signal versus noise, and we did this one the other day, and there was this huge call buy in June. I mean, wow. Like, talk about being right on it, the money and the zeitgeist. Luis, great job, man, coming up with this one.
Unbelievable. Absolutely unbelievable. We got Frank in the YouTube chat saying, in 1992, I was flying back to Chicago from Arizona every expiration week to tend to my floor brokerage operation. It's kind of funny. Like, those guys, like, you watch the show or the movie Wolf of Wall Street, that was like what they were doing back in the 90s. Like, these guys. I swear.
There's, you know what? I feel like this is the best time to talk about these type of things because, first of all, the people in the chat are gonna love it. They're not gonna. There's not gonna be as many people paying attention. Were they doing that? Most definitely. Those dudes were going to Vegas on the regular, kicking it. Kicking it is a very wide phrase. Okay, there's a lot of things that they did. Kicking it. It's Friday, baby.
Yeah. They were hanging out.
Look, they kicked it. They were hanging out. I mean, those dudes had a great time. Yeah, they were doing all of the above for sure.
I need Frankie. I know you can hear us. I need you to send us your outfit that you would wear when you flew on your private jet back to Chicago from Arizona. I want the big shades, the huge collared shirt. We got to see it.
That's right, Frankie. Send it to us, bro. Come on.
Yeah.
Don't let us down. I know you got pictures. You got pictures. You got all kind of damn pictures. Send it to us, man.
Yeah, the people need to see it. The people need to see it. Had his full hip replacement.
Were you even born yet? You were born in the Wait, were you?
Yeah, I didn't want to mention this. I was just going to let it go by. Because you were like, in 1992, you were 16. I was like, ooh, I was not 16. I was born in 88, so I was 4.
Okay, yeah, okay, all right.
Yeah.
Oh, that's good.
Yeah.
That's good.
That's
what I thought. I couldn't remember. Yeah,
I was.
It was a good time too.
I was kicking it in 1992.
Yeah, you were definitely kicking it. All right.
Yeah.
88 was a good year, man. I like both those years a lot. 88 and 92. 88. Oh, geez, 88. I was 12. Wait, what month are you born?
January
of 88.
Mm-hmm.
I was in 7th grade. Yeah, I was in 7th grade. My French teacher was Mrs. Cooley. She was the normal teacher, not like the teachers that I see a lot these days. I read a lot of New York Post, Mikey, and I tell you, there's a lot of teachers doing some very illicit things these days.
Oh, yeah.
Yeah, I wish Mrs. Cooley would did that, but she didn't.
It's so funny you say
Dude,
that.
That's the first teacher I was in love with, man. That was the first teacher I was in love with. My French teacher, Mrs. Cooley. Oh my God. She was so cute. I know, she was so cute. She was probably like 24, but it felt like she was like 34.
Yeah.
Realizing now how young a lot of teachers are, she was very young.
Yeah.
And she was so cute.
Oh, we had people like hanging out with our old teachers at bars after they graduated high school. Like it's crazy.
Really?
Craziness. Yeah.
Yeah. See, that
so
didn't
we
happen.
almost had some people.
There was no crossover like that when I was coming up, I feel. Or at least if it was, nobody talked about it.
Yeah. I guess
I feel like half the time these days when these teachers get busted, it's because like of the phone. It's always like they sent them pictures or something. Like it's the phone. It's not like the kid tells. Very few times does the kid tell. It's because like the phone or something like that.
Too much technology. But yeah, you basically lived my dreams. I don't know if you know this about me, but I love 80s music, 80s movies. Like I believe that my soul was born in like the mid 60s, 70s, and I went to high school through the 80s. Like that's what my soul feels like. And you basically live that.
It does feel like that. I know. That's why we vibe so well, because I can kind of tell this. Because what's funny? Last night I was we kind of were on a kick watching a bunch of YouTube videos, just mostly like music videos. I mean, we watched the Prince "Purple Rain" when he did it for the Super Bowl with the Bears and the Colts, and how it actually rained. Like we watched that whole set, which was phenomenal. I mean, I'm talking about going way back. Like I was just kind of in a vibe, man. So it was like Wham, "Careless Whisper." What else? We Belong Together, Mariah Carey. That's actually me and my wife's song. She's so mad at me right now. I lost my ring, man. She's so mad. Good. I know. It's not good. Well, luckily we have like a silicone one, so she made me put it on last night. She actually put it on. You know what's funny? She actually put it on as I was going to sleep. We were kind of arguing about it as I was going to sleep. It actually happened like last weekend, 2 weekends ago, maybe. No, when was it? Yeah, it was last weekend. And I don't know where it is, dude, like at all. and she's been kind of sick, so she hadn't said anything about it. She hadn't even noticed it. And then she's coming out of her sickness, and yesterday she was feeling like almost better. And she was like, you're laughing. So she's like, "Where's your ring?" I was like, "Oh shit, I knew you were gonna notice this sooner or later." I didn't know when it was gonna come up. Oh God, yeah. The night did not go well, but but it ended with her putting the silicone ring on my middle finger. When I woke up this morning, it was on my ring finger somehow. So, yeah.
You probably did
that's married life.
Subconscious adjustment. But hopefully
No, I didn't do it. She definitely did it. Nah, it's gone, dude. This is the second ring I've lost. So I bought 2 rings.
Oh, my God.
I'm not a jewelry wearer, man. Like, seriously,
Yeah.
I really don't.
Fair.
It's weird. It's surprising that I've kept the other one this long. So I had 2 of them literally from when we got married in 2011. And I lost one of them like within the first year or so. And I've had the other one all this time. And then, yeah, finally lost it. I don't like wearing jewelry. I don't wear chains. I don't. I really don't.
Yeah. The only thing I wear all the time is like a bracelet like this, which actually was made by Dr. Dada's daughter. She made, because you know how he used to wear like 100 of them?
Yeah.
So he was like, oh, what kind of colors do you like? And I'm like, well, I like green, I like blue. And so she made like 2 of them for me. And then he gave them to me. I was like, are you kidding me? So now I wore the first one for like a year straight. Never came off, never broke. This is the second one.
That's an amazing commitment for somebody else's kid.
Hey, yeah, seriously. Hey, I don't have any kids to my knowledge, so that's what you got to do, you know?
Yeah.
Yeah, this market is kind of insane, kind of crazy, but
I hope this Dell doesn't make like all these, like, you know, because, you know, I'm short Qualcomm, I'm short Intel. I hope it doesn't make all these other things go crazy. Like,
well,
but you know it is. I mean, how can it not?
Intel's not too bad. Intel's up $2. Microsoft's up another $5. That's nice.
Oh, it might be on, man. Microsoft's up again. Ooh,
yeah,
it might be on. It might be really on.
Yeah, especially with this gap here. You can see we've just been selling from these recent highs of 425. This level actually I think will clear. Yeah, so this level's 432, so we're right there right now. So if we get above this, there's this huge liquidation that we could just run through and get all the way up to 500. That would be amazing.
You're really into the Bollinger Band, huh? You're really sticking to it.
Yeah. So this was actually, I was talking to Ryan because when we did the morning show on, what was it, Tuesday?
Yeah.
He always references like the momentum that he looks at in different products. And I was like, well, let's just get this on the platform. Let's show the people how to do it on the platform. And he's ultimately using the Slims ribbons, which are 3 different moving averages, an 8-day, a 13-day, and a 21-day. So I just have the EMA. I change the colors on them from the indicators tab, and you can change the length. That's what the days would be. So you do an 8-day, a 13-day, a 21-day. And then, yeah, I actually really like the Bollinger Bands. And that was from Glenn from TastyFX, because the TastyFX world, like, I'm exclusively just looking for price extremes in certain locations. And the trade tab here, these are like really nice shaded Bollinger Bands. I just threw this on. This is all I have. And anytime we get near a high or near a low, I just throw on a trade and wait. See if it works out.
See what happens.
Yeah.
I put some trades back on there. I'll talk about it later. I won't talk about it now, but I put some trades back on there. I had zero. I had closed a bunch of stuff. Everything had worked, but we'll get on that later. Wait, favorite 80s movie. So like, you really in the 80s like that? Like I gotta test your knowledge. I mean, have you ever seen Teen Wolf, like the original one?
Yeah. Yeah.
Seen Teen Wolf? Okay.
Yeah.
I watched that recently while I was out. It was one of those like early morning movies that was on. I was like, oh, let me watch this.
So yeah, my favorite. So when I went to school, I went to DePaul. When I was in my 20s, I changed my ringtone. So you know the Breakfast Club, "Don't You Forget About Me," that song.
Yeah, yeah.
That I changed my ringtone for my wake up call, like my alarm clock, to that song. So I would wake up and that song would just go, burr, burr, and I'd be like, "This is a great day, people. Let's go." Yeah, that was my alarm clock. So. All those movies, love them. Breakfast Club, Fast Times at Ridgemont High.
Oh yeah, good one.
I think is that 80s? That might be 70s.
No, that's 80s. No, it's 82.
But
so this is the other thing you probably don't know about me. I'm pretty good at like coming up with the year of most movies. Like if you'll say a movie, I'm like, oh yeah, no, that's 82. Like Breakfast Club is 80. Oh, that's a good one. I think it's 85 or 86. Oh, that's a tough one.
You set yourself up for that one.
What happened? What year is it? I was wrong?
85.
85, right? Okay. See, I'm not that far off, James. It's not like I said 89.
I was joking because you were bragging about knowing the dates and then you immediately
I'm pretty good, though. I am pretty good, though. I'm pretty good. You know, that one. Well, so that one is one. Honestly, I don't think I watched The Breakfast Club in the 80s, and that's part of the reason why I don't know it. I probably watched that one in like mid to late 90s. I was late on that one, theoretically speaking. Like I didn't watch it when it came out, you know. Not that I watched Fast Times at Ridgemont High when it came out, because I was 6, but that one I've seen a million times.
Yeah.
Like, you know, preferably, if you have those 2 movies on, I'm gonna watch Fast Times at Ridgemont High, and I'm gonna watch it twice, because that one just like, for whatever reason, means a lot more. It's my first of all of us, our introduction to Sean Penn. I mean, that dude was amazing. Well, he's still alive, so he is amazing. But watching that movie, a lot of people, so many people in that movie. I mean, Sean Penn. I mean, the scenes are so real. You know, when they go to the spot, the point, or whatever they called it, I think. And the other thing about that movie, and this is where the other thing about that movie is Jennifer Jason Leigh. Have you ever seen The Twilight Zone, the movie? You ever heard of this? That's deep cut. Talk about 80s.
I don't think so.
So that came out, I think, 81 or something like that. Maybe 82, 83, I think. Twilight Zone, the movie, is fantastic. Just the different, it's basically kind of like how they did the show, but there's like different whatever stories they got. But I bring it up because there's one of the stories where this one guy, he keeps like moving throughout time. He doesn't realize where he is. That's her dad. And it's a very legendary Hollywood scene where her dad got killed by this helicopter. It's crazy, dude. Like, it's wild. And it changed the Hollywood landscape because they were filming at night. They had this one kid in the scene. The helicopter lands and it kills both of them. And they weren't supposed to have the kid filmed. And it was John Landis who was doing the film. John Landis is the guy who did the movie with the trading movie with Dan Aykroyd and Eddie Murphy. This is how you know you're getting old when you don't remember Trading Places. We don't recall things like right away. This is how you know you're starting to get old, Mike. That's something I would have recalled easily like 10 years ago. Trading Places is what John Landis did. He did like Trading Places, Coming to America. He did Twilight Zone, the movie. And they were in court for like few years behind this weird scene. And that's Jennifer Jason Leigh's dad who died. And she's in Fast Times at Ridgemont High. This is the kind of useless shit that I would have in my head for like years, man. Like knowledge.
Hey,
I eventually decided to apply it to trading because this is like how my brain works. I'm telling you, man. Like,
you're like, you know what? I could apply this kind of encyclopedic knowledge to the markets.
Yeah.
See what happens.
Yeah.
But yeah, my favorite movie of all time is called Rad. And
I don't know
it is basically when I was a kid, I was a big skateboarder, BMX, like rollerblade type person. So I loved the X Games, all that stuff. So one day I went to Blockbuster and they had this bin of movies and it was all like
shout out
sports.
Blockbuster.
Yeah, shout out Blockbuster. If you don't know what Blockbuster is, don't talk to me. That's another thing. There's so many young people in the office and I'm like, have you seen Austin Powers? And people be like, no, what's that? I'm like, I can't even work anymore because my brain's so broken. But yeah, my favorite movie of all time is Rad. It's a
Who's in
BMX
Rad?
movie. It is. This is where I'm bad. So Lori Loughlin is in Rad.
No kidding. Yeah, I don't know this movie.
Bill Allen.
Who the hell is Bill Allen?
He's the main character, but it's so funny because Tosh.0, he loves Rad too, and he did a whole episode on Rad, and he brought on the guy. I'm like, is this real? I thought it was like a spoof, but Ed Helms recently tweeted. Ed Helms, the guy.
From, from the
Hangover and everything.
Hangover, yeah.
We're the Millers.
Oh, Bart Connor's in this movie. That's funny.
Yeah, so that's my favorite movie of all time. But it was funny because literally this year, I think it was this year, I opened up Twitter and Ed Helms posted, he was like, it's my pleasure to announce the 50th anniversary of my favorite movie of all time, Rad. And I'm like, is this a joke? I swear. Well, he said something about like the anniversary of the movie. What was it?
40 years old.
40 years old. There you go. Carry the two. So yeah, he posted it and I was like, you gotta be kidding me. All these people like secretly love this movie alongside me? Craziness.
I mean, that is wild. I've actually never heard of this one at all.
That's a great one.
So along the same lines, have you ever seen Gleaming the Cube?
Oh yeah.
Okay. Yeah.
So that was like that was a classic skateboarding. Anything with skateboarding, I've seen it for sure.
There's this one rollerblading movie that's kind of similar. Is it Airborne? Is that what it is? Yeah.
That's what I was going to bring up next. So Airborne is a really funny.
This one I know very well.
That movie's hilarious because it has young Jack Black and young Seth Green in it. The rest of the actors and actresses.
I don't even remember Jack Black being in this movie.
Yeah, neither did I. And I put it on. I literally watched it like 2 months ago. It's just like a nostalgia thing.
Yeah.
But yeah, Airborne and Rad. If you've never seen him, check them out. Great movies.
I mean, that one seemed perfectly cast. Like that dude, the lead dude, his hair, the way he acted and everything. Like that one seemed perfectly. It didn't even seem like that guy was acting in the movie.
It was incredible. James, I don't know if you saw the emails, but Frankie did provide some pics. They are a little blurry.
Long ago. Blurry.
A little blurry, but you can get the idea.
No, he only sent it to us.
Well, I forwarded it to.
Did you? Oh, you forwarded James? Yeah, forwarded it. Yeah, pull those up, James. Put those up.
But yeah.
Stand by working on it.
Insane.
Cool. I don't know what one of these pics, though, is.
Oh, my God. Yeah, I didn't forward that one. I didn't forward that one.
That's classic. A limp cactus, Frankie.
If you get the drift, it is a limp cactus.
Literally.
But yeah,
Airborne. Yeah, I remember this movie.
Airborne's incredible.
I remember watching this like on like a HBO a year after it came out or something like that.
Yeah,
for sure.
Last thing about 80s nostalgia, there actually was a show that came out 10 years ago on Amazon. It's an Amazon original show called Red Oaks. And that show, if you like 80s type of feel, it's like perfectly done. It will transport you back to the 80s, and it's Red 3 Oaks. Seasons. It's very good. You got to check it out.
Jennifer Grey is in it, huh?
Yeah.
This is a real question. Why did Jennifer Grey change her nose? She's the first person in history I can think of who looks less attractive with a nose job. It's weird.
Yeah. I don't know.
She looked better with the original nose.
I don't know. Some people just look in the mirror and they got to change it. They don't like it.
Another trivia for you. Do you know Jennifer Grey and Matthew Broderick, during Ferris Bueller's Day Off, they were dating. Did you know this?
I did not.
Did you know that they were in a car accident in Ireland, I think it was? And he broke his leg and he killed somebody in the car accident.
What?
Yeah.
It's not great.
See, I'm full of Hollywood trivia, bro. Yeah, he was in an accident after, I think it was after the movie. They were dating. They were both in the car together. They got in an accident. I think he broke his leg, but he killed somebody. And so, yeah, he was like, somehow he did not go to jail for it. Crazy stuff, right? Yeah.
It's insane.
Hollywood lore. I got, these are a lot of stories I got. They're
Hollywood lore. You do have a lot of Hollywood lore.
I spent a lot of time on IMDb for years. I really did. I used to just, like when I was in grad school, I used to spend a lot of time there when I was like bored or trying to get away from work.
Hey, I don't blame you.
Yeah.
The YouTube chat's popping off with some suggestions. Dogtown and Z-Boys. Yep, I've seen that.
Dogtown and Z-Boys. I never heard of this.
Yeah, that's like a 70s California style flick.
2001.
What else we got?
Yeah, no, I never heard of that.
Roller Boys. People want you to watch Roller Boys.
Roller Boys.
I don't know what that is.
Never heard of it.
Roller Boys.
No, who's in that? I don't know anybody in this.
This actually
nobody.
This looks like a sci-fi action rollerblading movie. That's wild.
That is wild.
Check this out.
That's what the director pitched. You know what? We're gonna make it the sci-fi action movie involving rollerblades. Yeah. Ricochet. You ever seen Ricochet? Speaking, that's getting in the 90s, early 1990. Denzel Washington. It's a fantastic movie. And John Lithgow. That's 1990, I think, or 91 actually.
Maybe I have seen this.
You ever seen Colors? That's 86. That is so. Sean Penn and Robert Duvall. It's about the LA gang scene. Wild movie. Blew my mind when I saw it. I was like 10 at the time.
Damn. Yeah, this seems like a heavy hitter.
It is deep. It is deep as hell. It's definitely a heavy hitter for sure. Geez, what else came to mind? 87. Untouchables. You got to see the Untouchables, right? You ever seen that?
Untouchables, I believe I've seen.
Yeah, fantastic. That's one of my favorite movies. Talk about 80 movies. That's one of my favorite movies. I definitely kind of like grittier movies, and like the Untouchables. First of all, it was like one of these. It was one of those movies that just like for the time period was meaningful to me. But then like before I lived in Chicago, I always felt like I just belonged in Chicago, and this was part of it because like so many movies I saw were always like centered around Chicago. This was definitely one of them. And there's so many scenes in here where you could just see like the city, of course. And so that's what was so wild to me where we go every Thursday now. When I first wound up there working at Peak 6, and I'm literally on that street where basically a lot of the movie happens. And I'm looking down that, I'm like, this is unreal that I'm literally here now. And I'm in this building, the Board of Trade. So it just really was crazy. It was like a full circle moment when I first started working. I'm like, I get to come to this building every day? Crazy.
We've got Frankie's pictures up.
Yeah. Ooh. Look at that guy. Oh, look at that dapper guy.
Ooh. Yeah.
Yeah.
Yep. I was almost right.
Look at that stash.
That's a big ass collar.
Look at that stash, man.
Yeah. The stash was in.
Yeah, it was.
Hell yeah.
Yeah, it was. Look at that guy.
How you doing?
Yeah, exactly. That's what it looks like. That's what it looks like he's saying in that one picture, right?
He's saying it to me. He's saying it. How you doing?
Hey, how you doing?
Man.
Exactly what it looks like.
Good times. Look at that tie.
Man.
That's a thick ass tie.
That's a thick ass tie. I was thinking the same thing. That's a thick ass tie.
A baby blue suit.
Style.
Like, it's so funny. You look at a baby blue suit back then, you're like, yeah, that's normal. But like these days, very rare. Very rare.
You gotta be a sexy MF to rock a baby blue suit.
Yeah.
I mean, you do.
Mm-hmm.
Is what it is.
Indeed. But yeah, what a time. What a time. Love to see it. What was I going to say? I was going to say one last thing about movies.
I don't know. I said Untouchables and Board of Trade and 87.
Forget. Oh, yeah. You were talking about gritty movies. The Departed. So,
yeah.
Gus, this is just another thing that the young people just like. Gus has never seen The Departed. I'm like, I can't talk to you until you've seen this movie, because he's like, I need a list of movies to watch, and me and Tracy gave him like 30 movies to watch. But The Departed, never seen The Departed. Come on.
Yeah, you gotta see The Departed. It's funny you say that about list of movies. I told Errol he had to see Ferris Bueller's Day Off. I was like, you can't live in Chicago and not see Ferris Bueller's Day Off. You gotta see that movie.
Truly. All right. Well,
break time.
7:30 a.m. Real quick before we catch a little break here. Rundown of the show today. So we're switching things up a little bit, swapping some things around. We're going to do the next half hour. We're going to talk about pattern day trading removal. That is next Thursday. We're less than a week away. It's going to be crazy. I think it's going to change how the markets look and feel a little bit. I think there's going to be even more of an increase in 0-day trading and things like that. But we'll talk more about things you need to know. There's nothing you need to do, which is nice. Everything's just going to go into effect on June 4th, next Thursday. 8 a.m., we got market measures talking about extremely short-term jade lizards. I'm sure those worked out well because those are bullish trades.
Yeah.
8:20 a.m., we got the opening bell. And then 8:40 this week in stocks. 9 a.m., fast market trades. So thanks for your submissions. I'm sure they will be great ones, as they always are. 9:20, we got live from the trade desk with Q. And then we'll kick it over to Liz and Jenny at 10 a.m. And then we'll have, for Options Trading Concepts Live at 11, it'll be a pattern day trading VOD. So all the pattern day trading content you can get right now. But yeah, hopefully, at the very least, you got a handful of movies to go watch this weekend. I would say my top three, if you've never seen them: Rad, Airborne, and Fast Times at Ridgemont High. But that one, the last one, you probably have seen. What about you? Top three this weekend for the people?
Oh, geez, top three. Yeah, you named some good ones. I'll have to say I'll go with Untouchables. Keeping it gritty, I'll go with Colors. And my favorite, I think everybody has seen is Back to the Future. I love any movies going between the future and the past. Love them.
Yep. Agreed. Well, we will be back in about 90 seconds. Thanks for tuning in. Markets aren't moving, so we'll just keep talking about movies for the next 3 hours.
Yeah.
We'll be back in 90 seconds here watching Tasty Live.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Welcome to the most dangerous show on the Tasty Lab Network. It's Engineering the Trade. I'm your host, Jamal Chandler.
I was a chemist and engineer for over 10 years and conducted experiments and research of all kinds. However, for the past 15 years, I've been an options trader, and I've traded strategies of all kinds. While the concepts may be different, there are certain similarities between these disciplines.
My favorite strategy really has become selling put spreads. Now that works in a market where we're continually going up, of course, but I love trading everything. And that's sort of a result of trading at a prop firm. We looked at the entire universe, as we say. So no, I love to trade it all.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What's up, everyone? We are back. E-minis selling off a tiny bit. Still up 6, though. NASDAQ actually red now, down 2. Dow and the Russell kind of flat-ish as well. Literally everything is just flat. This is the most inside open I've seen with an hour, just under an hour left until the equity open. But yeah, we talked about this earlier. Dell is up over 100 points, went from 318 to 425 overnight. You've got some of these other tech stocks following suit. Microsoft up 5 pre-market. Intel up 3 pre-market. Snowflake up a little bit. What were the other ones that ripped yesterday?
I don't know. CRM happened to be up. Palantir ripped yesterday. Palantir went up $10 yesterday, bro.
Yeah, CRM is up 3 pre-market. Palantir is up 5 pre-market. So, yeah, this is probably going to be another decent green day for a lot of these stocks. Insane.
Yeah.
Even NVIDIA. Actually, no, NVIDIA's flat. Nobody cares about NVIDIA anymore.
No.
It's absolutely nuts.
Intap is in the same group, I guess, as Dell. That's up like $20. I don't have anything on. I haven't traded that forever, but yeah. Same crazy moves.
Nutty market. But yes, PDT, pattern day trading, the rule that has created some limitations for a lot of people over the last 20 plus years is going away next Thursday. And I think from a practical standpoint, there's not much that's going to change for day-to-day trading other than the fact that you won't have day trade calls anymore. I think that's something we can talk about too. The pattern day trading rule really applied to people that had less than 25K in their account and they day traded more than 3-4 times in a 5-day rolling period. That is what would put you in the pattern day trading status. And that is no longer going to be in effect. But the day trade calls is still something that could have affected you even if you had more than 25K. The day trade calls was based on your starting day trading buying power. All those things you can see on the Tasty platform, but that is also going away. So if you had 50K, for example, and you were using 45K in marginable trades, your starting day trading buying power would have only been $5,000. The next day, if you sold out of positions and freed up more capital and you day traded with more than $5,000, which is what your starting day trading buying power was, you would have gotten a day trade call. So there was all these like nuances that could have affected people with over 25K. But again, the new rule is going to be the intraday margin guideline. So basically, the intraday margin is going to be a real-time framework that just says, do you have enough capital to day trade or trade whatever you're trying to do? The nice thing about that is there's no more day trade counters that affect you. And as long as you have the capital that you're trying to trade, even if it's a couple $1,000s and you're just day trading like a couple $100 SPX or whatever, 0-day iron condors, whatever it is, you will not be affected or dinged in that regard. The only thing that can hit you is if you let your buying power go below zero. So the most important thing going forward after June 4th is just the same thing as always. Make sure your buying power is well above zero and you're not dipping below zero, and you'll be okay. That's still going to be the only thing in terms of getting a call or getting a lockout for 90 days. It is still possible if you are negligent in terms of letting your buying power remain below zero and putting yourself in margin calls.
Yeah, I mean, there's a lot of good things about it. I mean, look, this whole rule was created so that people wouldn't take too much risk. It would promote a little bit more risk management once upon a time. I mean, there were reasons why it was put in place, and I think those reasons are understandable for the time, though. I mean, everything changes with time. And so now that we're in 2026, so many different things have changed. I mean, to give ourselves props, there's people like us out here, especially at Tasty Live, who are given fantastic education, and we got years and years of it. And, we're not the only ones. There's a lot of great education that's easily accessible these days that just was not at a time when pattern day trading rule was put into place. So there's better education. There's better markets, much more efficient markets. And there are opportunities that occur on a daily basis now when you have 0 DTE, when you have 1 DTE, options trading. And I think the ability, like I said, when it was created, it promoted risk management, but it got to a point where now you have 0 DTE and 1 DTE options that it was preventing risk management. And now you can manage your risk more dynamically because you have the ability to get in and out of trades without worrying about the pattern day trading rules. So I know there's certain risks with it. Hopefully it doesn't promote over trading in this situation. And I think the people who have had to deal with this rule for a very long time are going to be able to manage it I really fully believe that. I hope people don't overabuse the privilege, and I think they're going to be able to understand that once upon a time there was this rule that prevented you from being able to manage your risk dynamically, and now you have the ability to. So I hope people are smart about it. And then I hope the fact that there is all this education out there helps people who aren't even in the space yet, that going forward will come into this someday and obviously want to try to trade names that are moving crazily and, get into some nearer term options and get out quickly for whatever different reason. I just think this is a much different time period from when the rule was created, and it was time for it to go.
Yeah. And to your point, like 20 years ago, the technology that brokerage firms had to use to manage risk of other accounts was not even close to what you have now. Like now, a lot of it is checks and balances, automated things. Like brokerages know if you take on a ton of risk and you're near expiration, like brokerages know the result or the potential result of something like that. So I think going forward, it's going to be great. And to your point of risk management, like it was always the belief that from the tastylive and tastytrade founders that like you shouldn't be disallowed to remove risk if you want to take risk off. And that was kind of the situation that we ran into a lot. Like we had questions all the time of people saying they had profitable trades, but they couldn't close it because they would be put in PDT. So we had to like come up with these synthetic closings, like creating a box spread or a 1-day calendar. So it was wild, but much more simple now. But again, the rules of the game or the guidelines of the game don't change. Like I don't think this will create a lot of overtrading for a lot of people, because if you're trying to just like take a little bit of a little chunk out of the market, like let's say you're doing an iron condor in the morning, you close it 2 hours later, something like that. It's a pretty popular strategy. Now you can do that and you don't have to worry about PDT. So yeah.
And there's a lot of people I know that, well, I don't know, but I'm aware of that there were a lot of people who were gaming the system such that they were putting money in multiple accounts to avoid PDT issues. At one account that they put, one place that they put money in, and that account, had a PDT violation and was frozen, they would just move to other accounts or put money in other accounts. Hopefully this kind of reduces that as well.
Yeah, totally. And one more thing is that if you have a cash account, these rule changes don't affect you. So nothing changes there. There were a lot of people that may have left a margin account because they were in PDT purgatory, and they opened a cash account to continue trading. So just know that these rule changes and the new framework will be for margin accounts. So if you're looking for more flexibility from a strategic standpoint specifically, because cash accounts, you can only do a limited number of things. Margin accounts, even with a small margin account, you can do a lot more strategies. And now you have the new framework. So just something to call out there, that cash accounts are basically the same. And all these changes are going to be affecting margin accounts.
It's good times, man. It's fantastic times.
It's going to be glorious. But yeah, we've been putting out a ton of content on the YouTube channel as well as tastylive.com on the News and Insights tab. So definitely check that out. If you're looking for more written content, like more long form written content, we have that on the News and Insights tab. I'll put a link in the YouTube chat for that right now, just so that you're ready to go on Thursday, June 4th, next week.
Woohoo!
Yeah.
It's
going to be crazy. Yeah, man. But yeah,
I think... Don't we have a term for it? Or what are we calling it? Trader Liberation Day? Trader Appreciation Day?
Trader Independence Day.
Trader Independence Day.
Trader Independence Day. So we also have a landing page for tastytrade.com. I'll put that in the YouTube chat as well. But yeah, tastytrade.com/June 4, Trader Independence Day. And that is, it's got a little countdown, a little counter there. Love to see it. But yeah, there's a video there. There's some more written content. And yeah, anywhere you look, you can find more information on it. But from my trading standpoint, I think it will. I don't think I was ever really in PDT because I was cognizant of it, and I knew that with the rule, instead of doing like morning trades and closing it in the afternoon, I was just placing trades on the close to open in the morning. But the problem with that is, or the potential problem with that is, you have gap risk. So if I'm placing an SPX trade on Thursday night to try and close Friday morning, and while SPX is closed on Thursday night, something happens, that can move the markets and I don't have the ability to manage it. So just the fact that now you can trade intraday and manage risk intraday is going to be a game changer. So I think for me, I might stop doing the overnight trades to close in the morning, which is what I was doing to avoid PDT. So yeah, I think that's going to be the biggest change for me. Do you foresee anything changing for you?
Changing? I might actually. I've actually chilled out on trading a lot of near-term stuff. I really don't trade it as much, but I might do it more a little bit every now and again, just depending on the situation. I mean, there's some days where, you have a feeling that the market is, say we're up like 30 handles, and I do this a lot. We've been together quite a bit now, so you hear me talk about like how I feel about the market. And so like it could be a day where the market's up 30 and I feel like this market's about to run even more. It's gonna say we're at I don't even know what the hell we are, 74. Where the hell are we right now? It's hard to keep up.
75.88.
75.88, right? And so say we're like at 75.88, I'm like, oh my God, this market's about to get to 7,600. We're about to rip even more. Like it feels like that. And I might put on a 0 DTE, 1 day call to buy, right? And typically I would have just held that. I'm just like, I'm going to buy this call. Say it's SPX. This call is going to cost, $3, $4. And you know what? In the past, I would wait till that call was cheap enough where I feel good about it. I would wait till it's less than $3. Now I'm willing to pay $3 to $4 for that call, knowing that I could close it out at 2 during the day because I'm not as worried. Whereas before, I basically would just pick a number that I'd be okay losing. If it's $200, $250, usually along those lines, nothing crazy. Now maybe I'll pay $5 for that intraday risk and I'll close it out for that $250 loss now because I can do that and I'm not worried about it. So it'll change it in that way, maybe.
Yeah, agreed. And I think from a holistic market standpoint, again, I think there will be even more participation in near-term options contracts for a number of different products. I mean, a lot of products, we already have SPX with basically, 0-day expirations everywhere. But I think this will open up a new world where your Apples, which are like Monday, Wednesday, Friday, those will probably have 0 days now, every single day. Microsoft,
that's a good point. As you mentioned that, names like this, people will definitely trade more intraday now, or SPY, to be honest with you. I mean, let's just be real. Like, for the last several years, and I know this because I worked at SIBO, SIBO's job was to try and get people to trade SPX more than SPY. Well, now people are probably going to go back to trading SPY a little bit more because you can get in and out. And again, it's 10 times smaller. So there's going to be, that's why they created XSP, honestly. This is literally why they created XSP, because they wanted people to be able to trade something on the order of SPY. And it was index, it's cash settled because it's an index. Now people can just trade in and out. So it probably kind of, puts a little dampening on them a little bit. But now you can trade these in and out intraday. Names like this, we're not necessarily worried about assignment risk and things like that.
Yeah. And I think with these products like the Mag 7 stocks specifically, the Monday, Wednesday, Friday expirations will likely go to 0 day, 1 day in between everything. And really, that is an effect of liquidity. Like we talk about this all the time, where I don't trade products that don't have weekly options. That's simply because they don't have enough liquidity in the options market to open weekly options. So now you're going to have probably 0 day expirations for all the Mag 7 stocks, maybe a little bit more. And all of these stocks should be even more liquid from a bid-ask standpoint too, because that's what we saw. I remember IBIT was a good example. IBIT is extremely liquid now. You've basically got penny-wide markets anywhere you look. But when IBIT first opened, it wasn't as liquid. But we knew that once people started to learn that this was a proxy for Bitcoin and it was a way to get granular in terms of risk size and dynamic delta in terms of trading options with it, we knew that it was going to be super liquid. So I think all of these changes are going to create much more trading volume every single day, which means much more liquidity and more narrow bid-ask spreads. This will be an era where this will probably be the most liquid market we've ever seen.
Yeah.
It's got to be the most liquid market we've ever seen.
Yeah, for sure. And to be honest, at some point, there will be serious exit liquidity when the market does have down days, which it will again. We'll have some days where the market eventually fades really hard and, we're down to 1% or 2% days. I know it seems impossible, but it will happen again at some point.
Yeah. Yeah. The more participation, the more the human effect can really push and pull the markets. But yeah, it's going to be crazy. And I can't wait. It's going to be fun.
I know it's amazing that these Monday, Wednesday, Friday expirations or whatever that have been created now at this time. It's almost like they knew it was on the way. It's almost like they knew.
Yeah. Oh, they knew. They knew. But yeah, last but not least, shout out to the trade desk. We have plenty of hardworking men and women on the trade desk at Tasty Trade, and they are all elated about this change because, as you can imagine, people that might not even know what pattern day trading is, maybe they're new to the game, they get put in pattern day trading jail and they're like, what is this? Explain this to me. And then they're upset because they can't manage their risk and trade and place their trade. So the trade desk representatives at Tasty and Beyond, I'm sure, will love when this is put in place because, again, it's just a more seamless, modernized rule system. And you don't have to do anything on June 4th when it takes effect. We have all the technology in place already. We just pull a switch, flip a button, whatever you want to think of it as, and the new framework will be put in place on the Tasty platform, and we'll be ready to go day one. That's another thing. We will be ready to go day one, but all other brokers have all the way until like October of 2027 to implement this. So I know for a fact that there are a handful of other brokers that will not be ready on day one. Some will be a couple weeks later, some will be a couple months later, but just know that we are here for you and we'll be ready day one.
Yeah, ready to go, man. Mm-hmm. I mean, basically, people just have to monitor their buying power, right? I mean, in this situation, I mean, that's just one of those things, staying on top of that, risk management.
Yeah, and we talk about that all the time. Like, if you're trading in the way that we trade, like it's not gonna change anything other than the fact that you have the ability to manage risk whenever you want. Because we talk about all the time, like, don't use your whole account in buying power. Keep 50% in cash or somewhere around there, especially in a low vol environment like this. So if you're keeping 50 to 25% of your account in cash, like, you'll be totally fine in terms of staying afloat in options buying power. Being positive, especially with the markets moving around if they do, because when you're trading undefined risk options, buying power is dynamic, and you have to take that into account when you're trading. But yeah,
I haven't done many day trades at all in recent times. Actually, the one that I can think of just happened most recently. The other day when I traded out of my year-long strangle into another strangle, and I still did it in the same month. I did it in June, and then I was like, wait a minute. I was indecisive. I was like, wait, you know what? I should probably move this further out, and then I moved it out to July. That's the most recent time I've done a day trade, and that was further out of it. I mean, I really don't do many at all more recently.
Yeah.
Oddly enough, you would think I would be doing more considering the way the market's been trading, but I just hadn't.
Yeah, I hear you. But yeah, Griffin asking in the YouTube chat, if you want to join us on the YouTube channel, the chat is popping off. Just go to Tasty Live. We're streaming live there. But could the desk override the PDT restriction and execute the trade? So if you're putting PDT, you can get like a one lifetime removal of it. But then if you did it again, you would be locked out. So no, the desk couldn't do anything. It's a FINRA SEC restriction. So the people on the desk are fully licensed and they don't have the ability to do that. They can't override the FINRA rule ultimately. So no, it was just a rule that was in place. And once you had hit it a couple of times, there's really nothing you can do. But again, in less than a week, all that is going away.
I mean, it's kind of like, opening up the jail. It's like opening up Attica and letting everybody out.
What happens if you do 4 day trades on June 3rd? I actually think people will do that. I think people will try and stick it to them, or whatever, however you want to call it. But yeah, so literally, if you do 4 day trades on June 3rd and you're put in PDT, it will just go away on the next day. So if you want to have some fun, I don't know if that is fun for you. Maybe it is. But technically, yeah, you can do that because, again, June 4th, the old framework goes away, the new framework is implemented, and whatever rules applied pre-June 4th will no longer apply to June 4th in margin accounts. That's the key. If you're in a cash account doing stuff like that,
Cool.
there is still like the settlement of funds. What is that? Good faith violation for cash accounts. So yeah, but margin accounts will just make the shift, and you'll be ready to go.
Yeah, what is settlement now? Is settlement T+1? I know they changed it, right? Settlement is T+1? Yeah.
Yeah, T+1.
US and equities bonds T+1. It used to be T+3. That was, God.
It was a long time.
That
But
was
yeah,
another rule that's changed in the last several. I mean, that was a very old rule that changed a couple of years ago.
Yeah, and that's what I think in terms of crypto use case. Like, stablecoin is by far the use case, because like even now, using T+1 and like using banks, like if you're using whatever Venmo or a Cash App or whatever, unless you're using the wire transfer like instant and paying a fee, you can't get your capital in and out efficiently. But I've deposited funds, like I've seen the market move on Sunday. I've deposited funds to my account using stablecoin on Tasty through PayPal specifically for me, because it's just easy. But I've deposited funds and used it to trade immediately. So that's the
We still don't
speed at
have
which
that,
things
right?
are going.
We still don't have that for equities, though, right? I don't think.
What?
I mean, you can, like, if you wire money, I mean, if you put money in an account, can you trade like options right away?
Yeah. Well, if it's
Trade desk question.
yeah, if it is, it depends
Wired?
on how you bring it in. Yeah, if it's
like
ACH,
wired, right?
if it's a wire, I think it's instant. But if it's
Instant.
ACH, I think you wait.
You have to
but
wait.
you do get a certain level of instant buying power. But yeah,
Yeah, that's right.
But yeah,
So see, that's the next
instant.
thing to be able to move.
Stablecoin's immediately available. So that's the nice thing. Like you can take money out and put it in, and it's immediately available with stablecoin.
That's the next thing, guys.
Yeah,
It's the next thing. Because yeah, this the T+3 settlement just changed 2 years ago, and now PDT is changing. I mean, it's amazing how efficient markets are becoming more and more.
yeah. Brandon with good call out. Seems like we are moving towards zero settlement, instant transfers in and out. But will brokerages actually have real time funds? My transfers are not real time. All the framework will be like, that's where the world is going. The world is becoming instant. That's where I really think like DraftKings, not to get off topic, but DraftKings has always been the leader in that. Like if you have money on DraftKings and you take it out, before you have the time to even open up your account, it's in your account.
Yeah,
where other
true.
places it takes a day. So it's like for me, I want that instant. Like that's what I think the future is, and I think that's what everyone should get. Like you shouldn't have to wait to get your money or to trade your money if you're depositing. But
Yeah,
either way.
But things like DraftKings, FanDuel, those not necessarily like any day trading. I mean, it's hard. Like once you get in that bet, you're like probably getting out for a loss for sure. It's not like you can get out for a scratch most times.
yeah, that's true. Like parlay, like cashing out parlays, yeah, you can't do that. They're always giving you
Robbing
the
you.
short end of the stick. Yeah, don't do
Because
that.
their markets are wide. See, that's
Yeah.
the one thing that we don't see, but their markets are wide. They're making money immediately as soon as you place that bet.
Yeah. But if you do fantasy stuff or whatever, the point is like you get your cash immediately in your checking account
Yes.
if you withdraw, which is nice.
Yeah.
All right. It's 8 a.m. We have a fun little market measures for you coming right up. Extremely short-term jade lizards. So stay tuned. We'll be back in about 90 seconds. You're watching Tasty Live.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. Number 1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University. Number 30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. Number 6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign. Number 18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Jamal, and we've got a market measures for you. Extremely short-term jade lizards. And we were joking earlier that this has to be a good segment because it's a bullish trade, and the market goes up every single day, it appears.
Yeah, right? I mean, unless you did this in some software names over the last couple of weeks before that. Yeah, everything else has just been up, up, up.
Yeah, it's been a wild one, that is for sure. But yeah, before we get into the segment, E-minis, NASDAQ, E-minis up 10 now, NASDAQ up 50. Is this the new up 10, up 20 every day? Like this is the slow grind of the low VIX environment we're in? We'll see. But Dell up over 100 points after earnings. what an absolutely insane move. This calendar spread we're in is probably going to be a full loser, but we'll see. Yeah, I mean, it has to be because it's now 60
that one
points
will
of
be.
money.
I got the 400 as well. I think that might end up being a loser as well.
I'm interested to see what the 400 looks like because you're close enough.
Yeah,
maybe. And with all the extrinsic value around the 420 will still be pretty decent. So maybe you'll be okay with the 400.
If it hangs around 420, it might be all right. We'll see.
Yeah. But yes, let's dive into it. We've got a handful of slides for you. Extremely short-term jade lizards. Let's get into it on the first slide. So, classic jade lizard setup pairs a short call spread with a naked short put, with the credit exceeding the width of the call spread and eliminating all risk to the upside. So, we do this sometimes, but we do this a lot in terms of just like, it's kind of like a risk reversal, right? So we do short put spreads to finance an out of the money long call spread for a small credit. Same kind of idea here with the jade lizard. If you're selling a put for $2 and then you sell a 3-point wide call spread for $1.50, your net credit received is your put of $2 plus your credit spread of $1.50, which equals $3.50. Your call spread's only $3 wide, and you have a net credit of $3.50. So that tells you that even if your call spread expires in the money, you would have a $300 loss on the call spread, but you collected $3.50 up front, resulting in a 50-cent profit in that situation. So in short-term contracts, the buying power requirement on a naked short put becomes prohibitive. So short-term jade lizards swap for a wide put spread, taking in sufficient credits to retain the upside protection, but technically as a skewed iron condor. So kind of getting into that realm of, hey, maybe we don't sell just the short put, maybe we sell a wider spread to eliminate that buying power requirement or reduce the buying power requirement on the naked put itself. So exploring a range of approaches to trading these jade lizards, beginning at 7 days to expiration, finding strong and consistent results across a wide range of parameters. We'll take a look at a bunch of different results, but a week out is short in terms of time by most standards, but 0 and 1 day traders might reasonably ask, why wait at all? Today we'll test the fastest jade lizards available, and it's going to be great. Moving on to the next slide here, the study. Using 3 years of data in 0 day till expiration SPX options collected every 10 minutes, considering the results from selling short-term jade lizards either at the market open on the day of expiration or 15 minutes before the market closes the day before. So this is, again, what I was talking about. Having the flexibility with the new rules that are going to be put in place with being able to not take overnight risk and execute these right on the open and then close them later in the day instead of having to hold the overnight risk to avoid PDT stuff. So it'll be interesting to see which one benefited the most in this study at least. But following previous lessons, each structure was placed as far out of the money as it could be and still reliably collected enough credit to eliminate all upside risk, resulting in 0 day $20 wide and $30 wide puts, $5 wide calls, and $10 wide call spreads. 1 day, so at pre-close going into the morning, 1 day $20 wide puts and $30 wide puts with $5 and $10 wide call spreads. So ultimately just creating situations where you eliminate all risk to the upside, even if it's just by a penny, and we'll examine profitability and trade durations resulting from closing winners at a variety of profit targets, and take a look at some highlights of previous 7-day research presented for comparison. And then, of course, all trades are executed or assumed to be executed at mid-price, and all times are Central Standard Time.
My biggest question on this would be, would you be able to get enough credit to offset the upside risk on these if you're going so near term? That would be my biggest wonder. Maybe possible on SPX, but I'd be curious.
Yeah, so I think that's that's why these spreads are so close to the market. So like when you're looking at the call spread, some of these call spreads are like straight up at the money. Where a more long-term Jade Lizard, you have the freedom to go further out of the money, which gives you more profit potential because you have your short put ability to lose a lot more value. But it's all relative anyways, because even if your short put is closer to the market price, if you get a small rally with 1 day to go, that short put's going to lose a ton of value too. So all interesting. But here's the first one. So looking at 0 days to go, a $20 wide put spreads, like a synthetic short put, and a $5 wide call credit spread. Winners closed at 10% of max profit, 93% win rate. Winners closed at 25% max profit. You have a smaller win rate because you're waiting longer, 88%. Winners closed at 50% of max profit, 84%, 75%, 83% win rate, and then no management, 82%. So looking at these average trade P&Ls, it is interesting that your greatest average P&L per trade was closing at 75%. And that's way more than no management. So we talk about this all the time. Like, people are asking us, I have this trade on, it's at 80% of max profit, and I only have a couple hours left. Can I just leave it on? And it's like, yes, you could leave it on technically, but the more you put yourself in that scenario, the more you're going to have a reversal in the market, or at least open up the opportunity for a reversal in the market and that winner turning into a loser, especially with these near-term trades that are really close and concentrated around the opening price. I think it's something to be said. Like, this is clearly the biggest takeaway from this slide for me is closing at 50% or 75%, not letting it go to a full winner, because that no management threshold, like the reason why the average trade P&L is much lower is because there are results where there was a market reversal and you just got decimated.
Yeah, I mean, this is really fascinating when you look at it. Literally, it's saying in the last 19 minutes of the trading day, weird things can happen. That's what I see from this slide.
Yeah, down here, the mean time in the trade, 6 hours and 30 minutes. Simply 19 minutes too long. But it's true. Like the 2 to 3 o'clock hour Central Time, crazy stuff does happen all the time. Yeah. Like you can see a market washout, you can see a market rip higher. In the case of ripping higher, it's not going to hurt these Jade Lizards, but still something to said about that. Let's go to the next slide. We'll take a look at a little bit wider situation. So 0 days to go. 30-point wide synthetic put with the spread there, and then a 10-point wide call spread with an at-the-money call spread. So picking up some more premium with that at-the-money call spread. But again, same kind of thresholds here, 10, 25, 50, 75, no management. Same kind of story. You have the best average P&L per trade with 50 and 75%. Very similar mean time in the trades, which is interesting. So mean time in the trade, if we just look at the 50% to 75, 6 hours and 22 minutes. That's like ultimately bringing it all the way to 2 o'clock and then closing it at 2 o'clock and avoiding that last hour of the trading day. Yeah.
Works.
Average P&L per trade is a little bit better with no management, but still, I think 50 and 75%, the clear winner here. All right, so the next slide, we're going to dive into. What's that?
Is that a negative on the? That's not supposed to be negative, isn't it?
Maybe. Yeah.
I wonder.
I think it might be. We'll see. But yeah, 1 day. Actually, I think this would be a negative. It's got to be.
What?
I think it could be a negative.
Have an 83% win rate with a negative average P&L.
Well, if you have. This is the gap risk I'm talking about. Like you could place this. So the 1 day 20-point wide, 5-point wide call spread. This is placing it at the close or near the close the previous day. There were probably a few results in here.
Yeah, I guess so.
Where you just you just woke up and your put spread was completely in the money and you had a full loss. Where that wouldn't necessarily happen as much if you're opening them on the 0 day in the intraday market, because that gap would have already happened and you would have just placed a new trade with a fresh P&L after that gap. And we know if there is a gap down 50, 60 points, it's possible that that gap was erased during the day, which would have benefited the Jade Lizard. So maybe. I'm just going to assume that the answer is yes, because like winners closing at 10% too. If you're only taking 10% out of this and then you're holding the overnight risk, you're going to have way more loss potential in terms of overall P&L because you're only taking 10% out of it. You know?
The explanation makes sense. I mean, I'm not going to say it doesn't. Looking at these numbers looks like a statistical anomaly, but, you know, whatever.
Well, we'll see on the next couple slides if it's confirmed or not. But yeah, same story here. Closing at 50 to 75% is by far and away the best situation. Okay, yeah, I think we might have been negative because now the one day
plus one, yeah,
plus one. So the 1 day 30-point wide synthetic put spread and then a 10-point wide call spread. Average P&L per trade only $1, closing at 10%. So this situation you want to avoid. Ultimately, setting something up before the market closes, and then closing it the next day for only 10%. You're holding way too much gap risk overnight, and you're not picking up enough profit to offset that. So that's a no-go. That's a big takeaway from this. No-go for overnight holding and only taking 10%. You got to be able to hold it for 50% or 75%. And it really is interesting that the mean time for these most successful trades is closing it right at 2 o'clock or right around 2 o'clock when the market starts to get a little wonky.
Little known fact, these slides were sent to Fenway and used for the basis of getting rid of the PDT rule.
yeah, literally. That'd be hilarious. Extremely short-term Jade Lizard, 7-day to expiration highlights. So I think when you look at all of these strategies holistically, or the best performers side by side, ultimately, when you've got the highest win rate, that's one thing. But average P&L per trade, I think I'm focused more on the average P&L per trade for the winners. Like if I'm doing a trade and I'm executing it every single day, I want the highest average P&L per trade. So that for me, that's closing at 50, 75%. But these other ones closing at 25%, and the wider ones where you're closing at a little bit more narrow or on the morning open, I think it makes sense to consider it. But yeah, these ones are 7-day expiration trades. So these are not the 0-day or 1 day. So just to make that clear, these are more like you're holding this for a whole week. And these are the different thresholds that make the most sense. But again, 25%, like this one here, $97 average P&L per trade, 25% with a wider one. Average mean time in the trade is 4.6 days. So you're basically holding it halfway through the expiration. But this is the one I would choose here, closing at 25%. And again, that is accounting for the gap risk and just making sure that you're making enough to offset your gap risk that will inevitably hit you with at least one of these trades if you're doing this for a whole year.
Yeah.
A couple of takeaways here. 0-day Jade Lizard showed strong promise for traders looking to sell short-term SPX premium, in particular the at-the-money 30-point wide put spread synthetic and the 10-point wide call spread version, with moderate profit taking, producing some of the highest daily returns we have seen. And again, that's because you're picking up a ton of premium and you're closing it at 50 to 75%. You're offsetting a lot of that gap risk. But also, if you're doing the 0-day where you're doing it intraday, still, the more risk you take, the more you can potentially make, of course. The last few minutes of the trading day have been treacherous for short premium. So even though 75% profit targets rarely triggered until shortly before the close, they significantly outperformed no management. And again, that's because you're avoiding the last hour of the trading day where we always see market movement for the most part. And it makes sense. Like that's where the liquidity is, on the open and at the close. Rapid management can't protect you from overnight moves, so the 1-day Jade Lizards performed more poorly with very low profit targets, unlike either the 0-day or 7-day variants. So again, the 0-day variant here is going to be very much in play for June 4th or post June 4th when the PDT rule goes away, because this opens up the opportunity for a lot of accounts. And looking at these, like these are synthetic short puts. They're not naked short puts. So we're looking at 20-point wide, 30-point wide put spreads, which is going to use a buying power of around $1,500, something like that. So that is in play for mid-size accounts for sure. And yeah, that's basically it.
It's a fun little study. It's a good one.
Yeah. Yeah. So again, takeaways are holding overnight risk. If you're going to do it, you got to take 50 to 75% out of the profit if this is a consistent trade, because if you're doing more near term or more narrow profit targets, you're not nearly offsetting your gap risk overnight as much, and it can be a negative trade result over time. That's my big takeaway here, and I would say that's likely the same for Jamal here.
Yep.
That's it. Beautiful. We've got 8 minutes until the bell, so we're going to take a little 90-second break. You're watching Tasty Live. We'll be back in a second.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade
has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's up, everyone? Welcome back to the show. This is the opening bell. We've got about 3 minutes left until this here market opens. Dell up 100 points almost exactly. The first thing I'm going to do, which I always do on these kind of moves, is just look at the 30-day, 45-day calls. Like, what if you bought these calls? How much did they explode to? How much would you have made? That's what my favorite thing to do is.
Well, let's go to June. Go to June. This trade we talked about the other day. God, I don't even remember. Was it the 290 calls? I think they bought for $28. Yeah, they bought those for $28 last Friday.
Who did this?
22nd. It was a big trade. Like 1,100 contracts went up at 28.10, I think. And that's what we did, the signal versus noise.
Perfect.
Yeah.
So they're going to make tons of cash here. Let's load this one up.
Now that I look at it, the open interest is only 680, so it looks like they probably got out of some.
Yeah. I also want to see like this, like for an actual trade, I wouldn't be surprised to see people buying leaps in here, like at 400, like for $5,000 for Jan 2027. I think this could be a popular trade too. So I'm going to throw this up and see what happens. But if you liked the morning content, please like this video. Crank those likes up. We only have 7. We need a lot more than that. So please do us a service here. Like this video if you can. But yeah, a couple minutes left here.
Where are the 450s going to open up in today's expiration?
Today's expiration?
Yeah, if they're under, if like the 440s are under $3, I'm buying one.
Oh, they're going to be
fucking, they're stupid.
He said the F word.
I did. Yeah, sorry. Talking about trading. I'm excited.
This is actually kind of crazy that there's 1.75K people that are in this 17-cent option. But I guess like this is what you're shooting for. If you're trying to turn $1,000 into $1 million, this is one way to do it. Let's actually do that. Let's see.
There was a lot of volume in the upside calls yesterday. I was looking at it last night. I mean, there was a lot of volume that traded in all these upside calls.
Yeah. So this was, let's just say you bought this for 20 cents. 50 of these contracts for 20 cents. That's $1,000, right? Yeah.
Here we go.
Come on. Do something.
Come on.
These markets can't even adjust because the Dell's moving so crazy.
Yeah.
What do we got? The June 290s. That was your initial ask, right?
Yeah. That was a trade we highlighted the other day. It's not even open. They can't even open it.
They're like, I don't know how to open this because it's too.
You can't even open it.
Yeah. But yeah, the Jan 2027, like this is more of a reasonable trade here. Paid $5,000 for a long call. Let's see what these open up at. If they open ever. Maybe they'll just shut it down. Company's over. Company shut down.
They can't even open the options in here. I mean, this rarely happens, but it does happen. Wow.
Yeah, this is wild. We've got NVIDIA flat. Let's see what Microsoft's doing. Microsoft's up $10. Wow. Love to see it. Just love to see it. Catching that bid.
Still flying.
Yeah, I think this is where you could see a real like sizable move here because Microsoft could just rip through this channel here where it's sold off from. Hopefully it does.
Oh, they opened it.
Ooh.
All this upside is so wide.
Okay, so the 290s, you said they bought for, $2,900. That's trading for $12,000 now. So that's a nice trade.
How about it?
If you had been more conservative, the 400 strike leaps, that's actually a disappointing return. $5,000 to, I guess not. I mean, you're playing for a long-term thing. You get a double in a day. But this, you said it exactly, $3. The 450s. Is that what you said? 450s?
Yeah.
So yeah, if I get rid of these other ones, let's see. Get rid of this one. Get rid of June 290. So if you had spent $1,000 on the 450 calls for the 0 day, which is not something I could ever endorse, you would have made
no.
You would have made like what, $15,000? But you're going to lose $1,000 almost every time there. And you better close it out soon because these are also going to go to 0 by the end of the day.
Oh, for sure.
Crazy.
This thing was as high as 451 in the pre-market, like overnight. Got to 451.50. So
it's nutty.
I would not be opposed.
That is nutty.
To doing something.
Should have bought calls. Yeah, I mean that's the.
I wanted to see if it was going to fade. So I didn't want to do anything yet. But
how's your 400 calendar?
The 400 calendar is. Oh wow! I paid $245 for that thing. It's $8.25 right now. I should probably close that, but I'm gonna. You know what? I did a little. Like I did the CRM one a little too early yesterday. That stock ended up fading at the end of the day. This stock is probably going to continue to go higher, but I'm just gonna sit in it. I'm gonna leave it and see what happens.
Yeah, I just closed out of my 350. I thought it was going to be a max loss, but I was able to retain $200.
That's interesting.
At the 350 calendar. And that's probably just because now that the stock price is so high and this implied volatility, like this is a weird scenario where it's possible that the IV actually increased after earnings. Like I think it did. I think it did increase a little bit.
Oh, for sure. No, I'm sure it increased. I'm sure it is. It's not gone down yet. There's no way. Not at this move.
And this 350 call that I owned still has $250 of extrinsic right now because of the stock price increasing 35%. It increases all extrinsic value across the board. So yeah, I'll take that less than max loss all day. There's nothing really you can do other than that because I can't roll the other call into the cycle without paying a debit. So that's all you can really do, people. But yes, Microsoft, we've got this call calendar here, up $700. Love to see it. I'm going to hold on to this and see if we can just capitalize on this going back to 500.
I would love to see this Dell pull back, but a couple of dollars. Like
you got the 7 day?
15. I got the I'm long that 407 day. Okay, back to 419.
Yeah, I mean this could explode if this goes back.
I know
that's.
I kind of want to buy a call, spend a little money and buy a call, and if I lose on it, cool, because it'll pull back and that'll work even better for my 400 calendar. But if it takes off, I don't have to worry about anything. I mean, eventually I'll have to close those two calendars, right? Just because I don't want the risk. But if it takes off, like I feel like it might, then I can just sit in the call. I kind of want to buy like the 440, not the 450. I feel like it could close the day a little over 450. But we'll see. Just watching here for now.
But yeah, Microsoft catching a nice bid here. And ServiceNow, some people in YouTube chat.
Yeah. Oh, ServiceNow. Wow. What about Palantir?
PLTR?
Oh my God. The great software SaaS sell-off might be over, folks. Might be over.
I think it is.
I bought a lead call in Palantir just yesterday in the long-term account.
There you go. Yeah, I mean, this is exactly what we said could happen. Like you wonder, energy products sky high, hardware products sky high, AI stocks sky high, software not sky high. But how does the Nasdaq and the S&P continue higher? The Nasdaq's over 30 grand now. E-minis are right at 7,600. This is how it happens. Like the sector that hasn't performed rises to meet the rest of them, and the rest just chop. Like you're not seeing Nvidia sell off here. You're seeing Nvidia. I mean, down a buck is nothing. this is down 0.5%, and all these other software companies are up 3% or more. So like this is how you get the rotation or additional capital into these products where everything just moons. But yeah, Microsoft up $13 now. Love to see it. Dell fluttering around that 425 mark.
Delling.
Craziness. Circle up $1.
Yeah, it's kind of interesting to see, looking at the major indices, you see Russell 2000 is the only one that's not really moving to the upside and it's down. 10-year yield still sitting at 4.45. Volatility coming in even more here. A big contango between M and N contract. Gold's up, silver is not. You don't really see that too often. That's a little weird. Oil, again, has probably been the story of the week. It's been down quite a bit throughout this week. And, well, Bitcoin is still kind of fluttering in there, kind of hanging in. And, yeah, it's, it's just more of the same from some of the names. Again, it's been, I think software has really been strong this week, but SanDisk, no slowdown, Western Digital, Seagate, those stocks have been insane. Those have really been the ones that have really been going crazy.
Yeah, it's been nuts. And I think we've talked about this before, but like the fact that the crude oil future market is getting out of backwardation, or at least the steepness of the backwardation is dissipating. I think that is the green light for this rest of the market to just continue higher, because we would need a new catalyst to bring the market down at this point, especially with vol futures in a very steep contango. Look at that, more than 2 points now. The M is at 1780. The VIX has to be at the low 15s, mid 15s. We're back in slow and steady to the upside unless things change here.
I mean, what kind of a world do we live in where I'm actually making money on my Palantir and CRM Super Bowl trades? I don't believe it. I literally don't believe it. These things have been so dead in the water for so long.
Yeah.
Man, it's nice to see.
Yeah, Palantir, big move over the last 2 days. 15 points in the last 2 days. CRM even. CRM is shocking to me that this is up, but this is just a sympathy rally, up 4%. Just craziness. And yeah, everything else kind of just chopping around here. We will continue to monitor the situation, but I'm going to have to roll this thing again pretty soon here. The 7,800. I moved this up 200 points, like what, a week ago? And now we're close to being tested again. But
that's wild.
This has been a great trade, and this will be a core position that I have on every single year now. I think we've especially with this market we had a market that was down 20-30%, and then we had a market that ripped higher. And this just proves that if you eliminate upside risk and you just lean a little bit bullish in the S&P 500, you can do well. Even if the market hadn't rallied, we would still be doing fine with this trade because it's collecting premium and it's basically delta neutral. I mean, it's a slightly bullish, but we've been manipulating this thing, and your MNQ position too. We've just been manipulating the strikes to be slightly bullish, kind of neutral, and just picking up the premium along the way. And it's been great.
All right, I closed both the Dell calendars. Closed the one calendar for like a $300 loss, a $350 calendar, but I closed the 400 calendar for like a $700 gain. I mean, are you kidding me? Like, I closed that thing for $9. I don't know if I've ever closed any calendar for $9 that I bought for $2.45.
Dude, it's amazing.
that is incredible. Yeah.
I love it. All right. We're going to take a quick 90-second break. I see those likes got smashed. Thank you so much. I think we got like 150 likes just from calling that out one time. But smash the like button, as always. But we'll be back in about 90 seconds for This Week in Stocks. You're watching Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's up, JC Nation? We are back. It is 8:45. The E-minis are up 25. NASDAQ's up 150. Dell's up a hundo. CRM up 8 points. Palantir up 10 points. Microsoft up 13 points. Everything is up. Even NVIDIA is reversing. We just talked about how NVIDIA is down 0.5%. Now it's up 0.5%. Oh, man. What say you, Jamal? This is crazy.
I say, who would have thought that the market could still be so exciting when VIX is around 16? This is a heck of a market, man. It's amazing.
It's crazy.
You ready to hear about the week?
I am. Please, This week in stocks. Let's dive in.
Let's do it.
Let's do it.
Stocks hit new highs to end May. You know, with all the craziness that has happened more recently, and with myself being out a large part of the last couple of weeks, I kind of forgot it was the end of the month. And, you know, we'll typically see some wild flows at the end of the month, and I think we've definitely seen that this time around. Let's move to the first slide. So stocks hit a new record. Micron and Dell have definitely led the charge. Chips are still flying higher. I feel like every time we get on air, that's the main thing we're talking about. Of course, people are, trying to draw parallels to 2000. I think it's always fascinating. And I think it's kind of a way for people to ground themselves, right? You see something, you wonder if it's repeatable, if it's going to happen again. It's different. I mean, it really is compared to 2000. 2000 was a different time. I wasn't trading then, but I think we're all full aware of how different it was. I mean, it was a time where, the internet was popping off. There were companies that being created that had no revenue, that were just doing crazy stuff. That's not quite the case here. I mean, all we keep hearing about is these build outs for factories, due to AI and the power that's going to be created. And I think it's just completely different time period. But it's hard not to sort of relate them because of the way that these stocks are moving. I mean, I used to hear this all the time about certain names, and I don't remember the stock prices, but I think Qualcomm might have been one of them. Qualcomm might have been a name that was trading, well over $500, $600. I think, I don't remember. Correct me if I'm wrong in the chat or whatever. But there were names that were moving, like you see SanDisk that's moving more recently, up 100 or down 100 in any given day. So I think that's why people are kind of hearkening to that. But it's just a different time period. These companies, there's a lot of money floating around. There is actual money and revenue behind these companies, and you're seeing it on the earnings. So anyway, I just wanted to talk about that. But we had an inflation number this week. PCE ran hottest in nearly 3 years. Crude oil finally below 90, and meaningfully so at this point. It seems as though something is changing here in the landscape of the war. U.S. and Iran traded strikes and ceasefire talks. I mean, how often do you hear that in the same sentence? It's kind of a trip. And the big thing, I think, for me, yesterday, while we were on the floor, there was a big pop in the market and also a pullback in VIX. And I always talk about the alerts that I have. I love having alerts on because I like to see when things change. And usually they'll be coupled, boom, you hit a new high, boom, VIX falls. So we saw VIX fall below 16 at this point. And as we start to hear more about calming of the war headlines, Goldman Sachs apparently lifted their year-end target to 8,000. I mean, that seemed impossible back in March. Not so much anymore.
Yeah. And what's funny is speaking of the regime change and just how things are changing, if you go to a 20-year monthly chart, you can see Micron, Dell, these stocks are just straight up. The gains that Dell specifically has made in this year outweigh all of the gains it's ever had in its entire existence. And Goldman Sachs, year-end target of 8,000, that's actually well within the expected move for SPX. Year-end expected move is up at 84.50 now. So crazy.
Yeah, let's move to the next slide. I think Vecchio has I remember we were doing a Futures Power Hour one day, and I think he bought an 8,000 call spread or something like that. I don't remember. We have to talk to him about it. But yeah, this was maybe a month ago. And hey, we're not that far away. So for the week, look at the indexes here. NASDAQ up 2.2%. Russell up 1.6%, even though it was down somewhat today. S&P 1.2%, and the Dow kind of flat on the week. And we haven't noticed that. Dow's been somewhat flat on the week. As a result of this, you've heard Mike and I both talk about the year-long trades. I'm in NASDAQ, he's in S&P, and we're both in the futures and we've the micros, and we've had to shift them up because of these big moves that we've been having here in these indexes. Something else, man.
It's crazy.
Let's move to the next slide. Talk about the big movers on the week. Now, again, this was yesterday as of the close, but Dell up 38% on the week. Micron 21%, SanDisk 15%. Like I mentioned, I remember, I think it was yesterday, this thing was up $100 after being down the previous day. Been some strong moves in there. The non-movers, CrowdStrike down 3%, which again, it's not a whole lot when you look at the chart more recently. We were looking at that yesterday. Had no idea how much that thing's been mooning more recently. Autodesk down and Dix down. Also had earnings this week. Micron and SanDisk just shy of their record highs. Let's move to the next slide. So this is on the month through yesterday. Micron up 86%, SanDisk, big mover, Seagate, big mover, Western Digital, all three of those I just mentioned when we did the opening bell. Marvell, a bigger mover, 28% on the week. I'm sorry, on the month. Salesforce trying to reverse this trend, but Salesforce has been down. You guys have seen what's been happening in these service names. And as a matter of fact, Snow is one of those where it's just even the reversal yesterday, it's still down 11%. Who knows? Maybe by the end of the day, maybe these things will be positive on the month. But Serviceforce, Adobe, ServiceNow, I'm not sure if FTNT or Zscaler are in that same space, but a lot of service names within here. Zscaler got smoked. It had earnings, I think, too, but it got smoked on the week. So let's move to the next slide. Big takeaway there, memory and storage. I mean, they're just absolutely going nuts. So we talked about that inflation. That was the big macro thing on the week. And again, this is it's kind of crazy to see PCE come in hot, right? Hottest reading in nearly 3 years. Yet this week, one of the big things that's pulled back has been the 10-year yield. That thing was above 4.6%. Now it's in the 4.45 range. So big pullback. Not too many changes, though, I don't think, with the CME FedWatch tool with the expectation for rate hikes. I think there's still a chance that we get a rate hike by the end of the year. Who knows? We'll see. We got a new Fed chair. Who knows if he's going to make a statement or if he's just going to go with the flow, if you know what I mean. But we've been above the Fed target. I know I saw a stat the other day, and I don't remember the exact number, but we've been above the Fed's 2% target for a long time, like probably almost the second longest in history, I think, or something like that.
Yeah, super elevated.
Right? Yeah, it's been a while.
Crazy. But yeah, 37% chance that we get a hike by the end of the year.
There you go. Guess that's not 50, but we'll see.
It's close.
Dell, the story of the last 24 hours, lifted its 2027 sales outlook. The prior outlook was 140 billion, and now we're up at 167 billion. And again, I mean, you have to imagine a lot of this has to do with is related to AI and them in the servers. I mean, people are clamoring for it, man, using it all the time. I know I was at a point where I was barely using the AI stuff, and now I use it a lot more. I don't even just mean for work. I mean, personally now I'm using it pretty regularly. Just it's pretty good. I mean, with the results that you get, nevertheless, I don't think it's eclipsed us, Mike. I don't think it's better trader than us. That's why we have a segment that we do, Jamal versus AI, and we're still finding ways to be a little bit better. As far as strategies, obviously, this thing is scraping the internet all the time and finding all of the information that's out there, a lot of tastylive information when it comes to trading, by the way, and it sees how to create option trades, but does it have the best way of giving the best strategy given certain situations? I don't think so.
I would agree.
Last slide. So Dell popped 38% on the week and even higher now. Again, that was as of last night. It's even higher on AI server demand. The biggest thing that threw me for a loop, ExxonMobil holders are voting to move to Texas. I thought they were already in Texas. I had no idea. Apparently their headquarters is in New Jersey, but they're voting to move to Texas. It would seem to make sense. A lot of people seem to be moving to Texas these days. BP ousted its chairman. That's right. You suck. So there's a lot of going on here now in the oil space, right? Which is wild because we've seen a lot happen in oil more recently, and now you're starting to see some fallout as a result of the oil prices dropping. It's kind of fascinating. Big week ahead. We got ISM, we got JOLTS, we got ADP, of course, the jobs report. So it's the beginning of the month. See what happens there. We'll see if things are turning for the worse in jobs or if they're getting better. And then Fed meets on the 16th and 17th. That's Warsh's first meeting. No cuts in 2026, but we'll see if it happens.
We shall see. Beautiful stuff. Thank you for that. And yeah, I mean, it's been crazy. And this has to be like one of the craziest this week's in stocks that you've done, just to the upside with Dell, Micron, SanDisk. Just these numbers are astronomical. It's absolutely crazy.
I mean, yeah, and it keeps on going. It's wild.
It's nutty. Please like this video if you like this content. We would greatly appreciate it. But yeah, I mean, E-minis up 26, NASDAQ up 200 now. The same names we've been mentioning all day. Dell up 110, Microsoft up 13, NVIDIA turning up, almost up 1% now, up at 215 again. So this is the new way. All tech stocks must go higher, and that's the rule. We don't make the rules. We just follow them.
So yeah.
craziness. But yeah, thanks for tuning in. And we're going to take a little break right now, but we'll be back right at the top of the hour. And we are going to go through your trade ideas. We've got Fast Market, tastylive.com/Fast Market. You can submit them at all times whenever you want. And we go through them every Friday. So I'm excited for it because we asked for some bangers yesterday on last call. Hopefully we got them, and we will execute them. I got plenty of capital on the sides here in this low VIX environment. So yeah, join us in a couple minutes. Thanks for tuning in. Like this video, subscribe if you haven't already, and we'll be back. You're watching Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's up, Tasty Nation? Welcome back to the show. It is 9 a.m. E-minis NASDAQ still up. Nothing's changed. And that's it. The show's over. Markets just go up every day. Just kidding. We have Fast Market for you. One of my favorite segments because it allows us to. It allows us to get out of our own heads and into yours. Sounds weird, but it's true.
It's true.
But yeah, let's just pop in. Let's get right to it. I want to see what the people have for us on today's fine segment of Fast Market. Oh, man. F?
Off.
Ford, huh?
Got it.
Ford. You know what's funny is this was one of my stocks that I had. I have 100 shares of stocks in a number of names.
Mm-hmm.
What do we got? I've got iBit, SMR, Snapchat, and Under Armour. Ford was another one. And Ford, I sold out of it when it was at like 14 or something. I'm going to have to tell Nick that he forced me out too soon because this is getting a little crazy. It's gone from 13 to 17 and a half in 4 days.
I don't know what did they say? Did they say they did something with AI? Like what was going on here? I don't know what makes this stock move anymore.
Well, that's what Todd is trying to get us into from Green Bay. Shout out Green Bay. Great football stadium, great tailgating scene over there. But yeah, Ford. It's Ford, not Tesla with AI. Not bearish, but IVR is at 100. It's too rich to ignore. So the July 15-19 strangle for a 90-cent credit. Interesting. 15-19 strangle. So for these, like I would rather kick this up a little bit. It's up again, another $1 today. But the 15 strike was trading for like 50 cents yesterday. I think if I'm going to do something like this, I'd rather do like the 17-19 or just get rid of the call here just in case this thing really rips up and just do like the 18 strike put instead for $1.50, getting a little bit into synthetic covered call mode here. But this might result in another 100 shares of Ford. What do you think?
Yeah, I mean, what the heck is going on here? I just can't get over the fact that it's up $1. Like, what?
It's crazy.
But yeah, no, I like that idea. He said he's not bearish. That's actually not a bad strangle for $1 and change for a name that's trading $17.
Yeah. Nice return on capital for sure.
Yeah.
Even if you go to like the 16-20 for $1, you're putting up $200 for $1 premium.
Wait, seriously, what's going on here? 54 vol? Like, this is not what Ford trades at. What the hell is going on here?
It's crazy.
Did they say something about AI recently or something?
I think they did.
They must have.
I'd have to
54
look it up.
vol is definitely not what Ford typically trades at. It used to be like, last I remember, it was like in the mid 20s or something. So yeah, that's pretty high.
Craziness. I'm going to sell this put. I'm fine with another 100 shares of Ford. I'll text Nick right after the show and let him know I'm back in.
Back, baby.
Yeah, just in case.
Because it goes far out too. Like, is there like an event coming up on like the 5th June next week or something? There's like 65 vol next week versus
you're right.
July is like 54. They must have like an event coming up.
Maybe
they're announcing a new car.
Potentially. I'm gonna have to look into this because this has been an insane rally. But yeah, I sold the 18 strike put for $1.50. So the reason why I did that is just because if you get one more day like this where it's up $1, this put will lose half of its value and you can just close it. Where the strangle you'd have to manage with the risk on the upside. So in the money short put, slightly in the money short put, synthetic covered call feel in Ford. We'll see what happens. But either way, my break even is down at 16.5. So we shall see. But we're in. Love it.
There you go.
SPX. Last trading day of May, expecting a fairly quiet market, at least in the morning. So classic iron condor with a 25% profit target from Cody in Wichita, Kansas. I can get into this here. Last trading day of May. Oh, okay. So a 0 day. Yeah. Could do that.
Taiwanese sources say Ford announced that they're working on EV batteries.
That would be something. American-made EV batteries. Love to see it. Yeah, I'm going to do, so for this SPX Iron Condor, I'm just going to go to the expected move here. 75.70, 75.65, 76.15, 76.20. I have it working for $2. We'll see if I get filled here. But yeah, I think we could see this market just kind of chop or drift higher a little bit. But yeah, I'll leave it at $2. I'll let you know if I get filled. What else we got here?
On to the next.
ETH A. Bullish from Ben in Nashville.
We always say ETH A, but why don't we just call it Ether?
Ether. It sounds like someone's name with like when I have a lisp a little bit. Ether.
Yeah. Ether, come here. Let me talk to you.
Oh man, we've gone off the rails. Thank God it's Friday.
You know it's gonna be off the rails if I'm on. You know for sure.
Hey.
I don't play by the rules, Mike. You know that. I won't make you do all the work. I'll read one. I'll read this one.
Okay.
Bought some shares today. Since it's a lower price underlying, what would you guys add with options? Well, that's a good question. This one actually has some bid options that you can typically sell.
Yeah, so I already have an 18 strike put, so I'm bullish as well. But if you bought shares, I think you can do a couple of cool things here. So ETH A has call skew still. So like it's at 15. If you look at the 17 strike versus the 13 strike, the 17 strike out of the money call is trading for much more than the 13 strike out of the money put. 2 points out of the money on either side. I think you could do something like a 15-17 ratio spread against your shares. That would give you another $200 of profit potential. Another 100 deltas from 15 to 17 is a way to think about it. And you pay 25 cents to do that. Or you could do like a 16-17 small ratio spread for 20 cents. That gives you another 100 deltas from 16 to 17. Other than that, though, you could just sell a call against your shares.
Yeah.
Not much else to do, right?
No, not really. But I love the idea, actually. I was looking for something in the long-term account. I'm going to buy some shares there. And I don't know, I hadn't thought about it before, but I'm about to buy 100 shares.
There you go. Yeah, I mean, it's down here near the lows of the year. And you got to imagine if the rest of this market continues the way it's trading, Bitcoin and ETH could see a nice bid for sure.
Just to be that guy, I'm going to put it out for $15. I know it's 1502, 1503 right now. Do you ever do that? I'm like that all the time. I'm like, if I get hit there, cool.
Just 15 flat. That's all we need.
That's what I want.
That's all we need. Cool. Love it. So yeah, we're both in it now. I was already in it at 18, so I have a synthetic covered call type position. Okay, now ServiceNow 95-104 strangle in July. Pure neutral trade from Colin in Salt Lake City, Utah. Yeah, this thing's mooning today too.
I mean, I like the idea, but be careful in there. We might be witnessing a big move on the way, just because it's starting at this point.
Yeah. This is another one, like to your exact point. This thing has been at the bottom of the barrel, and in the last week, it's up 20%. Instead of a strangle, and on this one, like, yes, you're neutral from a strike standpoint, but the 95 put is trading for $1.70. The 140 call is trading for $5. This is also because it's skewed now up 11%. But let's just say you were looking to collect like $7. I might just get rid of the call and just sell the put for $7. Like just sell the 110 put or the 115 put and just eliminate that upside risk. Because if this thing continues up 10% every day, you're going to be tested on the call side pretty quickly. You do have the ability to offset it and just shift your strikes higher for a net credit or a zero credit. But I kind of like just selling the put here into this IV increase.
I'd be careful in here. I mean, this could get explosive.
Yeah, especially because
I know this was sent yesterday, so obviously the strikes are different. You wouldn't do the 140 now, but yeah.
Yeah. Right now, you'd probably do the 105, 150 if you were to extrapolate this. That's much more neutral. But yeah, same story. $7. You could just get rid of the call, move your strike up 10 points, and collect the same amount of premium, and have no upside risk. So I kind of like that a little bit better because this is like a sector-wide rally.
Yep.
BSX, super bullish from Andrew in Puerto Rico.
Puerto Rico.
BSX touching 50 supports, selling in July at the money put for a possible dead cat bounce.
Puerto Rico. Oh.
Yeah, I mean, $3 in premium for this thing. $900 in buying power.
Yeah, this actually showed up on a list for me. I was looking the other day as far as names that are oversold. This was one of them, apparently. I see why now.
Yeah, this is actually pre-earnings too. So you're right before the earnings announcement. July 22nd is projected to be the earnings announcement. And you can see the market is pricing in earnings in the August cycle until they open up weeklies, which means you can eventually roll this July into the earnings cycle and pick up a lot more premium. So yeah, I'll do this. 325 for the 50 strike. I'll let it simmer there. See if we get filled. Cool. Next slide, please. Pindodo. We were once reprimanded because we used to call it like doo-doo or something. But someone told us that it is pronounced Pindodo, like door without the R. Pindodo.
I thought it was like Pinduo. I didn't realize that.
Yeah, it's Pindodo. Hopefully that's right, but I'm pretty sure it is because I'll never forget that. Earnings weren't great and the stock got hit. Big Lizard in July with the 85-90 strike. So Big Lizard is just a straddle with a defining risk long call. Brings in about $7 in credit, takes away the upside risk. I haven't traded these stocks in many moons.
What's the ball in here? I mean, man, this thing's gotten rocked recently. Is it just like a whole space? I haven't looked. Yeah, I almost forgot some of the tickers. Baidu, Baba. I haven't looked at them in so long. Stayed away.
Yeah. This thing is interesting.
After the big China trip that just happened more recently, and U.S. relations seem to be melting some. Maybe things are going to be good for a lot of these stocks. It's going to be a lot more participation. Maybe this works.
So yeah, I think you could do this, the 85-90. You have no technical risk to the upside, but you could also collect another $1.50 and do like the 85-95. Because the 85-95, even if the spread goes in the money, the 85-95 call spread is only going to be trading for about $5, and you're collecting $7.65. So from a theoretical standpoint, if you look at the analysis graph and just push this out to like June 15th, you still don't have much upside risk here. Like you can still make a decent profit. But yeah, I hear you. If you're trying to make a rally profit, then yeah, the 85-90 makes a lot of sense. I don't mind it. The buying power is a little heavy though. It's like almost $3,000 for that trade. So I'm going to have to pass on it, but I like the idea for sure. From Sean in Hong Kong. Okay. Close to the source.
Close to the source.
Yeah. Coinbase. Super bullish on Coinbase, keeping it simple with the July 175-190 at the money call spread from Trevor in Boise, Idaho.
What's up, Trevor? You're a citizen.
Trev. Hell yeah. Coinbase. 175-190 at the money call spread in July. All right, so this is going to be a $7 debit. I would rather do a diagonal spread almost always instead of a vertical spread, just because like you're paying $7 here, your max profit's $800, but your theoretical P&L, if you get the rally, like if we just kick it, same thing, kick it to the middle of June, your theoretical P&L on an in the money move is $150. Not too crazy. If you did a diagonal spread instead, where you were long August, short July, or if you were just like short July or long July, short June, we could look at that too. The 185, 195. You're paying a little bit more. You're paying a couple $100 more for a long 185, short 195 call diagonal spread. But when you look at the Theo P&L, if you get that same move up to 190, you're making $500 instead of $170. So you're making, the theoretical standpoint, you're making $400 extra dollars to put up another $300. So I like the diagonal spreads much more. You have more flexibility in terms of management too. You could always roll it into a vertical spread and reduce basis, but that's just me.
I like the general idea of being bullish in Coinbase. I mean, this thing moves around quite a bit, and it's obviously been down as Bitcoin has been down. But as soon as that turns, which at some point it will, this will definitely be one of the names that move. And you've seen flashes of it. There's been times where it's had big days more recently, and it's like but it's also had some fades. But I like the idea.
Yeah, I just got into it. 175, 195, 175, 185 for $10.37.
July versus June.
Yeah, sorry, 185, 195. Long July, short June for $10.37. If you get a rally up to 190, it'll be a $500 winner, but I'd probably close it before then.
I just bought the ETH in my long-term account. There we go.
There you go. 15, flat.
15, baby.
SLV, silver. If the market turns, I want some long exposure in precious metals. July 75 covered call is one idea, or maybe a bullish poor man's covered call for a cheaper entry from Ryan in Austin, Texas. Yeah, I'm bullish on silver. I already have a position on here, but maybe it's something for you, Jamal.
Yeah, I still like the idea. I just closed my short the other day there, and I like the idea of maybe silver bounces back. But what strikes are they looking at?
They're looking at the July 75 covered call or a poor man's covered call alternative.
I would go with the poor man's covered call alternative. I think it's a longer story. I think it's going to be a lot slower grind. And again, things rhyme. They don't necessarily repeat, but I think they rhyme. And by that, I mean, there was a huge move in silver, several years ago, 2011, I think it was. And then you look at the chart, it pulled back strongly and it was kind of dormant for a while. I think you're better off going with a longer term approach here.
Yeah. I just have this pulled up here, but just as an example, you can go all the way out to September. Because IV in here is not that high. Like you can go out to September and buy the 67 call just slightly in the money for $700, and you can sell the 77 call in July for $2. So you can get into a 10-point wide diagonal spread for $500. And same kind of story. If you get that 10-point move to the upside, or even just like a 2-3 point move to the upside, you can make $300 on this trade. If you get silver up at 72.5, the theoretical P&L middle of June, 2 weeks away from here, is $237 on a $5 debit. So I like that for sure. And then you don't have that downside risk in case something crazy happens.
Yeah.
Qualcomm, neutral to slightly bullish, but not by much, selling the July 165, 190 put spread and the 330, 350 call spread for a tiny positive delta from Leo in San Fran.
Stock's been moving quite a bit. I'm short falling here myself, so love the idea. Vol is high, and I think they're smarter than me by going risk defined probably.
165, 190. It's pretty wide. But
on the downside.
But yeah, you're picking up a ton of premium here. On the downside, you've got $3 in premium, and on the upside, you've got $1 in premium. So just keep that in mind. You have way more premium on the downside than the upside. But yeah, $500 over the next 50 days. You just need Qualcomm to not participate in this macro move to the upside, but it already has. So this might be another one where I might just, because you're only collecting $1 on the upside, because the skew is so dramatic here,
right?
I might just get rid of the call spread and shift the put spread up to the 200, 175. That's the same spread width, and you're picking up $5. and you get rid of all your upside risk. So I kind of like that a little bit better. And then if you get tested on the downside, you could just roll the put spread out. But that's just me.
Good call.
Last but not least, Vert from Brett in Tallahassee, Florida. Iron Condor with more room to the upside, going with the 240, 260, 400, 420, about 50 days out.
Vert, BRT.
260.
That's wide. What are you collecting? What do you collect for that?
$5, about 1/3 the width. Classic setup.
Yeah.
With more upside room into this micro sell-off here. But when you look at the range, you got 260 and 400 on the chart here. So bottom of the barrel in terms of where we've traded over the last month, and then above the all-time highs. So I kind of like it. I think it's interesting.
Yeah, what could go wrong?
What could go wrong? In this market, lots could go wrong. But yeah, that's that. Thank you for the submissions. And it looks like we've got almost everything except for Pindodo. Ford, you got into, I got into the put. And Ethe, you got the shares. SPX Iron Condor, I've got that working. BSX, I've got that working. Coinbase, got into that. Yeah, great trade ideas from the people. We appreciate you.
Fantastic.
Fantastico. We're going to take a little break here. Thanks for tuning in. Don't forget to like this video if you haven't already, or subscribe to the channel. But we'll be back with live from the trade desk with Q, see what's going on in that side of the world. And then we'll kick it over to Liz and Jenny in just a little bit. But you're watching Tasty Live. We'll be back in 90 seconds.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
first thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
What's up, TC Nation? Welcome back to the show. Market's still up. Surprise, surprise. We just learned that Costco's down, though. We forgot about that one because we were just blinded by all the tech stocks.
Yeah.
But that's enough out of this discussion. We've got a special guest. Who do we got? Q. That was probably the best one I've done.
There we go. That was a lot better. Fellas, how's it going?
Good, man.
Doing great. How you doing?
Doing well. That's a much deserved applause right there. Well done.
Appreciate it.
Q, which team that out of the game last night? Great game 6, by the way. We had for game 7 in the Western Conference Final. It's going to be awesome. Which team would you rather play?
Spurs.
Worry
for
about
sure.
either one of them?
Spurs.
You would.
Yeah.
Why is that?
Yeah. Well, I want to go against Wemby, and also we beat them in the regular season, beat them in the NBA mid-season tournament.
Oh, the mid-season thing, right? Oh,
yeah,
that's right.
We beat them in that, and if we
already.
can beat them in that, we could beat them in the playoffs too. Beat them in the finals.
Oh boy, that would be something else, man.
Give me Wembanyama. We want it.
You just might get him.
This would be a very watched finals.
Yeah,
I think very heavily watched if the Spurs show up.
Yeah,
for sure.
It's the script if they win. Everyone wins except for the Thunder fans, unfortunately. But it's the script. That's sort of how it has to happen.
SG has been struggling.
Yeah, they've been putting the clamps on him. It's gonna be that game 7 is gonna be great. I can't wait for it tomorrow night.
Yes, very excited.
What do you got for us?
Alrighty. Top 20 symbols going through the system and their IVRs. And for Laura, no broad-based indices or ETFs on the list as well. At number 1, you've got Microsoft with a 55, Palantir 33, Micron 95, Dell 71, NVIDIA 35, SoFi 26, Oracle 83, Tesla 17, Robinhood 50, Now 65, SMCI 81, ASTS 88, Broadcom 70, Intel 72, AMD 85, Costco 60, Meta 30, Apple 32, Amazon 21, and Google 27.
Microsoft leading the way, huh?
Yeah, I will say, a bit of a surprise there. I can't believe Tesla has dropped down all the way to 8. I mean, when everything else goes straight up and Tesla's not moving the same way, I could see how it's not as actively traded.
Wait, can we pull that list back up again? Is every single one of those names a NASDAQ name? Did I see that right?
Ooh, probably.
Every single
is
one.
Costco
I just checked Hood.
in the NASDAQ?
Costco, maybe not. That might be the only one. Thank God, Q. Be the voice of reason here, because that's... oh, no, it is in the NASDAQ, bro. That is in the NASDAQ.
That is actually pretty crazy. Yeah, this is for sure a NASDAQ-driven market. For sure.
Oh, my God. I don't know if that's good.
Yeah.
I don't know what that's good.
Not great.
It's scary. It's not great. Not great, Bob. I don't know. That's
and you've got like the ASTSs of the world, a lot of like the space names with the SpaceX IPO coming up and things like that.
Yeah.
My God.
I'm very excited for this new world we live in here. But yeah, I'm surprised to see Microsoft at the top, especially after Dell. But I guess not many people saw Dell coming, you know?
Bro, that's the other thing. I didn't realize. I mean, this is the first time. Thanks for Q coming on. This is the first time I'm realizing that Microsoft's IVR is 55. I didn't even know that.
Yeah, a lot of these underlyings have high IVRs. What I mean, not one of them is in the 20s, I don't think, or Amazon is the only one that's 21 and SoFi 26. Otherwise, they're all pretty much above that. Or I guess Google too is 27.
To me, this is one of the most fascinating lists that you've brought on the show.
Yeah, it's a interesting market we've got right now. A lot of things are high IV rank.
Absolutely nutty.
Well, so I forgot to mention, Mike. Remember, I said at the top of the show earlier this morning that I put on some currency trades again, and got long dollar around this area. I mean, I feel like at some point, if there is a turn, and again, I mean, when I say reversal, I don't think it's next week. I don't think it's 2 weeks. I think it could be a month or two away. I mean, some point later in the summer. But when it goes down, it's going to go down. It's going to be ugly.
Yeah.
For the time being, it's just, onward and upward.
I mean, yeah, right now, like everything's pointing to up and to the right. But if it does turn, profit taking could happen. The human element could just exacerbate it. But yeah,
just concentration, right? Like, I mean, again, that's what this list is about. There's a lot of concentration in NASDAQ right now. I mean, there just is.
It's crazy.
We can't ignore that.
We just saw it in the list. It's nuts. But Q, thank you very much for joining us. We will let you go.
Of course. Thank you, fellas.
You're busy on the desk, we heard, man.
Have a great weekend. And we hope the Spurs win for you. How about that?
Yeah. Thank you. Yeah, desk is quite busy, so I got to get going. But thank you very much, fellas, for having me on as always.
You got it. Appreciate it. Yeah, we were just talking about Costco. I totally forgot that Costco had earnings, but yeah, down 40 points. I wonder what they could have said. Maybe they're just not invested in AI enough, and the market, the market just sells off anything that doesn't trade or invest in AI. But yeah,
we
kind of
both
weird.
had that calendar. I want to do another, and I definitely want to do another. I just like the idea of having a Costco position, particularly the calendars that we've been doing pretty regularly. I'm going to try to find a way to do another, whether it's the 1100 or 1050 strike. Again, we have both the 1050. I copied a page out of your playbook. Long June. I think you're long June as well. And short the 0 day at the moment. But I'm going to definitely do another calendar. It's just a question of which strike and where.
Yeah. I actually just rolled right now from the 1050 short 0 day that's worthless. I moved it to the 1060 14 day for $1 flat. So
nice.
Just rolled into a 10-point wide diagonal. My basis is 665 now. So if Costco rallies over the next week or two and reverses this move, it'll be a nice trade. But if not, at least I picked up another $1 of premium. But that's the nice thing about these high price stocks is like rolling 1 week out or 2 weeks out still gives you $1 because there's just so much premium around these.
Wait, you moved it to where?
The 14-day 1060. So it's basically a 1 week diagonal, but still a diagonal nonetheless.
Mm-hmm. Oh yeah, look at that.
Mm-hmm. Mm-hmm. But yeah, we got about 25 minutes left until 20 minutes left until we kick it over to Liz and Jenny. So I'm going to pop over to the YouTube chat for the rest of this time and see if the people have any trade ideas for us. Again, like this video, subscribe to the channel if you haven't already. But yeah, let's see. Microsoft's breaking out. Yes, it is for sure. I think it's going to clear that range. It's pushing higher. It's up $15 now, 3.5%. And this little range here is what we're talking about. This liquidation all the way from 490 down to 390. It was a 100-point sell-off in 6 days. Like when you have that kind of velocity, when you get the move in the reversal, you can see it here. It basically started like right near the bottom here. and it's just catapulting through that range that we sold off from initially. I think you could easily see this go all the way back to 460, 470, 480, get back up in this upper range here if this continues.
Yeah, no, it's been real strong. And again, I think this has been one of, besides what's gone on with Dell and the storage names, the real, I would say, big story of the week has been the bounce back in the SaaS space with these software names. I mean, it's been really strong. And we've been saying for a while, there's a couple of areas you want to make your bet in. Always thought Microsoft, Palantir, and CRM, although it's been tough at times, were the names to sort of kind of target, and they've been strong this week. Yeah.
Isn't SpaceX automatically in the NASDAQ when it drops? So it's kind of a weird thing. So like normally, so a company being added to the S&P 500, they have to have certain checkpoints. So they have to be on the market for like a year. They're trying to reduce that. So I think eventually you could see SpaceX added to the S&P 500, but it would be listed on the NASDAQ, SpaceX, for sure. But its inclusion in the NASDAQ 100 is a different story. It'll be listed on the NASDAQ, though. Yeah, I haven't traded Tesla in a bit. Tesla down today.
Yeah, I just still got calendars. Like I said, I got 475. I got the 500, and I got the 525 new as well.
Yeah. Should have bought Dell after Trump said bye, bye, bye. Yeah, I mean, he's the new Nancy Pelosi. He's day trading like 70 times a day. It's absolutely nuts. Oh, man. What else we got? Microsoft created the inverted hammer last monthly candle. Yeah, I would be shocked if Microsoft sold back below 400 at this point.
Yeah, it's on and popping now.
I was just filled, so I posted these to the follow page from the morning show, but I was filled on the SPX 0-day, picked up $2 for the 75.70 put, 76.15 call, 5 points wide there. Ford sold the 18 put, and then Costco made that adjustment there. Market's selling off a little bit. Interesting.
I'm glad you said I forgot to post my closing of my Dell trades. Post. No way.
I'm scrolling through the chat here. Buy to open the FNV put vertical. What is FNV?
FNV? I don't know. What is that?
Franco Nevada Corp. So yeah, this is one where they don't have weekly options expiration, so I'm probably not going to trade it. Shares are also less than 100K.
Like a gold name or something? What is that?
Yeah, I don't know. Yeah, these markets, these are just not tradable markets. So like the June 2026 220-200 put vertical, I don't think this is going to be liquid enough. Yeah, the 220-200, you're dealing with really wide markets here. You've got $1 bid-ask spread here, and you're not really picking up that much for this short put. I might just get rid of it if you're trying to just trade bearish here. But yeah, these markets are tough. Getting in and out, you might give up a lot of your profit potential if this is a winning trade, just because you've got 60-cent wide markets on both sides here. What else we got?
Looks like they're getting out of Dell, selling it off.
What's you got out of your calendar spread, yeah? 400?
Yeah, I'm out of my calendar spread, yeah. I know. What would it be worth now? I don't even look.
$11.
Ooh, lost out on $200.
Yeah, but I don't know. I don't think.
Yeah, I know.
I wouldn't have played for it to continue selling this much.
No.
Is this the end? Is this a Dell blow up? Dell's going to blow up the whole market?
No. It'd be fine.
No, it's probably not going to happen. March.
Not today, anyway.
Not today. Not today. MAR, Marriott International. Love to see it. Buy to open the 380-420 call vertical for $15. July. 380, 420. So I think it's a decent trade. I don't mind it. But again, I would rather just have diagonal spreads in these products. 20-30% IV is super low. You could do like a 390 July, 400 June. I mean, these markets are not great.
No.
Not great.
Wow, this stock is on super highs.
Crazy. People are traveling. I do like Marriott. Never had a problem with Marriott.
No, I'm a Hilton guy.
There you go.
HLT, is that what it is? Yeah, wow, these are all on highs. How about it?
Yeah, I think these markets are unfortunately just a little bit too wide for a trade here. I think maybe wait for earnings. Looks like earnings are going to be in the middle of summer. E-minis and NASDAQ selling off here. E-minis only up 3, NASDAQ only up 20. Doesn't feel right. Feels impossible. Microsoft, call diagonal or crab for a continuation of the pump. Good question. So it's up $15 now. I would lean towards, normally I would say a diagonal spread, but I would place a diagonal spread, and I have done diagonal spreads when the market was down. So I kind of like the idea of a crab trade here because the June IV is getting pumped a lot into this big move here. And you could do like a June, July crab trade where you are collecting a lot more premium into this rally. So like a 450, 475, 500, where you are paying $1,700 for your long call in July, but you're reducing cost basis all the way down to $11 with the sale of the 475, 500. You could also consider moving this in, like a 450, 460, 470, or a 450, 470, 490 for $10, 20 points wide for $10. I kind of like that. I think I like the 475 the most. $11 for a 15-point wide, 25-point wide. $11 for a 25-point wide feels like the best bang for your buck here.
Mm-hmm.
And if you go to the analysis tab, and this is evaluating at June 15th, which is a Monday, you can see here you got plenty of profit potential to the upside if you get this rally through this channel. So let's just look at Microsoft here. You're trying to get back to like 475. This would be like the middle of this sell-off here. So 475 would give you $1,100 in profit with no change to IV, and kicked all the way out to June with just 1 week left on these shorts. So even if this happens next week, like if you get a really big rally next week, Thursday, June 4th, PDT elimination day, you can still make $500 on this trade to the upside. So yeah, I kind of like the crab trade just into that IV pump. What do you think?
Yeah, no, that's a great one, man. Again, with the vol being up there, I didn't realize it was 55 IVR, but with the vol being up there, I think that's a great way to take advantage of it. Just looking at a monthly chart on this, I mean, Microsoft sold off from November. It sold off for 5 months in a row, and now the last 2 months it's starting to bounce back. So it has room.
Market selling off because I followed your SPX trade. Market gods don't let me win in SPX zero-day trades. Yeah, I mean, we've had our wins and our losses here with these SPX trades, but I gotta put in a GTC order here on this one. Let's do 50% close at profit for $1. So buying this back for $1 yields us $100. I'm just gonna kick that over. From our segment this morning, very illuminating, the near-term Jade Lizards, same story with SPX. Like there's just no reason to hold it for more than 50, 75% profit, because at that 2 to 3 o'clock hour, you can see the markets move and you could go in the money even if you're out of the money. So I think we're okay there. Okay, though. We got the 75.70 put for today. And I think we'll be okay.
Yeah.
This market could rally. Now it's actually better. I would rather have the put be in the money than the call be in the money. Because if the call's in the money, that means the market's just ripping higher. Nothing can stop it. But at least with this trade, if we just chop around here, you could see a afternoon rally. And if that happens, if we get to like 75.80 or 75.90, this thing will be 50%. We can close it.
Did we touch 7,600 on SPX this morning? Is that what happened? 75.99.38, by the way. Wow.
They said no. Smash.
Was that it? Was that it? Is it over? Is it a wrap?
Is it a wrap? I don't know. E-minis flat, down $1.50, NASDAQ down 13. I wish I wouldn't have put the Costco trade on. Yeah. I have a hammer here for the next time. I'll smash my pinky toe instead. Yeah, that could work. Masochist over there.
Yeah, really.
But yeah, Costco, at the very least, like Costco is down 40 points right now, but it's a $1,000 product. Like it could move 40 points tomorrow. And by tomorrow, I mean Monday. But yeah, these calendars have worked out well for us in Costco. We've done okay with these things. Like the last one we did, that was a $600 winner. This one's a $500 loss right now. But yeah, unfortunate that we are seeing a reversal of this.
Yeah, I really didn't look at what they said in their earnings report, but I guess they posted mixed results.
Yeah, but all I know is if inflation continues to stay high, a product like Costco is going to benefit from that. Like Costco, Walmart, McDonald's, like those are the three that I think of when we are in super high inflation. Things are expensive.
Yeah, they missed on EPS by a nickel. I mean, it's nothing crazy.
Yeah. For sure. How do you decide
I'm just curious. How do they do the gas thing? Like, do they?
It's a good question.
You know what I mean?
They must just buy like massive quantities and then just mark it down because they don't make a lot of money on the products. They make their money on the memberships.
Yeah,
right.
True.
So it's like, so I guess they're just deploying the same sort of methodology there with gas. Like they're giving you gas close to cost. It's still a markup, but not nearly as much of a markup as your everyday gas station. Last question here before we send it off. How do you decide between a diagonal and a crab trade? So a diagonal, for me, if a market's selling off, I'm almost always going to go with a diagonal because a diagonal does not have risk to the upside. So like if you were to get into a diagonal in Microsoft now, just throwing up like the 450, 475 in July and isolating this, you've got no risk to the upside because you've got a 25 point wide diagonal spread here that you're paying $13 for. So even if Microsoft just rips much higher, you're going to make money on this trade. But you're still paying $1,300 for it compared to a crab trade where you're throwing out another call spread. Like that's all you're doing. You're just throwing out an extra call spread to reduce cost basis a little bit by $200, which is decent. A crab trade is going to have upside risk though, because you have another 25 point wide call spread on now. So if Microsoft just goes up 15 points every single day, you can start to take heat. But the good news is, like, even if we look at today, like you would still make money on this trade. Friday is the 29th. If we go to like Wednesday of next week, you're still going to make money on this trade if Microsoft rallies. But if you hold it, you start to take losses. So for a regular trade that is not earnings based, I think you can do either one, whichever one you're comfortable with. I lean more towards diagonal spreads for earnings just because I don't want that gap risk. Like in Dell, if you did a crab trade, you would have a max loss on your hands, where if you did a diagonal for a little bit more, you would have had a max profit. So just that differentiation with the gap risk overnight, I almost always go with diagonal spreads. But for regular trades, I like crab trades, especially into rallies if you're playing for like a continuation, because again, this premium in June has really gone up. It's doubled in price in June, and that's because of this rally here.
Yeah, I to add to that, I would say it's a name. If there's a name that I think has the ability to just keep running or make a big move, then I'm going to go with a diagonal, especially if the vol is cheaper as well. Once the vol starts to get a little high, it's not to say, obviously, it might potentially move more, but I think you'll probably get maybe a little bit better pricing on the crab if you, in a situation where the vol's a little bit higher. So I guess it boils down to how much I think the name is going to move. I mean, that'll determine whether I go with that's usually when I'll go with a diagonal. If I think it's going to really have a big move, in particular, I mean, we're both talking essentially about upside. Obviously, you can apply the same thing to downside. But if you're playing something where you think it has a chance to have a big move, another continuation like in Microsoft, I like the idea of a diagonal.
Yeah, I like it. It is almost that time, but real quick recap for trades this morning. Ultimately, got into a bunch of stuff, closed out of Dell. Couldn't believe that I was able to reduce or keep $200 instead of realizing max loss there, but still a losing trade in the calendar spread. Same story with like crab versus diagonal. If I had done a micro diagonal spread in Dell, it would have been a max loss, but because I did a calendar, it's a loser. Ford short put at the 18 strike, Coinbase diagonal spread 185, 195 in coin. SPX the 0 day. Hopefully we're catching a rally now, so we're looking okay. Costco moved that calendar spread into a 10-point wide diagonal, collected $1 for that, and that was it.
Yeah, did the same deal in that Costco for that calendar and long June against it. And Dell just closed out calendar spreads. Yeah, I mean, hindsight's 2020. I could have held on to that calendar spread for a little longer, but look, I bought that 400 calendar spread for $2.45, I think it was. To close it for $9 is fine with me.
Yeah, it's wild. But yeah, that's it for us. Thanks for tuning in. SPX rest of the day, 23 points. It's actually pretty decent, all things considered. But next week, less than 100 points. We are in the bottom of the barrel of volatility right now. So we shouldn't expect too much craziness to happen unless something happens globally or something changes to change that. But yeah, it's been a wild week. I can't believe some of the moves that these names have had. Microsoft now up almost 17. Huge
market bounce right back. Look at that.
Yeah, absolutely nuts. But yeah, hopefully you've been looking to buy some of these dips in some of these names. Specifically, Microsoft's been a really good one, but still pretty low implied volatility, all things considered. We're seeing a 16-point move today, 24-point move implied for the next 20 days. So big realized volatility in Microsoft. Hopefully it's benefiting you. But yeah, we're going to kick this show over to Liz and Jenny now. Thanks so much for tuning in. Again, like this video, subscribe to the Tasty Live channel. If you want to reach out to us on Twitter, you can certainly do that. I'm at Trader Mikey B. Jamal is at Jamal Chandler. Have a great weekend, everyone. We'll see you same time, same place on Monday. Peace.
Bye.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix. But you know what he did? And we've got those cards with us and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card and I am no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on.
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. The beautiful brunette to the left of me is Jenny Andrews. Happy Friday! Happy party weekend. You got a lot of stuff going on this weekend.
Oh my gosh, it's a busy weekend. Busy weekend. We have Logan's graduation party. I sold the boat, so we're doing the boat delivery. It's a jam-packed weekend. Plus, we have a graduation party tomorrow. So
yeah,
I think when Monday comes, I don't know what shape we're gonna be like when Monday comes.
No, Jenny, this is the story of my life, though. Like every weekend, Friday, Saturday, Sunday, for the summer, I either have a 50th birthday party or a graduation party.
I know.
It's crazy. I love it. Hey, I wouldn't change it for the world.
It's fun. It's gonna be a fun summer, and we've got beautiful weather, and so I'm just glad. I'm relieved we have beautiful weather for the graduation party.
And the chat's gonna love this, so hit a like if you like this comment. But my only thing is I don't know what to wear to Logan's graduation party. I got 3 dresses lined up. Hey, but you know what's happening next week, Jenny? Laura, can we pull up the PDT elimination on June 4th?
This is so Monday's June 1st. By the end of next week, what is it, a Thursday? It's June 4th. Thursday.
So June 4th is a Thursday. So a Wednesday night, apparently, it goes into effect. And then Thursday, woo, wheels off.
Doesn't matter. On and off, trade all day. Put them on, take them off. You don't like the trade you've got now, change it. Doesn't matter. PDT is changing.
You know what? And I'm very happy too. Even fat-fingered errors. You can't get out of you play something, you got to stick with it. What the heck? Like when people are learning, there's a lot of fat finger errors.
I know. And you have to be pretty savvy to know how to like offset something. Because I remember someone saying, geez, I put this in, I didn't mean to. And we're like, well, then if you did this put spread, do this call spread, it'll kind of take the risk off, mitigate the trade, but you still have positions on.
Yeah, right.
So it's a good thing that it's gone. Now JD can just take the money off his put spreads. He doesn't have to turn them into butterflies if he doesn't want to.
Well, because I've been turning them into butterflies, so he can actually just with the closing order.
Yeah, like you can be hands off.
Hands free, hands swinging. Okay, so you know what though, Jenny? This market's kind of crazy, right? So we had 2 big earnings yesterday. We did not trade Dell. We did trade Costco. Womp, womp, womp. But Dell was up. Man. Dell is huge. And Dell was up huge. Costco, not so much.
I know. So Dell is up $92. It was up even more than that. Let's see what the high is today. Okay. High today, 429. So even $20 higher.
Yeah, this was bonkers. This is a crazy move. But it's lifted a bunch of the other stocks that are in the same sphere as well. You know, you got your Palantirs. I think Microsoft was up. I think they're all still up right now.
Yeah, I know Microsoft was up today.
Yeah.
Microsoft up $17.
And our Costco trade, I know we were looking at, you know, things with Kai, and we got that from the trade, and then we made it our own and just sold a small $5 wide put spread. Wah, wah, wah.
I know. Let me see. Let's see. What did
Oh, it's bad.
So it's, this isn't coming back, and it's not rollable. You can see it's trading 460. And this morning, Costco was only down maybe $20, 17, 18, 19, 20. It just kept kind of stair-stepping down. And I thought, oh, maybe this will be okay. But no, we just kept going and going and going.
Yeah, this did not work according to plan.
So the two of us had a different Costco trade. On the open, I tried to close mine, wasn't getting filled. Lower the price, wasn't getting filled. Lower the price, wasn't getting filled. Lower the price, wasn't getting filled. I literally went from like $8 to $7.50 to $7 to $6.50 to $6 to $5.50. Like I had to go all the way down to $5.50 to get a fill on that trade to get out.
Yeah. No, I get it. I mean, I'm still stuck in mine too. But once again, we had the Dell position in our account as well, so that kind of like offsets it. We did not do a bullish Dell position here.
No, so we're taking a hit today. So we're taking a hit in Costco, which
you got to close it.
I was going to say, could we really get 40 cents out of it and save ourselves 40 cents?
You can save yourself like 20 cents is my guess.
I mean, I'll put in for see how the market is like 5-cent debit at 9.15 debit.
Yes.
This is how it was this morning, me trying to get out of my Costco earnings trade.
Okay, wheels fall off scenario and you don't close this, one's going to exercise, one's going to assign, no harm, no foul. But if you can get out and save yourself $25 and plus the exercise assignment fees, wonderful.
And I probably won't. Like I probably won't. I mean, you could see 20 cents, maybe 30 cents. Like we might be able to save ourselves a dime. But these markets were wide. They were wide on the open.
You know what? I was going to go to Costco today before I'm not going now.
We're boycotting. We're boycotting. I wanted to see what else we're taking a hit in because our P&L day was not pretty. Rocket Lab.
I know. I was so mad at Rocket Lab.
Oh, man, because this is today. Okay.
Yeah.
So now we do not have a loss on the overall position because we did this buffer trade, which we would make money if it went up, but if it went down, we really have until 134 before we would lose.
We washed it.
The problem is, like Rocket Lab did go up after we put this position on. We had a profit. We didn't take it off. We left it to try to make more, or we just didn't notice it. And so basically what we're losing today in Rocket Lab are the profits we had yesterday.
I know.
We've only been in this trade for 3 days, and the trade overall is down $5. So it's not really a loss. It's just we gave up the profits we had.
This is the age-old question. It's not, you don't make any money until you close the trade, right? So we had $240 yesterday. Today we have none, but we didn't lose anything on the trade. But I mean, I still consider that a loss. Not a loss, a loss of today. It goes on your P&L. It comes out of your net lick.
You know what? Okay, so let's see. What did we do? We took in.
I would wait and close at the end of the day because I mean, you still have 42 cents in that.
Well, I was going to say, we took in 504. I was going to just because now it's even lower. When we put this trade on, it was trading 145. I was going to say, take this off and we can put a new one on next week. Same thing, another buffer.
Sure.
If we want to. If we want to keep the buffer going in Rocket Lab.
Yeah, but, so we have to make a mental note to each other. We're going to take a couple $100 out of it and not be like, ching, we want full profit on the Rocket Lab.
I know. So if we take if we 504... closing it for 514 is a 10-cent loss.
Yeah.
So we lost 10 cents on that trade. And if we did a new buffer here, which is this time we could 39.29.
And you're paying 422, so you got to find a call with 422. Go ahead.
Yeah, we can get that 149. We're getting almost $10. That's better than the last time we all took in $5.
Well, can we see the downside again? You might need to shimmy it. Yeah, you got to shimmy it.
I can move it. I'm going to move it one
You
strike.
got to bring it down.
There we go.
There you go.
So back to the analysis page. This is what the buffer looks like. It didn't go from this week when we put it on to the end of the week. It didn't go up, and no harm, no foul. We didn't lose anything because this is what our position looked like when we put it on. Now, if it runs up next week, we can make money on this. But if it goes down, we have room until 129 before we lose.
And so the buffer trade is you're buffering your losses to the downside, which is why they call it that.
Yeah.
It's not bad when you think about this. If you just keep going until 1 week, you could possibly be profitable.
Yeah. Yeah, I like the buffer. I do, and I don't mind Rocket Lab. I don't mind having a Rocket Lab position with the SpaceX IPO coming out. I don't mind having a Rocket Lab position.
Yeah, it's not bad.
Okay, so 918 credit. What's going on? I mean, we got the 2,000 back for taking off the old one, so now we're in the new one.
Yes. New buffer. Oh, I'm not doing my job. I'll push out things.
So we do have some things to clean up. We've got a handful of red in the money signs. But before we get to that, should we do the market measure recap for the week?
We can. I don't know if you looked at
it. Liz, I'm going to clue you in on something. You never need to ask me if I would.
Well, one is a repeat. So the market measures recap has 2 in there. We were on the morning show for one of them, so we don't. Need to do
we'll just do, and we know that we do we do the study, Jacob's study on the SIBO. So usually in the market measure recap, we're just going over one of them.
Oh, they never put Jacob's study in the market measures recap for us.
So we don't have to. If you don't want to go through it, we don't have to.
It's just the first one is something we hadn't looked at. The second one is what we did
because we were on the morning show yesterday.
Yeah. Yes.
Yeah, then we won't do it.
No, the first one. There's 2 in there. That's what I'm saying. There's 2 in there. So there's 1 and 2. 2 is the one that we did yesterday. Was it yesterday? Yes, yesterday we were on the morning show.
Okay, then I would say, as far as this, hang on. As far as the weekly summary goes, then we're just doing one. We're gonna take a look at should we trade bullish strangles, because we have never looked at this market measure. Should we trade bullish strangles? I didn't see the boys do it during the week.
I didn't either. So that's why I like this. This was brought to us because we asked Kai to put together all the things that we're going to miss. And he doesn't put in Jacobs, which is good. I wanted to put that out there. The things that we miss. And Kai puts it together. It's a watered down version. If you want more of the, meat and potatoes, you can dive down into this and go look at it on the Tasty site. It's all archived.
Okay. All right. So here we go. Should we trade bullish strangles? And I think the answer is going to be yes.
I think the answer is yes. Continue.
I didn't look at it. I like to be surprised, but I think the answer is going to be yes.
All right, so let's take a look at this. When examining premium income potential, 30 delta puts typically generate higher premiums compared to 16 delta strangles. So this one's comparing the 16 delta strangle to just the put. The delta makes sense. This premium advantage can potentially lead to better success rates and improved performance during sustained uptrends.
And we've been in a bullish market for a long time, and I'm sure 30 delta puts have really outperformed 16 delta strangles.
Well, it's pretty interesting here because they're going to go into strangles with this. But when they're talking about this is just the premium. So you're getting the same delta, right? You're doing a 30 delta put versus a 16 delta call and a 16 delta put. So this is put skew because puts are going to give you a little bit more and you're up a little bit. So you're getting
you're bringing it all the way up to the 30 delta. So if you're looking at a 45-day, and I'm just going to go to SPY. I'm going to go to SPY to show people what we're talking about, what they're comparing. If I go to the table page here and go to 45 days, I'm going to go to monthlies. It's 49 days on the monthlies. If I sell, got to change this to delta. If I sell a 16 delta strangle, I'm at the 712 put, and looking for the 16 delta call, I'm at the 793 call. But you can, when Liz says put skew here, 16 delta put, 16 delta call, you're getting 429 on the put and you're getting 293 on the call. Less on that call, right?
Much less on the call, right? So, and that's true. You've got the same deltas versus the 30 delta put. So right here we got 722. Now, what is the 30 delta put? Just the put.
722 and risk on both sides.
Risk on both sides.
But you go from the 712 put, and if you bring it to the 30 delta, you go from the 712 up to the 736. So you move that put quite a bit. You're within the expected move. And here in this,
and you're collecting more, That was the point of that one thing down there. Is even just the put is collecting more than both sides.
Right, but you're moving that put up. But I still think that 30 delta put is probably.
Well,
I know they're looking at premium collected, but
we go farther into strangles. They're just talking about average premium right now.
Because that call doesn't give you that much, which is why we kind of turn that naked strangle into that J Blizzard, however wide you want to make that call spread, because that call doesn't give you that much, and the call spread buying that extra call doesn't take away that much credit.
Right.
Okay, the bullish strangles had better returns, even though the bullish strangles had better. Well, now we're looking at bullish.
That's what I'm saying. That's what I was trying to tell you. They transition into strangles. So here you've got the 30 delta put and the 16 delta call, a bullish strangle. The other thing was just showing you premiums.
So the bullish strangles had better returns, even though they were a bit more volatile and could lose more money on the downside. The put side break even is closer, so market drops have more impact, but the return on capital was better than neutral strangles. So, so they are comparing the 30 delta put and the 16 delta call.
Yeah, they're putting it together.
16. Yeah.
Yes. Versus just the 16. So the success rate, everything is, the return on capital is a little bit better. Other than that, it did say you can lose a little bit more because they're comparing it to the 16 delta strangle, not just the 30 delta put.
But the largest loss isn't that much difference, considering you saw we had to bring that put up at least $20. That largest loss isn't that much different.
It's not that crazy.
I'd love to see them add on one standard deviation strangle, bullish strangle, and just the put.
I know. That's what I want.
That's.
And I was trying to stop you because you kept being like, and you have risk to both sides. I was like, we're going to have risk to both sides going forward in this.
Because in my mind, my choice might just be the 30 delta put.
I agree.
I don't know. After the beating some people have taken with calls we have had some crazy moves to upside this year. I mean, this quarter, we've had insane upside moves in some individual products.
Think about if you had a strangle in Dell.
Oh, it's crazy. The moves we've seen to the upside have been crazy, and not just individual products, also in ETFs. I mean, I've been selling 45-day iron condors, putting my calls at the expected move, and they're all through. Those ETFs are through them all. So we've had big moves, not just in individual equities, but also in ETFs. So I'm going to go with the 30 delta put, please.
All right, let's go to the next slide. Because then I think they compare bearish too. So then the next slide is bearish strangle. So you flip it over, right? So you're going to go the 30 delta put. I'm sorry, 16 delta put and 30 delta call. Bearish strangles underperformed both alternatives, which we just talked about, while showing the lowest volatility among all three approaches. Returns were below expectations. This strategy appears better suited for traders holding bearish market assumptions.
Okay, got it. So, takeaways, should we trade bullish strangles? Bullish strangles have positive delta exposure, so they perform much better when the markets go up constantly. We get higher returns, but also accept more volatility compared to neutral strangles.
And the bullish strangles sit strategically between selling naked puts and neutral strangles. We get solid returns from the put side while having much better downside protection and less overall volatility than naked puts alone. So that is, and I mean, that's just it. So many people have told us this. I know you and I like our preference. I do prefer just like a put and not having any risk to the upside. But adding that kind of farther out call is enticing. You do get a little bit of extra from it.
And what I don't mind here when they're talking about their bullish strangles are, here's a 30 delta put, and they're looking at a 16 delta call.
Right.
A 16 delta call, you're outside the way of the expected move, but not that much. And recently I've been seeing us blow through calls, going out 45 days, putting them at the expected move. So you and I feel like we don't have to give up that much if we do want to protect ourselves to the upside and say, we're getting $3 here. Maybe I'll buy this call for $1. It's not, so then it's $17 wide.
I don't know. I wouldn't do that. I would just not sell that call.
Or bring it in and get a dollar on a call spread instead of a dollar on the call spread. It's an extra oomph to your put, but then you don't have risk to the upside because the upside has seemed to be where our problems have lied lately. Or not just ours, lots of people who are selling naked calls.
Naked calls and even iron condors. They're all burned. They're all through.
I know. So anyway, good market measure. And I especially what the research team says when vol's higher, bring your strikes in. So when vol's higher, definitely go from that 16 delta to the 30 delta.
To the 30 delta, for sure. Okay, Jenny, can we look at something that I saw this morning? And I can't believe can we look at the SIBO's most active?
Sure. This market is bouncing around because we are like right before we started the show, SPOOs were actually down.
I know.
And now we're up 20.
Yeah.
Did you put on your daily Jade Lizard?
I did.
I did too. Yeah, I did. I like the daily Jade Lizard.
Yeah, I did. I'm gonna see what my strikes are. I'll look at my strikes for this. And JD's got his strikes in too. He always sells his puts at the highest point of the day though.
Oh.
But it's fine. Like he's fine.
Yeah. Yeah, right. It's I mean I shouldn't feel bad for him. He hasn't had a loser in the last.
No, don't feel bad for that kid.
Okay. All right. So going to the SIBO most active. This is what Liz saw today. This August 21st, 113,000 of these spreads traded.
Yes, of these spreads. And you can take a look. August 21st is kind of a bizarre thing to look at. And you can see it's almost you also have the 8,400, 8,800, 8,600.
Oh, so I wonder what they're doing here.
And it's also in the AM settlement. So I went and looked.
So I wonder, again, there could be it's not exactly 165 by 113 by 49. There are obviously other players in the game trading in August. But I wonder if this was some kind of 150 by 100 by, I don't know. I really don't know like what their strategy was here with the, two-ed were not on the floor right now.
It could be a 3 by 2 by 1.
Yes, 3 by 2, right. It could be a 3 by 2 by 1.
Yeah. Could be a 3 by 2 by 1.
I mean, this could be a butterfly.
Yeah, but I mean,
or not really, not really.
Thing. So let's go into the platform and take a look at it. I'll have it pulled up.
86, 88, 84.
Yeah, I've got it up. Okay, so go. It's the August 21st, and it is the AM settlement. I already vetted it.
We should text Hollywood, see what the heck was going on in the pit.
Right. Because that's a lot. And what red flagged it for me was August. So August 21st, the AM settlement, go all the way up.
And it's far. It's up. It's far.
That's what I'm saying. It's very far. So 86, 8,600, 8,800.
What?
Yes.
8,600
yes.
And 8,400.
So 8,400, 8,600, and 8,800. No, the 84 was only, I know this sounds bad, but only 50,000.
So we have 50,000 here, which maybe is a different trade. Who knows?
Yeah, I thought it was a different trade, but so I actually just bought the 86.88 call spread for $2.
88.
Yes.
But what if they? So let's say they bought these 8,400s, and they want to pay for them. Like I'm just thinking out loud. If you bought these and you want to pay for them, so you sell one of these.
It would be 3 of those. So if you're gonna do the ratio, you're selling 3 of the 8,500s.
No, it's not the 8,500. That's a different trade.
It's 84, 88, 84, 86, 88.
Right. So like let's say they bought these 8,400s, then they sold 3 of these.
But I mean, look at this volume today. The 8,500 has 10,000. The 8,800 has 113,000. These are insane numbers for August.
Okay, so here, Liz, take a look at this trade, because this trade is only, and I don't want to say only $20,000 to put on, but it's only $20,000 to put on because you have long 3, short 3, where
yes,
if I buy this 8,400.
Look at this. Can you do me a favor? Will you put this on the curve view?
Yeah. I don't know if we have other SPX probably.
I don't think we do.
No, we don't.
Yeah.
Okay, hold on.
You're gonna magnify the hell out of that thing.
How do I go? Wait, why isn't it doing it?
No, you got to go down. Take it to the other side. No, up. But yes, keep going. Yeah, yep.
Hold on.
And then scroll up. Oh man. Keep going. So this is kind of what Punished Pixels did the other day in ES.
Yes. Or
so
this reminds me of
it's a Christmas tree. 1x3x2.
But this
can you scroll fast?
Reminds me
so far.
Who were we talking to?
Maybe zoom in a little bit more. So you're going to the other side.
Yeah, I think I got to go this way. Yeah. So who were we talking to who had that really far out, very wide, long call spread? Chris, was it Chris Vecchio?
Chris Vecchio. Mm-hmm.
Yeah, it was Chris Vecchio. Like, it was really far out. And this is August, 8,000. But you see, this is only $1.65. There's only $1.65. So if we go up this high, you've got this peak from 8,400 to 8,700. Where, what's your max profit here?
$20,000. $19,000.
Yeah, $20,000. Yeah, almost $20,000. $20,000 minus this $1.65. So $20,000 here, but then this $20,000 in risk is here. And
I'm not gonna lie to you, I would be sweating at that peak.
I wouldn't be. It's $20,000. I got $20,000 in risk in all my 45 day. Do you know what I mean? Like, if I'm doing these weeklies, and if I'm going every week, 45 days out, selling an iron condor at the expected move, $30 wide, and I've got them on this week, next week, and they're blowing through all the call spreads, and I keep rolling them out and widening them, this is nothing.
This is nothing. It's so funny because I didn't look at, when I glanced at it, I didn't see the 50,000 at the 8,400 level. So I actually bought the 8,600, 8,800 call spread. It's literally, because so you lose look at this, you're paying $1.60. So anywhere to the upside, you're going to lose $1.60. Like that's what you're paying for. Like where it looks like it's flat, that's $1.60 loss. I paid $2 for it. $2 for it.
I'm curious.
I can make, $2,000 for it.
I want you to do me a favor because I'm in the show account. Pull this up in portfolio margin and tell me how much buying power this uses in portfolio margin.
Well, it would just be, all you have to do is have 180 set. What's the top short?
No, we have equal number. We're 1/3/2, but because there's $20,000 in risk, it's using $20,000 in buying power in regular margin. But what is the buying power in portfolio margin? I think it's going to be like $500, maybe.
Okay, so I am buying one
8,400, selling 8,600.
Selling 8,600. No,
and buying 288 and buying 2,800.
288.
And again, this is what when I looked at those strikes, this is what I think they're doing, but I have no idea. I'm making this up.
Oh, hold on, I've got to 6 that in there.
Yeah, I would guess in portfolio margin, this is going to use almost nothing.
Yeah, I have things that are crossing it though. It's holding almost nothing.
Right.
But it's not. It's using my whole portfolio, Jenny.
I know. No, I know. But I think in portfolio margin, this won't use much at all.
It doesn't. But it's not. Mine's not accurate right now because there's so much other stuff in there.
And we're getting breaking news from Frank. SPX volume is huge today. Huge.
Well, I mean, just alone in August. So when you go back to the SIBO's most active.
All right, I'm going to take this off. Anyway, who knows what they did, but this is my guess.
Yeah, I didn't put the 8,400 with it. I pulled a Chris Vecchio and just bought a very wide call spread.
And how much was that? 8,600, 8,800?
$2. That's why I was like, I'll donate that to the cause because I want to keep an eye on this.
Yeah, maybe it's better. You're better off donating that $2 instead of.
Well, that's what I'm saying. $160 versus $2. It was like I didn't see the other component when I first put it on.
8,600, 8,800.
Yeah, I paid $2 for it. I'm up $60. Should I close it?
I mean, this might be all they did.
It might be. It very well might be.
Now, the delta, I'm just going to say that the delta on 8,600 is, this would be like a 3 standard deviation move to get to this.
Yep, it would be. It would be. But well, keep in mind, hold on. But keep in mind what they did. It's in August. There's 83 days. And we don't know if this is what they did. We're just actually just two traders talking right now. They traded this 113,000 times. So they don't necessarily need it to get to 8,600. Now, my one lot I probably do it for $2. But if you get an up move to, I don't know, maybe 8,000, this will make money and they'll get out of it.
Right. Yeah. If SPOOs are up to we have up day. Yeah. Instead of trading for 260, maybe this is trading for 360, and they made $100 110,000 times.
Exactly. So that when you have size in your pocket, it's a different game, right?
It's a different game when you have size in your pocket, right?
Yeah.
Right. So how many would we have to do?
Exactly.
If we did 10 and made $100, we'd make $1,000.
Exactly.
But then we're using 25. Yeah.
So that's what I'm saying. They're not there. When somebody puts this on, and we're making this up, like we're just extrapolating. When somebody puts this on, I don't know that they're expecting it to go to 8,600. It's a cheap way to make a bullish play that they will get out because they have size.
I'm gonna just refresh this all.
So that's what I was saying. SPX volume is huge. If you just look at the August, when is the first time you get to the 0 day? The 0 day here is 7,600. There's 7,600. There's 80,000 of them.
Right. And Frank says 20 times the average at this time of day in SPX options today. So
20 times the average?
Mm-hmm. Yeah.
Is it the end of quarter, end of month? No, it's just end of month.
It's end
of month. It's not end of quarter.
June. End of June is end of quarter. It's just end of month. And when honestly, so we have a little bit of in the money signs, like our Costco order. When I opened my account today, I had $1 million in the money signs.
You did?
I was like I did.
Why?
I don't know. Because I've been doing a lot of those weekly, like buy a call spread, sell a put spread. So either they're working out and the calls are in the money, or they're not working out and the puts are in the money. Like something's in the money.
So can we look at where's SPX right now? Just do this for me. Go to the 7,600 because I just glanced at the chat. Give us a like on the chat because I did, and this is from Master Payloads. 7,600. They were like nobody knows anything, but a 7,600 pin.
Yeah, that's very possible.
It's very possible.
If we're gonna play for a 7,600 pin, 820 credit. 820 credit, only $150 loss.
That's what I'm saying. Just do it on the same side. Why is it an iron fly?
Well, I don't know.
Butterfly.
Yeah, it's the same
thing.
Keep
them all out of the money.
It's the same thing. So,
especially in here,
So $1.50 on a butterfly.
This is just a for fun trade, but that's where the volume is going to in the 0 days. So the volume is going to the 7,600.
7,600.
You can see 82,000 of those have traded, but look at those thousands on the call side. You're not getting those massive numbers on the puts. You are getting numbers on the puts, but not the massive numbers.
Well, 40, 35, 80, 30, 45, 32. And here it's lower. It's lower.
They're just lower. So this is calls over puts in 0 DTE.
Yeah. And it usually is. I mean, I can't remember the last day where it puts over calls.
Yeah, puts over calls. And the chat was talking about a 76 pin in ES, but I just said the 76 when we were looking at the SIBO. I was just taking that last thing we looked at. Can you go back to that SIBO list? Do you mind? So if you go down and see the first 0 day is that 7,600. Yes. Right. That first 0 day is 7,600.
And I'm curious, equity options, what I always like to see what's going on in the equities. What's the busiest? So besides SPY, we've got Apple, Nvidia.
I'm really surprised you're not getting like that. I guess.
Look at NEO. Look at little old NEO is on here. Puts a NEO.
It is kind of crazy to look at. It's fun to look at the information and where everything's going.
So puts in NEO, does that surprise you?
No, nothing surprises me these days, Jenny.
So NEO,
dogs up, cats and dogs living together.
You know, it was a real killer today. I didn't know. I don't know if they had earnings and I missed it.
They had earnings, I think.
They had earnings and I missed it. And I had a decent size AEO position. So when I saw it, I don't remember it being on the earnings list yesterday. Was it?
You know what, though? But that's a vetted list where this isn't the hottest. stock to trade.
I don't know how I could have missed it. I want to double check because yesterday.
No, I mean, Bob does a great job, but he doesn't trade video.
No, I know. So I'm not crazy. I wasn't like, it blew right past me. Because this morning I had some other network on early, 6 a.m, and they were like, shares of AEO are down 12%. I was like, son of
what?
Oh, missed the earnings.
That's funny.
All right, we're still not out of the Costco. It looks like we're not going to get our 20 cents.
I know, but that's okay.
We probably won't even get a nickel. Costco.
It doesn't necessarily even have to be close. Look at you. You got a nickel.
Got a nickel back.
Let's take a look at our IBIT. We have to address all those in the money signs.
So we added this put 3 days ago, just a weekly put, and we'll just roll it out to next week. We have this was...
We bought back our short from a zebra. That's what we did.
I know. And I adjusted mine. I adjusted my zebra and sold it because, again, now we need IBIT to go up through this at least by $1.32. We don't pick back up to making money 1-for-1 until 43.32. So I would say we just adjust everything. We could roll this put to next week.
I mean, when you buy back the short from a zebra, you're expecting a rapid move. If it doesn't happen, you have to adjust.
Yeah. So I'm going to roll that put to next week.
Great.
30 cents. Fine. I mean, someday crypto will have its day in the sun.
I don't know.
And we're going to close out of our 2 longs and maybe just go to the 49-day with our zebra.
Yeah, take it out in time. I would. We're going to put a little additional capital into it, but that's fine.
So basically, we're only selling 1 50 delta. We're not selling 2. And then buying 2 70 deltas. Yeah, we're putting $3 into it. Fine. Then we've got the zebra going for 49 days.
Yeah, I agree.
I'm penning it up a little bit because the market's kind of wide. And it should fill.
Perfect.
Oh, Frank posted AEO numbers.
Did he?
Frank, I've been in a PFM, personal fast market.
Why are you giving us the acronym for it?
Because I've been in the middle of selling the boat, and the guy who's buying it, he texts me constantly. He's texting constantly.
What does he want? Why is he texting you constantly?
More pictures, more videos, more.
But did he already buy it or no?
So I posted the boat on Facebook Marketplace. I got 3 offers in 10 minutes. I had people saying, we'll just give you X amount cash, whatever. So this guy was the first to contact me. And he said, like, please, please, please pick me. And he did not try to haggle on price or anything. And he's meeting us tomorrow. He is from an inner lake, which this boat will be wonderful on.
It's like you're giving your dog to a farm.
Yeah, exactly. But he's just very excited. He's very excited. He wants to know all about it. And he's experienced. He has a smaller boat. Right now he has like maybe a 9 or 10 passenger boat. So very excited to get a bigger boat where he could put more people. And him and his dad are both coming tomorrow. So they're all it's going to a very good family. I felt good about that.
It's going to a very good family. That's awesome.
But anyway, as I sit here, text, all from the boat buyer.
Think you have a new pen pal.
So that's why I've been missing some of the Teams messages coming in.
And you sell a boat. It's a busy day. Okay, so that IBIT is up. We still are going to go to Twitter too.
All right, this is working. So anyway, if he comes tomorrow and he doesn't buy it, I've got 2 guys in the queue.
I mean, given all of your talking to him, he better buy it.
Okay. What's next?
Did we get to all the in the money signs? Is there anything else that needs to be addressed in here? And then we should pop into Twitter.
Yeah, we really don't. We don't. I'm going to raise the butterfly.
So tell me this. Yeah, raise that butterfly. I like to get that. Okay, so SPX, and you're in it right now. I did the 0-day Jade Lizard. I'm at 50%.
I'll tell you I'm going to look at my strikes because
you're probably at 50% too.
I put mine on at 8 a.m. I don't know what time you put yours on.
Oh, a little after, closer to 9.
So mine, and I don't know what I'm at because I have so many SPX positions, but I have the 55-35 put spread.
You're short. It's 55-35.
Yeah.
You might be through the call.
And my call is the 7605.
Okay, you're close to your call.
So it's 270. I took in 460.
Yeah. Mine, I took in 4, and mine's $2 now, and I just canceled my order. This is the dumbest thing ever. I need to take 50%.
I mean, maybe I should just close mine because I think that I'll have. We got filled on the butterfly. I'm actually going to close mine right now on the phone because I think we've got a good chance of blowing through the call. And yesterday we blew through the call, and so I didn't make anything.
And stayed through the call.
Yeah, we blew through the call and stayed through the call.
Yeah, we blew through the call.
I'm going to close the position.
And we closed ours yesterday, which was good. I thought it was a good fill. We closed it before the show, so we took like a $60 win or something instead of having a loss.
Yeah. Okay. So I'm out of mine. After seeing the boys did Jacob's study today that we had on the floor, and they were really, really kind of driving home. Close this. Don't leave it. Don't have no management because closing at 50% or closing at 75 reap the best results.
I mean, closing it at 90, you just close it because anything can happen in the last 10 minutes of the day.
Yeah. Okay. So that's not bad because 10:30, 50% by 10:30.
Yeah. Yeah, that's not bad at all. Okay, so then let's pop into Twitter. I know you have Bob's list, but that was from yesterday.
So we are taking live tweets, include the hashtag LIZJNY like Fabio did here. And Fabio is asking, hello, ladies, what do we think of a strangle in Adobe June 22300 for 640 credit? Now, after what I've been seeing, I hesitate to sell a naked call.
I know. Let's take a look at it for Fabio because we love him. But and Fabio's been trading for a very long time. He's good at it. I'll pull up the strikes.
223.30.
And you're not updating. Fabio. Okay, but that's okay.
All right, I'll refresh. But so in June, right? June 18th?
Yeah.
220 put. 330 call. Or well, no, maybe it wasn't the 330. Was it the 300?
So it was the 22300.
22300.
Yeah.
You're far. The deltas, you're at the 17 delta call and the 15 delta put. You're getting 655. Seems like a good credit with only 20 days to go.
Yeah, this is the 16 delta strangle-esque.
Oh, but you're going through earnings, Fabio.
Yeah. I mean, Fabio knows what he's doing. He can do that if he wants to. I would prefer not to go through earnings when a chart looks like that. What if it does a Dell?
I'm too afraid of that 300 call because could you imagine if you sold calls in Dell? The expected move was what, $27 or what was the expected move? I know here.
I can tell you because I did the diagonal.
Yeah, because we did the diagonal and I've got short calls at the expected move.
So the diagonal, the expected move.
350.
355, yeah.
350. So you're $60, $57 through the expected move.
Yeah, that's a lot.
Mm-hmm. That is a lot. Huh. I don't know. That seems like a lot. I wouldn't sell. I myself would not sell those 300.
No, we appreciate the show. We appreciate looking at it, but we're not going to put that in right now.
Yeah, Fabio gets a certified badass card.
Oh yeah, here. You want me to give it to him? Here you go, Fabio.
Okay, now I'm okay, so we've got Mikey, TGIF, ladies. Yes, TGIF. It was a quick week because it was a short week.
It was a short week. And I'm totally out of sorts. I've got blood work immediately following this for life insurance, and I haven't had a cup of coffee. It's been 40 years since I didn't have a cup of coffee in the morning. Like I might fall off my chair. I don't even think my mouth is working right.
That's pretty funny. Because you are a morning coffee drinker. Like a pot.
I'm a morning person. I like to get up and have a cup of coffee. I've done it since I was 10 years old. And I'm sure that's bad parenting 101, but I'm very tall. It didn't stunt my growth. And
oh my gosh.
It's the weirdest day ever.
So, and you literally, like, you'll make yourself a pot.
Oh, I drink I drink a pot of black coffee a day.
And so I know I've been bad parenting. Back then, they thought it was cute. I was 8 years old, and my grandparents would give me coffee, and I didn't like it. And that my grandma would keep saying to my grandpa would say to my grandma, "Burn, add more milk in it. Burn," because my grandma's name was Bernice. "Burn, add more milk in it. Burn, add more sugar in it. Keep adding to it until I would drink it." So finally, a cup full of milk and sugar and a little bit of coffee. 8 years old. I know here, the day you buy the boat and the day you sell the boat are supposed to be the two best days in the boat owner's life. I was very sad today. Very sad.
I know you were, but it's going to be once it's over and done. Now you have a new pen pal.
It's like ripping the Band-Aid off.
It's like ripping the Band-Aid, and now you got this guy's phone number, so you can always ask about the boat.
I'll ask if I could go for a ride. Oh wow, that move in Costco. Closed the short side of the 0DT for 600 and rolled the long side to the 7DTE. So what did he have here?
Almost looks like an iron condor. No,
or a buffer. So he had a 0 day. He had a long put spread in the 0 day, or this is the roll.
It's the roll.
Long put spread in the 0 day, or is this the roll? I don't know.
Let's just read what he says.
Now I can't go back. Okay, here we go. Closed the short side for 600, rolled the long side to 70 TE.
Yeah, hopefully that 7 day will work for you.
Yeah. Oh, 1 DTE broken butterfly insurance.
Oh, there you go.
Well, blue wackadoo, good luck. Because Costco took out, I made money in Dell, but I lost half of it in Costco.
Yeah.
Yeah. And that was the Costco trade was the one I couldn't get filled on, and I was chasing. Do you remember?
I told you, don't chase it. Don't chase it. I go, anything that I chase at the end of the day is usually what I lose on.
Yeah, and that was this morning. I thought Liz was right. Shouldn't have chased that Costco.
Did you get a double fill? Because remember, you thought you might have.
No, I only had one diagonal on. But again, it was one expensive diagonal. I think I started trying to pay $1,300 for it, then $1,350, $1,400, $1,450. It was expensive. It was an expensive diagonal.
Yeah, they were expensive. They were very expensive.
Florida 7, Tasty Trade assignment fees have been lowered.
Oh, so you may be better. And I appreciate this. Thanks for the PSA. You may be better off taking the fees versus chasing the price and paying more to close it. So anything we used to say, anything under $10 is a benefit, right? Because it's $5 and $5.
Yeah, I like that. If you like that too, like this show.
I'll pop in the chat for a second too. I can occasionally do it. I can't keep up with everything because it's hard to do both with it.
All right. Well, 10:40.
I gotta say, Brett has successfully cut out his afternoon coffee.
Liz and I get a cup of coffee after when we film on the SIBO. After lunch, we get a cup of coffee as we're heading to the train. And we got ourselves in such a habit where if we didn't have it, we would be asleep by the time the train was pulling into our station practically.
Yeah.
And it's not a bad idea to cut out that afternoon cup.
I usually don't drink afternoon coffee. I only drink morning coffee. And then Jenny, the bad influence that she is.
I could drink coffee. I'll drink coffee at 2 or 3. I always have one then. And I can drink coffee after dinner. It doesn't matter. I'll go right to sleep.
Who are you? I could never do that. It's crazy.
Yeah, coffee after dinner. That's at my grandparents' house. We grew up with coffee after dinner with a Pepperidge Farm cake.
Oh, like a coffee cake.
It was like those Pepperidge Farm cakes that you can get you can still find them in the freezer section.
Yeah, I'm gonna bring one of those to your house. We're gonna have an afternoon coffee.
We're gonna have a Pepperidge Farm cake after dinner with a cup of coffee.
Frank the Great just put something on Twitter, and
he did?
Yeah, not on Twitter. I'm sorry, on the chat.
Oh, on the chat.
SPX has no assignment fees.
What?
It's what it says. I'm just reading.
I had no idea. It's like Christmas in May. I had no idea.
I had no idea either.
All right, I got to get off this Dell chart. This is insane.
Yeah, the Dell chart is nuts.
But it's not the only one that's been insane. Okay, so we rolled our IBIT. What else can we do today?
We rolled our IBIT. We did a bunch of stuff. Let me go back and I'll watch what we're doing. I was just going.
SoFi, we're up almost 80% in SoFi. We're short these 17 puts in June.
Close that.
SoFi's having a big move today. Close those. Do we want to sell puts in, oh, look at that market, 40 cents at 41. Or did that just happen because my 40 bid?
It happened because you're 40 bid, I think.
I think these markets are pretty tight in SoFi. Do we want to go out to July and put on, I was going to look for a Jade Lizard, but you can, because what did we have? We could do the 21-22 and the 17 put.
In SoFi, sure. I like it.
Because we had, where did it go? We had the 17 put. So we had sold that 17 put. That was hefty. That must have been a roll, $1.84. But now we can put on the 17, 21, 22 for $1.08. It only uses 296 in buying power.
That's what I like this. And we kind of lean towards lower price products with a high implied volatility in this account.
Yeah, and I was going to say when Annabelle starts her, where do I start? Remember, when we see something like this that uses less than $500 in buying power, write it down, take a note, keep a list, because those are all going to be good products for her account.
And they're kind of hard to find, right? Good products that you can get a decent credit that are using low buying power.
Right. So that $296 in buying power to make 100.
Yeah,
that's if you take $50 out of it, that's a good return on capital.
It's not bad. No, I agree.
Gotta adjust this though. Okay. So we're in SoFi, back in SoFi.
We're back.
What else? I can't believe Rocket Lab. That's a real.
I know, that thing makes me so mad.
I know.
But the good news about it, let's kind of walk through why we liked the buffer. So Rocket Lab had an upward trajectory. You already did there, Rocket Lab. Upward trajectory, and we wanted to kind of go with it. And actually, shame on us, because we could have taken it off for a profit.
I know. Shame on us, shame on me. I have it on too.
Me too. I did the same thing.
I know. And now it's not. But we didn't lose and we're back in. If it pops back up again, we'll participate on the up move.
Yes. And that's what's kind of nice about the buffer is that, okay, so we didn't take our profits. Lesson number one, we got that. That's a lesson learned. We'll learn it over and over and over again. But what's nice about it is the near-term buffers, we're back again. We didn't lose anything.
Now, if you aren't, so the buffer, I want to see something because what do we have? Do we have anything in Intel right now? No, we don't. I want to compare two trades and maybe they're the same trade and maybe it is the same trade. And I'm just not thinking of it clearly because in Intel now,
What trades do you want to compare?
I want to compare the buffer. Okay, so let's say we did, because Intel's down. It was down. It's down a little bit. I want to compare the buffer where we buy this.
Buy the put spread.
Here's a $10 wide, giving us $10 in room.
Perfect.
388, find a call for 388. You don't get as far, you're not getting as much, but you have, you know what I have to do? Bring this up. There we go. So here we have $8 in room to the downside. We have to 110. We're getting 540 and it's using $1,747 to make 540 if it goes up.
Yes.
Yeah. It is the same. Now that I think about it, it is the same. It's exactly the same as for a while I was weekly buying a call spread and selling a put spread to pay for it. And I wanted to get further. So I just started selling naked puts to pay for my call spread. It's the same trade.
It's the same trade. Yes. Because you could pull that call spread over and you're selling a naked put.
Yeah. It's the same trade where if I buy this call, sell this call, I've got a $5 wide call spread that I have $500 in profit potential on, and I'm selling this put to pay for it. It's the same trade. So,
well, and you can get there however you want to get there, and I don't mind using the out of the monies for it. I don't mind using the out of the monies instead of the buffer trade in there. The buffer trade just got invented because we were trying to replicate a covered call, right? So the covered call is the in the money put. So they were just buying a put spread. The whole concept was buying a put spread, that's your buffer, and then having a covered call as in there as well. So to put it in as one foul swoop without the stock, you just use the in the money put.
But now looking at this, we always say the out of the monies are usually tighter or more liquid. So if I take a look at this 123 call, it's 380 at 390, 10 cents wide versus 855 at 890. So you've got 35-cent wide. So I think instead of doing the buffer, we're actually better off buying the call spread and then selling the put to pay for it, just because we're then using the tighter markets.
I agree. The out of the monies are always the way to go. And you can typically do things with the out of the monies.
And
but it's identical. But you'll set these up differently though. No, I guess. No, you've been doing put spreads to pay for your call spreads, right?
I have in Intel, because I was a little bit afraid of it having a swift move back down. I would say, oh, I'm going to buy a $5 wide call spread. Sometimes I can't short term. Sometimes you can't get them that wide. Sometimes I have to do $4 wide and then sell a put spread to get that $1.50, 110, 105. And I'm still paying a debit. And so I was just getting and you're still paying a debit. And I get tired of paying a little debit.
But using the naked options to do it is easy.
Right. Yeah. So, and I got tired of paying a little debit, and I got a little greedier wanting a slightly wider call spread, because then you can put on a slightly wider call spread and have a little more profit potential and still get your short at that same level or lower by not doing the spread.
By not doing the spread. Well, I mean, that's the nature of everything. If you're using a naked option, by using the $1,700 instead of just, the put spread, you can get a lot farther.
Mm-hmm.
It's not bad.
Today's show, I think, I know some people will say like, oh, keep things simple or we're too advanced. No, there's plenty of people out there who understand options and who trade options. And it's nice to just have discussions like this about options. Like, hey, I didn't even realize I was doing the buffer trade. I was just doing this. Well, it is the buffer trade. You guys all understand that.
It is my favorite thing in the entire world, what we do right now, talking through situations like that, because they are. And somebody's like, nope, this is the best trade. This is the best trade there is. It's the same thing. It's the same thing. You're getting to the same point. If you understand this and you can layer and stack your risk.
Mm-hmm. So what else? The Palantir's on the move. I'm trying to think of what's on the move today. Palantir was up 10%.
And we are almost out of time. We have about 2 minutes left. So Palantir is up, but I think that's on the heels of Dell. So you're getting it's getting some wind beneath its wings from those things. Because Palantir couldn't catch a bid for a while.
I know. So if you were long Palantir, what would you do now?
I am long Palantir.
And I'm long too. So my question is, what do I want to just get out now?
I don't, but this is part of my core portfolio. If core portfolio by chance, I sell strangles around it. I usually do. Right now I have a jade lizard around it.
Okay. Which is nice. If you want to get some premium, you sell a jade lizard. Then if it runs up like this, you're not losing on a naked call. You're not capping yourself out.
I really like jade lizards on stock that I want to keep. But this was easy. A jade lizard was easy because it was down so low. Do you know what I mean? It's hard to do a jade lizard when it's up at the top. Then I'll sometimes do like a downside ratio spread, but this isn't at the top.
So yeah, I'm just not sure. Like today I asked myself, do I want to just get rid of my Palantir?
But it is nice to kind of get things off the books too.
How many times do we say someday we're just going to be SPX traders?
I want to just be an SPX trader.
Yeah, we have all these positions.
I can't. I'm an addict, as we talked about before. I know, Mikey, it's an enthusiast, but I'm a trading addict. I don't know that I'll ever have unscrolling positions. But Jenny, we are out of time.
I know we're out of time. and watching soap operas. It's hilarious. My mom would go to work. She was a nurse. If my grandma watched me, we had coffee, we watched soap operas, and we would go to the cemetery and water the flowers. That was
little Jenny before just the first cup of coffee. That's so funny.
Oh man!
All right, well, we are done. It's a beautiful weekend in Chicago. I cannot wait to see you this weekend. You can't get rid of me, Jenny Andrews.
All right, everyone, have a wonderful weekend. Liz, I will see you soon. Everybody out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
We'll see you on Monday.
Jim Schultz here for Calculator. Before we get started, subscribing to the channel or liking the video, both of those things really help us out a ton. So if you've been following my content for any length of time, then you already know the short put strategy is my #1 strategy. This is my go-to strategy. This is by far and away my favorite option strategy. I mean, there are just so many powerful aspects to the short put that it's really hard not to love. I mean, you've got the positive delta, right? So you're kind of playing the positive drift of the market moving higher. You've got positive theta, so you're allowing time passing to work for you. You've got that decay that's going to help you on that position. And then lastly, you have negative vega, right? And volatility likes to contract. Volatility likes to move lower. Sure, it can spike and it can expand and all those kinds of things, but generally speaking, it likes to move down to the lower end of the range. So you have all three of those things working for you. Well, here is something that's pretty wild. When you do a short put, how do you normally set it up? You're going to go out of the money, right? I'm going to choose some strike below where the stock price is because I want to have a probability of profit that's greater than 50%. That makes sense. That's how I set up 98% of my own short puts. But here's what's crazy. Even if you went in the money with your strike selection, you're still going to have a probability of profit that's greater than 50%. That's pretty wild. That's pretty crazy. Man, let's break it down and understand how that can even be possible. Okay, so if I buy stock, right, like let's say I want to play the market to the upside, I'm considering, long stock versus a short put. If I buy stock, then in the short term, that's a 50-50 proposition. The market might go up, the market might go down, the market might go sideways. Nobody really knows what's going to happen. Now, in the long term, it's definitely tilted to the upside. You've got the positive drift, you've got the positive risk premium, all those kinds of things. But day to day, like what's going to happen today or tomorrow, it is very much 50-50. Okay, fair enough. But with something like a short put, I go out of the money with my strike selection. That's automatically going to tilt the odds in my favor. All of a sudden, my probability of profit is greater than 50%. Now, of course, that's a really nice gimme. There must be a pretty solid gotcha somewhere around the corner. Well, yeah, my upside is capped. I'm not necessarily going to be able to make as much money like I could with long stock if the market does rip. But again, that's the trade that we like to make as premium sellers. We want the higher probability trades in exchange for capped upside. And the higher probabilities on an out of the money short put are largely derived from what? They're largely derived from the distance between the stock price and the strike price. Right, like I've got this buffer, I have this margin for error that even if the stock goes down a little bit, but it stays above my strike price, I'm going to be in a pretty good spot. So that naturally is going to produce probabilities in excess of 50-50. But here's what's crazy. Even if you go in the money, with your strike selection, you have no distance now. There's no buffer. There is no margin for error. You're still going to see a probability of profit that's greater than 50%. How is that even possible? Well, let's dive into Tasty Trade and let's take a look. Okay, so here I am inside of my Tasty Trade platform, and I'm just looking at SPY. Like, let's just look at the S&P 500, and let's start with, if I wanted to buy stock in SPY, what would that look like? Well, I would go here, I would click the ask, and then what happens? I see my trade bar, which we just talked about on a recent calculated risk, and I'm looking at the breakdown, and what I see is the probability of profit, as you can hopefully clearly see right over here, is 50%. Right? Again, in the short term, it's 50-50. In the short term, it's a coin flip. In the short term, it's essentially, half to the upside and half to the downside. This is what stock is always going to be. And it doesn't matter what stock you might look at when you're trying to figure out what the probabilities are for a given stock position. Like if I close out of SPY and I bring up QQQ, the NASDAQ index, similar thing. I go to QQQ, I click the ask, I want to buy my 100 shares, and hopefully you can clearly see my probability of profit there is also going to be 50%. So again, stock ownership in the short term, 50-50. Okay, so let's go back to SPY, and everything we're going to talk about here for the next couple of minutes, this would apply to any stock or any index. You're going to see the same phenomenon, so you can kind of play around with this on your own. So let me I'll go into the June cycle with 56 days to go. So obviously you've got the stock at 711. All of my strikes that are over here on the Tasty Trade platform, these are going to be your out of the money strikes. These are going to be your out of the money put strikes, to be even more specific. And again, when we're setting up short puts, typically we start with an out of the money strike. So for example, I may want to sell this 35 delta short put at the 695 strike. I sell that guy and I see my probability of profit is 70%. And of course, if I go further out of the money, I'm going to have an even higher probability of profit, but I'm collecting less. If I go not as far out of the money, I'm going to get a lower probability of profit, but now I'm collecting more. So again, it's the classic gimme gotcha exchange between probabilities and premium collected. But the point here is I'm out of the money, and you can see my probability of profit is greater than 50%. That's exactly what we would expect. Okay, but now let's start moving our strike such that we are no longer out of the money, but we're at the money, and then we're actually in the money. So if you look at what happens, you've got SPY at 711. Let me move all the way up to the 710 strike, which would essentially be the at the money strike. It's still slightly out of the money, and so you could certainly make the case that, all right, Jim, we're not quite there yet. Oh, don't worry, we're going to get there in just a couple of seconds. My probability of profit here is 63%. So I'm still way better than a coin flip for essentially selling an at the money put in SPY. But look what happens, and focus on this probability box, if I go deeper and deeper in the money. So I go to 715, which this is now clearly in the money. This is in the money by a few dollars, by a few points. Probability of profit, still 61%. I go to the 720, probability of profit, still 59%. I go to the 725, probability of profit, still 57%. I go to the 735, probability of profit, 54%. So let me stop right there, because you might be wondering, Jim, what is going on? Like, how is this even possible? I'm selling an option that's super deep in the money, and yet I still have a better than 50-50 proposition. What is driving this result? I don't have any buffer. I don't have any distance between the stock price and the strike price. So what is possibly driving my better than 50-50 proposition? Well, it's going to be this little ditty over here on the side. Extrinsic value. When you sell an option, whether it's out of the money or in the money, it really doesn't matter. You're going to be collecting extrinsic value. You're going to be getting paid for the additional risk that you are taking from the unlimited risk in that trade. And that is represented by the extrinsic value in the option. And so because an in-the-money option still has extrinsic value, that is what is driving a probability that is greater than 50%, even though you are in the money. Because if you sell this 735 put, and SPY just stays right here, it doesn't move at all, are you going to make money on the trade? The answer is yes. How can that be? It's because of the extrinsic value. Because at expiration, 56 days from now, we know that the option price is going to collapse down to its intrinsic value only. So I'm going to keep any extrinsic value that I sold. I mean, this is the game that we typically play, and we're very familiar with the out of the money options. So all these guys up here. I'm used to selling premium. I'm used to collecting the extrinsic value out of the money for the 670 strike, the 680 strike, the 690 strike, and what have you. But when you go in the money, the same principle applies here as well. You're still collecting extrinsic value, and you're going to get to keep that extrinsic value if you were to hold the trade all the way to expiration. And also, another very important thing to recognize here is if you sell an in-the-money option, like for instance, if I sell this 735 strike, not only am I collecting the extrinsic value, but the option price that you see right here, this is built from not only extrinsic value, but also intrinsic value, of course. And option prices must sell for at least their intrinsic value at minimum. And so whatever in the moneyness, whatever intrinsic value the option currently has, I'm going to collect that on order entry. And so if SPY were to rally from 711 all the way to 735, let's say, then that's going to be the best case scenario for me because I'm going to be able to keep my extrinsic value and I'm getting paid for all the intrinsic value that I sold all the way down from 711 up to 735 because this difference in price, 711 to 735, is about $24. Let's just call it $24 to make it a little simpler. I'm being compensated by those $24 here. Well, what happens if SPY rallies from 711 to 735? Those $24 go away. Those $24 disappear. So those are no longer there. And remember, when I sell an option, I want the price to go lower. I want the price to go down. So even though the stock is going higher, that's what I want, of course, with a bullish trade like a short put, the option price itself is going lower. And so the $24 that I sell right now, because that's what the intrinsic value is in the option today. If SPY does rally and the $24 goes away, I get paid those $24 by way of the option price going down by that intrinsic value. So I'm not losing out on the stock price appreciation. I want to make sure that that's really clear, that everybody understands. It's no different from buying stock in that way, but it's a better than 50-50 shot because the extrinsic value in the option, which is always in options, which is why we like to sell premium as option sellers. So let's bring this whole thing home. Stocks in the short term, 50-50. Short puts, when you go out of the money, obviously greater than 50-50 because you have that buffer, you have that margin for error. But even with an in the money short put, you still get greater than 50-50 because it's not only the distance, it's not only the buffer and the margin that's driving those probabilistic outcomes, it's also the extrinsic value in the option, which you still get even with an in the money strike. And that's one of the key differentiators between stock and options. Right, short-term, day-to-day stocks are always a coin flip, but options can always be better than a coin flip for you, the premium seller, and we'll see you guys next time. Jim Schultz here for Calculated Risk, and before we get rolling today, don't forget, the best ways you can help us are by subscribing to the channel, liking the video, or sharing the video with a friend. Each one of those guys helps us out a ton. So here is a very popular strategy in the marketplace that I absolutely think is a terrible, terrible idea. Selling the super low delta puts, like a 3 delta put. I mean, you look at it, it's super enticing. The buying power is amazing. It looks like it's never going to get touched. The probabilities are super high. And so you're looking at this like, man, I'm just going to sell this guy, pick up this credit, do it again tomorrow, and everything is easy peasy. I mean, even if you've been trading a while and you've never done one of these trades, you've probably looked at the option chain and you're like, man, there's no way that gets touched. Like, there's no way that thing gets hit. There's no way that I get hurt by selling that option. So is that true? Well, let's break it down. So first and foremost, the buying power and the probability on these 3 delta puts, let's just use this as our example. The buying power looks super favorable and the probability looks absolutely incredible, and that is the trap. Because if you look at a 3 delta put and you look at the probability of profit at 97%, right? Every single one of us is going to kind of round up to 100% for our mental records when it comes to that position. So is that an accurate reflection of the actual probabilities around that trade? No. Low probabilities, right, and super low deltas do not guarantee success. A 97% pop is not a 100% pop. A 95% pop is not a 100% pop. There's a reason why, when you look across the option chain, you don't see 0 deltas or 100 deltas. Because if you trade long enough, there is going to come a time when one of those 3 delta puts is going to go in the money. There is going to come a time when one of those 98% pop trades is going to finish in the money at expiration. So don't get lulled to sleep by these single delta options and think, oh man, that's just free money. That's just money in the bank. Nothing could go wrong. That is a very, very dangerous place to be when it comes to analyzing all the things that actually could go wrong. Because don't forget, when you put that trade on, that's all those metrics at that point in time. Right? That's the price, that's the expiration, that's the delta, that's the probability, that's the whatever at that point in time. But all of those things are not static, right? All of those things are not going to stay in that exact spot, right? Markets move and things change. Things are dynamic and they're fluid and they're going to change. And so that means that if the market starts going down, like if that strike starts to begin to get threatened just a tiny little bit, then all of a sudden everything is going to start to snowball against you all at once. Your delta is going to accelerate. Your buying power is going to balloon. Your gamma is going to tick up. Your vega could potentially even accelerate. And the unrealized losses on the position can indeed compound. And what makes these situations especially sneaky is all of these things are kind of happening simultaneously. Like you're not having to battle just one. It's a handful of things and they're all working against you. So when you looked at the trade on entry and everything was calm and everything was quiet and it looked like nothing could possibly go wrong with that trade, you have to remember that is not a true reflection of all the different pathways forward through the forest that this trade could indeed take. And that's how traders get blindsided with trades like this, because a lot of times it's going to work. Like, it is a 97% pop. It is a 3 delta option. Like, a lot of the times you're going to grab that nickel before the steamroller gets you. That is indeed what you're signing up for. But you have to understand, the times that it doesn't work and all of these things are moving against you at the same time, all of a sudden this position, you don't get hit by one thing. You don't get hit by 2 things, man. It mutates into something different entirely. And then you find yourself in a situation where you're like, man, I don't even know what happened. I don't even know how I got here. And here is what you need to understand about that process. Because a lot of traders will look at that and they'll say, yeah, Jim, but there's no way it goes in the money. It's 300 points in the S&Ps. It's, 900 points in the NASDAQ or 1,100 points in the NASDAQ, whatever it is. There's no way it goes in the money. Okay, maybe not. Maybe not. But here's what's crazy. It doesn't need to go in the money for you to start feeling the pain. The strike doesn't even need to be tested for these things to start to work against you in a very, very significant way. The damage to your position and your P&L can often start happening long before the strike is even tested. Why? Because you have 3 primary things that are indeed going to be picking up steam as the market moves lower and gets closer and closer to that strike. Number 1. Volatility is almost always going to be increasing in this environment. When the market is going down, volatility is reliably going higher 97, 98, 99% of the time. Well, when you sell an option, you're short volatility. Like when I sell an option, I'm short Vega. I don't want volatility to go higher. I want volatility to go lower. So if volatility goes higher, what's that going to do? That's going to send the extrinsic value on the position higher, which is working against me, and it's working against my efforts to collect the premium that I picked up on entry for that low delta short put. Okay, number 2, the short Vega itself will be accelerating. And so this is another Greek. This is a second derivative Greek that's called Vama, and it measures how Vega itself changes as the market moves around. And Vama tends to be highest for these single delta options. So if you sell a 3 delta put or a 5 delta put or a 4 delta put or whatever, those options tend to have very high Vamas. So what that means is if the market starts approaching that level, again, it doesn't have to get there, but if it starts moving in that direction, all of a sudden your sensitivity to volatility is picking up. So you're getting hurt by the actual volatility spike itself, but then each additional point that volatility does indeed increase hurts you even more because you're getting more and more sensitive to changes in volatility because your Vega is accelerating because your Vama was super high on order entry. But then number 3, you have something that I like to call the proximity effect. And this is essentially the relationship between the stock price and the strike price. As the stock price begins to approach the strike price, again, it doesn't have to get there, but if it moves in that direction, then the proximity effect becomes stronger and stronger. And a stronger proximity effect is going to lift the extrinsic value on the position. Again, this is working against you. This is not what you want to have happen. You sold the option. You want the price to go down. You want the extrinsic value to evaporate. It's not doing that. And because of a stronger proximity effect, that is working against your efforts as well. Okay, so what do we do? What's the fix? What's the big takeaway? Like, look, I get it. I understand, right? Those low delta options, they look like guaranteed winners. They look like free money. They look like selling options for income. They look like all that garbage. But it's not real. None of it's real. Now, I'm not saying you're not going to win. I'm not saying you can't be successful with that strategy. But what I am saying is the risk return, man, it just doesn't make a lot of sense. Like, it just really doesn't make a lot of sense because so many things, a lot of them that are kind of hidden on order entry are stacked against you. And if one of them shows up, they all tend to kind of show up. Now, if you really like trading really high probability strategies because of your style and your risk tolerance and risk aversion, whatever else, that's totally fine. Like, go for it. But I would just encourage you, maybe instead of doing 3 delta, 4 delta, 5 delta, whatever, maybe that you've done before in the past, just consider ramping them up a little bit. Consider 10 delta, consider 15 delta, consider 20 delta. You're still going to be 80% pops or higher on those strategies, and you're going to collect a little bit more credit, maybe significantly more credit, to help you absorb against the inevitable moves against you that are going to happen. And you mitigate some of those hidden factors that can get pretty nasty with those single-digit deltas. So we'll see you guys next time. Jim Schultz here for Calculated Risk, and don't forget, before we get going today, the best ways that you can help us are liking the video, subscribing to the channel, or sharing this video with a friend. All of those really help us out a ton. So once you get in the arena that is the markets and you start putting some reps in, man, something really special happens. You begin to start to understand and recognize opportunities. You begin to start to spot trouble areas down the road that might be coming with different positions or different things that you have going on. Or, as we like to call it here on the network, you begin to develop market awareness. Because at a certain point, you can understand all the technical stuff. Like, you can understand the strategies, you can understand the Greeks, you can understand your watch list and your stocks and all these kinds of things, have your whole system in place. But there's a certain type of experience that only comes with exposure to the markets. You can't get it from a book, you can't get it from a podcast, you can't get it from a YouTube video. Oh, the irony, right? You have to be in it. You have to be exposed to trial by fire. So today I want to work through 3 specific examples that my hope is will help you speed up your learning curve in developing your own market awareness. So let's go. So here's one that I see happen all the time, especially with newer traders who want to sell premium, not collecting enough credit. So let's take a short put spread, for example. You like the trade, you like the setup, you're checking out the Greeks, you're looking at the positive time decay, you're looking at all these things, you're feeling really good about the strategy, and you put it on a super high probability, and everything looks great and feels great. But when you look more closely at the actual trade, what you realize is you can only potentially make $1, and your risk in the trade is $4. So maybe you have a $5 wide spread on that you sold for $1, you are risking 4 to make 1. Like, this is a super high probability trade, and so it's going to work out a lot of the time, and you're going to be able to get whatever profit target you want on the trade. But when it doesn't work out, which is also coming, man, it's going to really, really sting. And of course, we have no problem risking more to make less. I mean, that is quite literally the price of admission when it comes to wanting high probability. But generally speaking, we'd like to be a little bit more balanced, right? We want to maybe risk 2 to make 1, or risk $2.50 to make 1. Risking 4 to make 1 is a little bit too skewed in the direction of the overall risk on the trade relative to what we would typically do. Similarly, let's say you're looking at a naked strategy. So now you're looking at a short put, and you're looking at this super deep out of the money guy, probability of profits like 98, maybe 99%, selling for 50 cents. You're like, man, that is free money. There is no way that that market is going to hit that level. That looks like just walking over into the corner and picking up a pile of cash. Is it really that easy? No, it most certainly is not. In fact, ask anyone who has sold those puts basically any time in the last 2, 3, maybe 7, maybe 10 days. Man, those trades can get really, really, really hairy really, really, really quickly. So whenever we do an undefined risk strategy like a short put, we want to make sure we're collecting enough to justify the undefined nature of that risk. And so generally speaking, we're at least $1 bare bones minimum, but typically $1.25 or $1.50. There has to be some economic significance in the potential profits on the trade to make it make sense in the first place. Man, those super deep out of the money, those super high pop puts that look so juicy and they look so enticing, be very, very careful with those. In my opinion, the gotchas far outweigh the gimmies. Okay, next up, trading stocks that have earnings coming up in like 2 or 3 weeks. So it's not soon, it's not like today or tomorrow, and it's not super far off into the distance. It's kind of right in that no man's land scenario. So you're looking at this trade, you're looking at a potential strategy for a stock that has earnings coming up in like 14 to 21 days. This can be a really, really difficult trade to make because as time goes on, as you get closer and closer to the actual earnings event, implied volatility in the options is going to get bid up. So implied volatility, almost reliably so every single time, is going to be on the rise as you get closer and closer to earnings, because investors and traders are betting on potential outcomes by buying calls and buying puts in that underlying stock, because everybody is waiting for the binary nature of the earnings release for a potential explosive move in the stock, and they want to be on the right side of that move. And so with all that implied volatility expansion, look at and think about what that's doing to you as a premium seller, right? You're selling volatility, you're selling premium, you want to benefit from the passage of time, but with implied volatility expansion going into the earnings day, you're not going to be able to do that nearly as effectively as you would be if the earnings date was not there. And so these opportunities can look amazing because you're like, man, the IV is high, the IVR is high. I love selling elevated volatility. Like it's checking all the boxes. But the problem is you're making an already difficult endeavor, right? Being an active trader, and you're making it even harder on yourself in my view, because any positive theta that you might collect is going to get significantly watered down, if not completely canceled out by the implied volatility expansion going into that earnings date. So a much better option, if you want to trade that stock, that's fine. Just wait until the earnings day. Just wait until the company is about to release earnings. Now you don't have to fight against that implied volatility expansion. In fact, you can even take advantage of it by selling volatility at its peak right before the earnings release. And for now, maybe just focus on indexes. Just focus on, the few stocks that maybe don't have earnings coming up, and focus most of your energies on the indexes where this is not really going to be nearly as big of a problem as it would be with the individual stocks. The third piece of market awareness that can be incredibly helpful to understanding the market dynamics and just getting a feel for what's going on is just looking at market volatility and translating that number into potential daily moves. When the VIX is elevated, it is quite literally telling you and the rest of the market that, man, big moves, wild moves, wide fluctuations, like that's commonplace. Like that's going to be normal now until the VIX calms down and it moves lower. And a great barometer that you can use to actually put some concrete numbers behind this is just take the VIX and divide it by 16, and that gives you the projected daily move in percentage terms in the S&P 500. So for example, if the VIX were 16, just take 16 divided by 16, and that of course gives you 1. That means that the daily moves in the S&P 500 are projected to be about 1%. Now these are approximations and there are no guarantees, but they give you some idea around what the market is anticipating in terms of the width or the wildness of the overall moves in the S&P 500. If the VIX were 32, now all of a sudden it's 32 divided by 16, 2% daily moves. So a much different market than what you would have with the VIX much lower at 15 or 16. I mean, doing this can really help you process what's going on in the market and put it through the appropriate lens. For instance, right now, at the end of March, early April of 2026, the VIX has been around 30. And so with the S&P 500 around 64, 6,500, the market is telling everyone that, hey, 100-point daily moves, like that's normal right now. That's commonplace. That should not really surprise anybody. But if the VIX were 14 and the S&P ripped off a 100-point move, that would be a big surprise, and that would be a true outlier event for that volatility regime. So when it comes to option mechanics, the strategies, the Greeks, the probabilities, like that's all the stuff that you can learn and memorize. That's all the stuff that's teachable. Like you can put that on a post-it note at your trading terminal and it's there all the time. But market awareness can only come from experience, right? It's the difference between looking at a low credit trade, a low premium trade, but taking it because the probabilities look super enticing and super high, and then passing on it because you then realize, man, that credit doesn't really justify the risk, even though it is a defined risk strategy. It's also the difference between taking a position in a stock with elevated implied volatility that looks really good right now, but then realizing, man, this thing has earnings in 2-3 weeks, and the implied volatility expansion is really going to eat into my theta decay, so actually, I'm going to pass. And it's also the difference between understanding what kind of market you are in. Am I in a quiet market right now? Am I in a wild market right now? Like what kind of daily moves should I expect in the market? And then what kind of daily moves should I be expecting in my portfolio? Depending on how I'm positioned, bullish, bearish, how much deltas I'm carrying relative to the overall market. Like this all comes with market awareness. And if you keep putting your reps in, it will all start to happen automatically. And we'll see you guys next time.
What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade management, and closing order. In this video, we are going to cover an iron condor. All right, so we had a little bit of a sell-off in the markets here. NASDAQ and the E-minis right now, basically unchanged. We've had some two-sided action today and certainly over in the overnight session. But you can see here on Tuesday, big move in the E-minis, 100 points-ish to the downside. NASDAQ was down a couple hundred and has fallen back to kind of the middle of where it's been trading. For me, I think it's an interesting time, especially because I have so few positions on, to put on a little bit wider core sort of position here in this Johnny Trader portfolio. With this pop in volatility, we can see volatility futures currently hovering around 19. They have come in slightly here, but you can see we got a nice pop in volatility. So for me, I'm going to look at either the Qs or SPY. I think because I did the Qs on the SPY on the last trade, I think I'm going to go to the Qs instead just to do a little bit something different here. So I'm going to go to the October expiration, 44 days to go till expiration. It's exactly our time frame here that we typically target, 40 to 50 days. For this spread, I'm going to go around a 20 or 25 delta option. So let's call it the 435 on the downside to put that into perspective. That's basically at the lows that we had in the August bloodbath of sorts. On the upside, we're going to go to the 485 here. We'll make it exactly 24 deltas on either side to put that into perspective. It's near the top of the range of where we kind of bounced off of in this recent rally. And for this position, because I have so little capital being used, I'm going to put a little bit of extra risk on this position and go with a 15-point wide spread as opposed to my normal 10-point wide spread. So this pop in volatility has kind of led me to this decision as well, just because I want to get a wider spread to take advantage of more of that implied volatility that has been pumped into the market here in the last day or so. So on the downside, I would go to the 420 strike. On the upside, we would be looking at the even 500 strike. And so you'll see at about 45 days to go till expiration, decent IV rank, implied volatility at 25%, using somewhere around the 20 or 25 delta options, you're going to collect right around 1/3 the width of the strikes. I'm here at 482. It's a little bit less than 1/3 the width. I'm going to be using about $1,000 in buying power on this position, so it's a much bigger position. I would try to manage this at about a $100 winner, maybe $125 or $150 profit, depending on how quick that happens. But really just looking to get on some short premium here into a little bit of a pop in volatility and a dip in the market. So we're going to put this on. We'll see if we get filled here at 484. It's the mid price currently. If we don't get filled, we'll cancel and replace that order. We'll go down to 482 here. There we go. We got filled at 482 on this 15-point wide iron condor in the NASDAQ. The NASDAQ is up 200 points today. It's been very strong over the last couple weeks here and has tested my call side here. So if we go to the NASDAQ, QQQ, which is the NASDAQ ETF, you can see I'm right at the call spread here on the upside, the 485, 500 call spread. If we look at my order chains here, and this goes back a little while, so we have to adjust that to the 60-day. This goes back all the way to the beginning part of September. I did this at 482, currently marked at 644, which means I'm down $162 marked right now. So this position, the put spread is basically worthless. When we look to roll these positions, the position we're going to address first is the closer at the money spread. And that's because this spread will move much more in terms of value than this put spread. If the ETF or the stock were to drop $5 or $10, this put spread might go from what is a 9-cent debit to a 20-cent debit. Whereas a $5 or $10 up move for this spread is going to go from a $6 and change position to a $8, $9, $10 position. And so this spread will move a lot faster than that out of the money put spread. So when we're managing these positions, we're always doing the closer at the money position. So we're going to take this. We're going to buy back our spread that we're short. It's going to cost us a debit to do that. We could roll to the same strikes. We'll do this for a pretty decent credit here of $1.80. If you wanted to, you could adjust the strikes a little bit, lean a little bit less directional, go to something like the 495.05. You could go to the 495.510 if you really wanted to flatten out a little bit of delta. I think that's actually what I'm going to do here, because I'm going to do a roll and collect a credit on that roll as well. So I'm kind of massaging my deltas a little bit here, going from a position, and you can see I'm picking up long deltas here with this roll. I'm going with a position that's right at the money to a slightly out of the money position here. Not a ton, but a little bit. And you can see the big issue with iron condors and rolling iron condors, unlike a naked position, when you roll, you're actually going to temporarily use more buying power than you are using in the at the entry. And that's because you now, with this roll, I would have a call spread in this expiration and a put spread in this expiration, and they both be margined. If you need to get rid of that, and you can only route up to four legs in a single transaction. If you're worried about that buying power expansion, or you don't have enough capital to make that transaction, what you would do first would be to buy back this put, the short put, which will take off that risk on that position for you to roll for a net no additional buying power. So it's not an issue for me here, so I'm just going to make the roll, and then we'll close out of the put spread. We'll do the put spread roll by itself, but if you need to, you buy back that short put and then roll the call spread in this situation. All right, so we're going to do this for a small debit. We're going to see if we get filled at this 34-cent debit. Let's move this to 36. There we go. So we got filled at a 36-cent debit. Now we're going to take our put spread and we're going to get back with this roll our $1,500 in buying power. It'll put us back to what we were at before. And so I'm leaning short about 20-ish deltas. So I'm trying to pick up maybe 10 deltas on this roll just so that I can lean a little bit directional, as opposed to flattening my delta out totally by going to an equal delta, 20-ish delta position. So I'm going to look at this 455 strike. It's right at about a 20 delta. And then I'm going to buy this 440 strike. So this will pick up about 7 deltas. It'll reduce my overall delta on the position about in half, because I'm short about 18 deltas, so a little bit a third between friends. Reducing a little bit of delta with this roll here. I'm going to do it at $1.50, depending on where we get filled here, which will give me a net total credit on this roll of somewhere around $1.20. Put me at like a $6 or $5.70-ish cent net credit on this position. So let's get filled here. Let's see if we get filled at 146. And you can see the buying power effect. I'm getting all that back, which I used on the initial roll of that call spread. There we go. We got filled at 153. Puts us at about a $6 credit here, $5.99. It's currently marked at $7.77, so I'm out 170 some odd dollars here. Just trying to manage this position, give myself a little bit more time to be right. And again, didn't add any additional risk to the position, actually reduced my overall risk because I collected more premium on that. So we'll see if that works over the next couple weeks. Just need a sideways move here. That would be perfect for this position. We are a little bit of a loser at this point in the trade. We've gotten a little bit of a pullback to pull up the table here and just look at where this position is. We're in November, 23 days to go till expiration. The call spread is now slightly out of the money. The stock, or the ETF, I should say, is down $4 and change. So it was right around $4.96 at the last close. So you have two options here. So you could take this position and roll out to December, which I don't hate the idea of doing. December, 58 days to go till expiration, certainly on the table. For me, with an iron condor type position, I tend to want to try and bail out of this position, meaning I want to get, basically a scratch or maybe a small profit on this trade and move on to a fresh position at some point in the next week or two. So for me to do that, I need to roll up this put spread, collect a little bit more premium, and hopefully get some more chop in this range through the next week or two. So I'm going to take this position rather than rolling it out in time. I'm going to take this position, this put spread, which hasn't really moved that much into this move. We can go to the change button here. It's moved about 15 cents, and I'm just ballparking that based on the change here. This long option has increased by 25 cents, which is a positive for this option. This option has increased by 43 cents, which is a negative against my position. Net, it's about a 15, 18 cent change. So not all that much. On the call side, this spread has moved almost $1.20-ish. So I've gained back about $100 today just on this move. A nice move for what I needed for this position. So now we'll change this back to delta. And so I do have about 20-ish deltas on the upside. So with this roll, I want to pick up like somewhere between 25 or 50% of a delta reduction. So I want to pick up 5 or 10 deltas. So this the delta of this position is about 5. If we roll up to like the 480, 465, that'll pick up a net of 8 long deltas. So this will put me, instead of being short 20 deltas or so on this position, I'll be short only about 10 deltas on this position. I'm going to collect a decent credit here of $1.93, which will put my basis in the overall position at almost $8 here, which will give us sort of an iron fly type risk profile here. I will have to hold this for a pretty decent amount of time if I do those strikes, which is fine. I'm fine with. I'm trying to get to a scratch on this trade. So we'll see if we can get $1.92 on this, and we'll see how our order chains look after that. So we'll adjust this to 190. You can see the market's rallying, which is going against my roll because my roll is a long delta roll as opposed to a short delta roll, there we go. So we got filled at $1.89. That puts our total credit at $7.88 here. We have a pretty tight range to hit between $4.80 and $4.95. Ideally, we get about a week or two of chop between these strikes. And this position, I probably won't be profitable on, but if I could get this down to like $8 and exit this for a scratch or a negligible amount of loss, that would be a home run for this position, especially because we put this trade on when the ETF was at 460. So hopefully we get that to work over the next week or two, see what happens, and we can always roll this out to December if we need to. And so this position is now basically a scratch. It's a small loser, 68-cent loser here. We're going to take this position into what was a gift of a move this morning, and we're going to close it out and roll into December, into a brand new position. So sometimes you get these positions where you've managed it, you've rolled, you've done all this stuff. This position was a $500, $600, $700 loser. I mean, we could look at just the price of the NASDAQ when we did this trade. We did it at 460. We had rolls at 487. We did rolls at 487 again. We had the roll out in time at 491. So stock the ETF has gone significantly higher. We can look at implied volatility as well. We've had a spike in implied volatility and then a little bit of a contraction here. You could see the implied volatility is now sitting at 27%. So we've had another pop in volatility. That'll help us a little bit. If we look at December, it's up to about 25-ish here. So this position, we've done all we could to get back to basically a scratch or a very small loss here. You certainly could sit with the position if you wanted to and take a little bit of risk into the November expiration. For me, I'm just looking to close this position, move on, and put something fresh on in December that's a little bit further out of the money, a little bit higher probability trade. So with an iron condor roll, so to speak, you have to close the position like this, or you could roll this as a spread. Let's actually do that. We're going to roll this as a spread. So we're going to take this 495, 510. We're going to roll out to December. Let's roll to the 500 and we'll go to the 515. You know what? Let's do it, but based on delta. So we'll go to the delta. We'll go to the 30-ish delta. So we'll say the 510, 525. So we'll do this for a small debit. This will cost us about $1 to do this. I'm hoping to roll the put spread for maybe around $1 or so in credit here. So we'll roll this for $1. It is going to use a little bit extra buying power because I'm rolling just 1/2 of the spread. So it is going to momentarily use a little bit of extra capital. I'm going to get that back on this roll, on the put roll. So we're going to lean a little bit more directional on the put. So we'll keep the put spread around a 30. We're going to lean a little bit long here into this dip. 475, 450. So this will net us a small credit. So we're going to lean a little bit long into this move. You'll see I get my some of my buying power back here on this move. So I'll be $15 wide on the upside, $15 on the downside. We're going to do this for a small net debit. Let's go to the, there we go. So we'll move this to the 470, 455, a little bit, tiny bit closer on the put side, a little bit more room to run on the upside. It's going to put us in this position basically at a $6 and change net credit, but it'll give us a little bit of a wider range to hit here. So we'll roll this for 43. We'll see if we can get 44.50, 44, 45. Come on. There we go. About to cancel replays. All right, so we're rolling this out to December. We're doing it for a net $1.50-ish debit. We've still got a total net credit on this position of 641. So it gives us about 1/3 the width of strikes, a little bit more than that. A little bit more than that. So the total on this through all the rolls, 461. We'll see if that works out over the next couple weeks here. 470, 510 is where our short strikes are. We've gotten back to a pretty decent profit here. I mean, considering the adjustments we've had to make, we started with the 485, 500 spread on the call side, 15 points wide, which was basically fully in the money up until Friday's sell-off, right? So $1,500 of value in that call side. Let's just call it a $500 or $600 loss at one point that we've battled back to a $100 win. These are the sort of trades that we look back on and we really get most of our value back from losing trades like this. It's trades that you turn from $500 or $600 losers into a scratch or maybe a small winner. Those are the biggest value changes to your portfolio versus the strangle that you put on for $2 and you make $100 on it and you close it and you were never tested and you move on to the next trade. Those trades you expect to happen. The trades like this where they're big losing positions that you turn into a scratch or a winning position are where you make most of your value back in trading. So this one, it's time to go on this trade. We've managed it. We've done good here. It's a great example of an iron condor management and how you can kind of turn a junky position into an okay position if you do get a little bit of a move in your favor here. So we're going to take the money and run here, as they say. So we'll start this at 531 and see if we get filled. And we can work our way up from here. 533, 535. Oh, got filled as I was adjusting the order. That's awesome. All right, so we're out. $5.33 debit. We have rolled this position many, many times and exited for a $100 profit, a little bit over $108. So got the move that we needed ultimately, but some good management throughout the trade, and we got paid in the end. So that's a good little adjustments that we've made throughout the trade, and a nice little profit to end. What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, we are going to cover a naked put. One stock that I'm kind of looking at here is Micron, MU. It's a stock that has pretty high implied volatility. You can see a 39 IV rank when you look at monthly implied volatility, 50, 60 handle. Good, interesting spot to be here in terms of implied volatility. The stock has had a nice bounce, given a little bit up today, but it's basically near the lows. When we look at the 52-week low here, it traded at 61.54, which was around this time here just a couple weeks ago. So it's basically at lows, and with high implied volatility, I think it's an interesting spot to put on just a naked put here in a Johnny Trader portfolio. This portfolio is small, 5 to 10K account. So, using $600 or $700 in buying power is well within my range of possible positions here, and is typically what I look to put on in terms of buying power for my positions in this account. So when we look at this order chain, or option chain, I should say here, I typically go to somewhere around a 20 to 30 delta, depending on how directional you want to be with the position. So for me on the downside, I'm just looking at a naked put here. I'm thinking maybe we do, and here you could see all the options trade a ton. So there's no liquidity issues here. 5-cent wide bid-ask spreads. It's really a good spot to be here in terms of liquidity. For me, I'm going to play into this downside move, a 3-point downside move. I'm going to look at the 65 strike put. It trades at about $2.50. You can see I use about $650 in buying power. It gives me a break even that's basically at the 52-week low, a little bit above that, but for all intents and purposes, right there at basically the lows that we've seen this year. So $2.50, pretty decent credit there. I'm going to go ahead and ship this one off at $2.50 and see if we get filled. And there we go, $2.50 on this naked put on the downside, $600, $650 in buying power here. Stick around because we are going to have to manage this one moving forward. All right, so we've got an interesting situation here, a very nice situation to be in for our position here. We had a Micron short put that we placed in June, 51 days until expiration, just a handful of hours ago. Now, it's a very nice profitable trade at this point, $57 it has moved. The stock has rallied about $2 since we placed this trade, but the two things I wanted to highlight are just how much volatility has changed from the lows of the day to where we are now. So when we right click on this order, we did this at 8:57 Central. It's now about almost 2, so we got about an hour left of the day here. We're going to look at this market snapshot. So you can see when we put this trade on, it was trading about 74. The stock has rallied, which has really helped when you are short a put. But let's look at what the implied volatility rank was. So we had an IV rank at 40. It's now at 36. May not seem like a huge change, but it's about 10% move in volatility. When you look at the actual implied volatility of this expiration at 57% right now, when we placed this trade this morning, it was at about 60%. So we've had 3 full vol points and a couple dollar move, which is, benefited from our delta exposure on the short put. The short put is long delta, about 20 or 30 deltas at the time. But really what we're getting a lot of here is volatility. Volatility contracting significantly with the addition of an upside move has moved this option 50, 60 cents already, just in a matter of hours. So we're going to take advantage of this move, and typically you don't expect this to happen, of course. But when it does, I tend to be pretty aggressive with my trades. If I sold this put and it loses, 15, 20% of its value in just a couple hours, it's time to go. You can always reload if it does go lower. And if it does, maybe we'll have another video on that. So we're going to take the profits on this trade and move on. A huge vol crush intraday, as well as a move in our favor. It was both the things that we really needed to happen here in the next 51 days. We got them in just a couple hours. So we're going to take the profits and run on this trade. We'll try a 193. work our way up on this one. All right, so we got filled at $1.94 on that short put. Nice vol crush intraday, a little bit of a directional move, well-timed trade. Sometimes you have those for a little Johnny trade there. $56 profit on that trade. What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade management, and closing order. In this video, we are going to cover an iron condor. We've got a VIX around 24 or 25 right now. It's not a typical spot that we get volatility, right? So volatility typically spikes and then kind of mean reverts back to lows and clusters near the lower end of where it's been trading. 24 is a relatively high volatility. We've seen 30 in the last couple weeks. We've seen the 20s in the last couple weeks, but it's remained relatively high. I'm looking to take advantage of that higher implied volatility. So I'm going to go to SPY. It's just the market ETF, S&P 500. I'm going to do a wide iron condor here to kind of capture some of that volatility, but use a little bit more capital than I typically do. So I'm going to go out to May here, 60 days to go till expiration, because I don't know how long this volatility is going to stay around, but I know that over time it is bound to contract at least in some way. And so we're going to play for that. I'm going to sell somewhere around a 20 delta for this short option. You're going 60 days out in time, so there's a lot of duration left in this trade. Unless you get that short-term vol contraction, this position could move a lot, and we'll see that hopefully play out. So I'm going to look at the 20 delta short option here on the put side, and we're going to go 15 points wide. So this puts us at 615, 600 here on the put side. On the upside, I'm going to do the same exercise. We'll go to the 20 delta. It's about the 707. And I'm going to go 15 points wide. That puts us at the 22. Now, we have a little bit of a problem here. We have $5 wide spreads above 720. So by moving to the 725 strike, we're actually going to lean a little bit more short delta than you would if you were equal with on either side. It's also going to use a little bit more buying power. So the question becomes, do we adjust this, let's say to the 705, 720, or do we stay with that wider spread? I think for me, I'm gonna move this strike closer on both sides. I'm gonna move to the 22 strike on the short call, the 705, and then I'm gonna buy the 720 on the upside. It's about a 10 delta there. On the downside, I'm going to move this and adjust this delta as well. I'm going to move to the 625, and I'm going to go to the 610 for the long option. Now you can see this still leans you slightly short delta, and that's because the S&P 500 has put skew. So your put spread, even though they're at basically the same delta for the short options, that long option is going to be a meatier, heavier delta on the put side versus the call side. And you can see that here, the put delta is an 18 delta. And on the upside, the call delta that we're buying is an 11 delta. That lines up exactly with our 5, 6, 7 short deltas that we have on this position. So we're selling the same strike for the short options in terms of delta. The width of the spread is defined at 15 points wide, but because that long option on the call side is a lower delta, it's going to lean you slightly short delta on this position. So this trade looks like it's going to be a mid-price around 540 here. We'll try and get filled here and use about $900 in buying power. So let's just adjust this slightly. So we got filled there. We got filled at 538 on that iron condor out in May. It's a longer duration trade. Stick around though, because we might have to manage this thing going forward, and you gotta see this. So we've got a position here to manage in SPY. We put this position on about 2 weeks ago into really kind of the middle of the start of the Iran conflict that we're having currently. The S&P 500 has had some wild action over the last couple weeks here, last 2 weeks specifically, going from 670 on SPY down to 630 and change here. It's been a pretty volatile market Implied volatility in the VIX itself has been super, super high. It's come in recently in the last 2 days with the bounce in the market that we've seen. It's gone from, the 30 handle down to 23 and change what we're sitting at right now. Now, the SPY position that we had on, we put it on the 14th, and we could pull up just the market snapshots here. If you right click on the order chains here on the right side menu, it'll give you a little bit about the position that we put on here. So when we put this trade on, we put this on the 16th, the 16th there. We did it when SPY was trading at about 670. We're sitting here at 658. So we've had a little bit of a move down net, but a huge range throughout that duration, that 2-week duration there. When you look at implied volatility, an IV index of 24.5 is when we put this trade on. If we go to the trade page, you'll see that volatility has come in pretty significantly here, about a full point on the volatility of that expiration. So that volatility, we are short volatility on this position, and so volatility has come in. That has certainly helped us as well. Combine that with a little bit of time decay, and net after the moves is basically a sideways move from when we put this trade on, a slightly lower. It leads us to a profitable position. So we did a 15-point wide spread on each side of the market here, kind of a quote-unquote core position into what was a very volatile period of time and a pop in volatility there. So we're going to just take the money and run on this trade. You can see most of the value has come out of this call spread. So this call spread here is marked at about 90 cents, whereas the put side is still trading at about $2 and change. Now you might ask, why is that? Well, relative to where the stock is right now, the skew is to the downside. The call side, we put the trade on with high volatility. It was kind of neutral-ish on the position. We actually currently have long delta on this position because there's so much skew on the downside put. So the downside put spread is still holding a lot of value, but the spread itself has come in from 538 and is currently marked at 312, a $200 or so profit here. So we're going to just take the money and run on a position that has worked really, really quick. We're at about 40, almost 50% of the max profit here in just a couple of days or weeks. So we're going to route this order here. We'll see if we get filled here at 311. We can just cancel and replace this order from the trade page here. We're going to just try and get filled here. So there we go. We got filled there at 314 on this iron condor, and nets out to be about a $224 profit on this wide iron condor, sort of core position for the Johnny Trader portfolio. So a good win for us, and on to the next one.
Oil is testing $100 a barrel again, and equity markets are proving vulnerable. Traders are asking, how do you interpret the charts when there's so much volatility in the background? Today, we have the perfect guest. She's worked at Cohen, Cargill, and she was the first technical analyst ever hired by Goldman Sachs. Now with The Street, we welcome Helene Meisler to Tasty Talk. Helene, welcome.
Good morning. Thank you for having me.
I'm so happy to have you here. First things first. You were one of the first chartists I followed on Twitter when I joined the platform.
Trade CME futures with a single click, from micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What is going on, everybody? Welcome back to Risk and Reward. Today's Friday. We've had a pretty volatile week. We got volatility still collapsing a little bit here. But before we get into anything, today we got Brother Glenn with us today. How we doing, Glenn?
Fantastic. Happy Friday.
Happy Friday, bro.
Friday.
Yeah. How we feeling? What's new with you this week? It's fun that we finally get to hop on for the first time together. So
I know. Week's been good. Short week.
Yeah.
Not only holiday Monday. I took the next day off. Came back from New York.
How was that?
Tremendous. Those people, they just leave the house, spend money. I'm all out of shekels.
Yeah.
Got paid today though, so I think we're gonna.
There you go. You can make a round trip.
Yeah. JP Morgan Chase has not yet seized all my assets.
Okay.
But God, they want to.
Yeah.
But yeah, we're looking at 80 degrees this weekend here in Chicago.
Yeah.
Not much to complain about. How about yourself?
Yeah, no, not much to complain about. It was a shorter week this week. I wasn't in New York, but to piggyback off of that, did you see the new JP Morgan building yet? Were you able to see that in person?
No, I actually I didn't go. I do.
Yeah.
I have a friend who works there and said it's
insane.
Ridiculous. Yeah.
Okay.
But no, it's kind of hard to make your way down there to the point of Manhattan.
Yeah.
But I couldn't even tell you where all we went.
Yeah.
Just felt like we walked everywhere.
That's dope.
So far.
Never been to New York yet, but I'm looking forward to visiting sometime. So I haven't really got to.
It's worth it only because obviously Chicago, one of the top 5 biggest cities. You go to New York and it feels 30 times bigger than Chicago. Like it's almost embarrassing.
Yeah.
Like, I like Chicago. I like living here.
Yeah, I feel you.
But it does feel, you're like, oh man,
No.
welcome to the show.
Yeah. No, I hear you. And it's funny because I didn't grow up in a city. So whenever I came to Chicago for the first time, it felt like I was in a concrete jungle. But that's with no prior experience, even going to New York or any other super large condensed city for that matter. So
Exactly.
it's a vibe. Yeah. What's going on, guys? What's going on, Nice Boy? Let us know what you guys are looking at. Let us know what you're trading today. We're going to do a little tour to market. Going to get Glenn's thoughts on just a couple of the positions that we have in the portfolio today. And then also, I want to touch back on the housing market conversation we briefly touched on yesterday. I was just kind of getting everybody's perspective of their kind of thoughts and opinions from the Gen Z perspective, millennials. I almost left out Gen X. They almost get forgotten all the time. And then we got the boomers too. So with that being said, we can go ahead and jump right into the Tasty platform. What's going on, Ranch? What's going on, guys? Another all-time high, an insane rally we put in as the market opened up this morning. So what are your thoughts on, what's new? What are your thoughts on this insane bull rally? Is this the craziest bull rally we'll probably see in the next decade?
Can't touch this. No. Yeah, I mean, No, come on.
No, that's a classic. It's a classic.
There's no bad news today.
Yeah.
I mean, you can hardly act surprised, although, of course, that's always the first thing that comes to mind is really again. But at this point, you're either part of the party or fighting the party, and
or missing the party.
Or missing the party. That's an important sector of the population. I feel like. The smart move a while back was just to start liquidating a little bit. Could still be smart, but right now it's not looking like that's the best option. Yeah, this NASDAQ chart looking absolutely ridiculous.
Insane.
One thing I've been reflecting on in this NASDAQ rally, and our good friend Kevin, who hopped on with me and Mike the other day, kind of reminded me that this NASDAQ is no longer, or maybe it hasn't been for a while, purely tech, and is now comprised of a ton of tech adjacent companies, like pretty much everything is, but just the breadth of this NASDAQ index is not something to underestimate at all.
No, not at all. And it doesn't even look like names like Micron are slowing down. I think that is one of the crazier names we've seen in the last couple months too.
Ridiculous.
Yeah, absolutely ridiculous. There's a couple positions that we have on. I really wish I would have been able to really ride this move up pretty much the entire time. I pretty much missed the party. But we got a couple things on in the portfolio. We got a meta position, sold an out of the money put spread there. We're at just about 20 days left to expiration. It's nice that we finally got a little bit of a bump a couple days ago in meta. It was a little bit quiet, kind of just ranging for the last couple weeks or the last maybe 30 days. So might look to get out of that one. And then also we have a QQQ put that actually expires by the end of today. So I don't know, maybe you can do some selling in your portfolio for me, Glenn, and then we can get QQQ all the way back down to 705 by the end of today. That'd be very helpful.
All right, I'll step in, take this down for you.
I'd appreciate it. And then we also sold an out-of-the-money call spread on QQQ that we've only had on for maybe a day or two. 49 days left till expiration, and really not looking for much here. Usually a lot more of the aggressive trades are a little bit more short-term, so for the most part, the portfolio's been pretty quiet on my end and really just trying to wait for the music to stop because I don't know how sustainable a 5,000-point rally in 45 to 60 days is going to be, but at the same time, won't try and pick off the top of the market either. So it's going to be a game of patience, really. It's a tough market to just watch in those games.
That's why I just closed my eyes.
Yeah, I think that's going to be the strategy.
Meta, an interesting one, definitely a laggard as of late. Totally understand the trade from a tape action perspective and, what's on the horizon. Yeah. Are you personally going to pay for Instagram?
No.
Or their, I guess part of the pitch, Meta 1 Plus.
Yeah, what was it?
Meta 1 Plus Max Pro.
Okay.
It comes with a chatbot feature, so I think they're trying to roll some things into
like you
one
get,
offering, yeah.
Okay.
But a subscription model.
Okay,
which will be interesting.
Maybe similar to what Elon was doing with Twitter in a way?
Yeah. But I don't know how successful that has been.
Yeah. I don't know. Would you pay for something like that?
No, I would try not to.
Yeah.
I've
out of spite?
No, not at all. Just already have been trying to, limit social media consumption because, God, they nailed it.
Yeah, they did.
With the endless scroll.
Yeah. That dopamine. I mean, they really
unforgivable.
Got the psychology.
Yeah.
Yeah.
They cracked that code. So a paid barrier, I'd welcome it. Wouldn't participate, but I'm absolutely sure enough people would. And I see a definite bull case for your position. You should be good with that.
It's funny No, I was just gonna say it's funny that you bring up the endless scrolling because I remember when I first downloaded TikTok, I think it was near the end of 2019. And I remember I had some friends that were like, yo, do you ever just catch yourself mindlessly scrolling on TikTok? And I remember I was like, no, I don't even have that TikTok. What is that? So anyways.
Beginning of the end.
Exactly. It's exactly what I was going for there. Exactly. Paul says selling MU, 0DTE, 840 put, 12 cents of free money. Let's go ahead and check out MU. MU's one I really want to stock a little bit. I'm not trying to be the hero in this one, but whenever we do get a little bit of a crack, I really wouldn't mind getting on a little bit of short delta with respect to risk, of course, just because the range most definitely is there, even if we slide another 100 points, 200 points, whenever that wants to happen. But we got Paul over here, looking at some 0DTEs on Micron for the day.
Free money. Yeah. I mean, it looks untouchable right now, but yeah, I mean, the dangerous thing for trading this for someone that's been looking at MU for, even 6 months is now you just have to deal with the fact that this is an expensive stock now.
Almost most strategies are expensive.
Exactly. And you risk kind of what I've run into when you start to try and transfer strategies across symbols.
Yeah.
You end up taking kind of risks that or alterations because of how expensive the stock is in my little pea shooter account. And that's just something to be aware of, that even within the same symbol, not worth changing your strategy sometimes just because of buying power limitations, for example. But yeah, it should look pretty good.
Yeah.
Nothing on the slate for the next 3 hours that, in my mind, would cause this to sink.
Yeah, especially with NASDAQ trading at the highs. I forget what Micron is weighted, but I know it's up there. Not as large as some of the other ones, but, a good percentage for sure. It says we got the E&G show just with another G. Yeah, we got big money Glenn right now, G money in the house. I got to ask Gus how Poland was whenever he comes back. Have you ever been over around those parts? Or
no, haven't been up that way, only to the more touristy parts of Europe.
Got you.
Italy.
I need to go there. It's on the bucket list.
Yeah.
There's a lot of bucket lists. I'm not a big traveler, so it's going to be nice that towards the later years, I'm still young, but towards the later years, I'll have a knack for all that. Haven't got to
Yeah,
There's
well,
a time and place.
I agree, and it's an expensive time in all places
Most definitely.
right now, especially travel. Yeah, Glenn does not equal Gus. I know. Just doing my part to steward his absence.
No, brother.
Less hair. I still got some hair.
You got a good head of hair. Glenn actually got one of the best flows in the office, if anybody doesn't know, bro. And he
Thank you.
knows it. He doesn't say, but he knows. It's a
But
good flow.
It's missing the Gus stash.
It's a good flow. No, let's just quickly go over where volatility is sitting at right now, because if there's a couple decent things to throw into the mix before we head out for the weekend, I'm not opposed if it looks attractive enough. But with the market making another high today, we got volatility collapsing a little bit. And I will say, Glenn, I'm pretty surprised that volatility isn't lower than where it's at, given the type of run to the upside that we'd seen. And I think that looking at some of the QQQ options too and the SPY options, the call side options were going for a little bit more money. So we kind of saw some call skew in some of the options, which was new, seeing that price or that risk being priced into the upside. That's something we see every day.
Yeah, I mean, the only kind of where my mind goes when we're thinking about VIX in particular is, you know, the market's traded all week on good news from Iran and every other good earnings play. This one absolutely
Insane.
at the forefront.
Yeah.
But heading into the weekend, I mean, I'm sure you're tired of this. I am as well, that now 3 months talking about the Iran-US conflict. It does seem like there is some air of finality, or at least we've priced in a lot of it this week. So if you're looking at VIX this weekend, it's hard to imagine that it could get crushed down anymore. But when you think about risk reward, there could be potential for, you know, a possible weekend move.
Yeah.
If things don't go well, you could see a lot of room to the upside in that VIX, because you said so compressed, eerily so.
Yeah.
But if you're Dell, not much to be worried about.
Yeah, no, 100%. I think this was another one I think Trump had spoke about, I think, a few months back. So, you know, his stock picks are pretty good.
Turns out. That's weird.
Yeah.
No, the funniest storyline, I think, this, of course, Dell, probably a fantastic company, and deserves some of this praise, but is the market reaction for Palantir today.
Okay.
On what news? Only the news that Wall Street Bets and other accounts pointing to this as the next Dell, because if you'll remember, about a week or a month ago, Trump truthing about Palantir. Palantir's a great company, in parentheses, ticker.
The LTR, yeah.
Yeah. And so a lot of hype today saying that if you're upset you missed the now seemingly obvious Dell trade, this one might be next. Contracts OTW.
Yeah. I mean, these contracts, and I mean, these underlyings aren't just moving a few points. I mean, they're sending it to the upside. With LTR almost up 10% on the day. So,
and compounding a couple good days here.
Yeah, 100%.
For being really compressed. So I know Jamal's got a Super Bowl on this one. He's dancing in his home office right now.
Is that Palantir? Oh, that's nice.
So all tailwinds welcome, no matter where they come from.
100%. I know I'll definitely be reconsidering a position if Donald Trump is putting the ticker names in some of the tweets. I mean, that's one of the most obvious call outs I think you can get. I can't be missing them from here on out. With that being said, we got Dell up about 30% on the day so far. We got OKTA up about 27%, just right behind. SPCE, this is one that I haven't looked at in quite some time, but I know it's catching a lot of headwinds and a lot of volatility here.
Man.
Cheaper underlying. Just a few days ago, May 21st, we were trading at $2.46. So we've pretty much doubled, 100% run in the last 7 days over here on SPCE.
That's pretty good.
Pretty solid run, a cheaper underlying. Are you a little bit more fond of cheaper stocks, kind of mid-range, or just those solid blue, whatever's in the Mag 7? What do you find yourself gravitating towards more often?
Yeah, I mean, I feel like you can have many different
product indifferent though.
Exactly. But I think about it differently when it comes to options, a little bit more agnostic, of course, just looking more towards liquidity. When you are stock picking in this environment where you do have on this whole AI craze. Obviously, there is merit to favoring some of these smaller valued companies just so that you can potentially own more shares and capitalize greater on some of these compounding moves like we've seen across the technology sector. But that's kind of how I'm thinking about it, but trying not to chase too much.
I hear you. Is there anything specifically on your radar? What is on Glenn's radar?
Well, today it's interesting. Had that unfortunate accident with Blue Origin overnight.
Actually, if you don't mind catching me up,
So
what happened over there?
They tested some rocket that was supposed to send Amazon intelligence stuff, satellites, what have you. No one was hurt, but it did send space stocks crashing this morning. And so I'm looking at something like a ASTS, things that kind of tailwinds the opposite direction that are getting pretty banged up.
Oh, yeah.
Filling the gap here from the open, it could be a potential, opportunity to speculate, get a cheaper price if this is a one-off. I at the same time, I can't begin to understand all the implications of, I know this, at least this rocket crash did push back something for NASA in 2028. Not sure what the whole fallout is, but yeah, messing up nice boys space hype. Messed up everybody's space hype.
Yeah, I know we were riding the wave there. I forget when the IPO is sometime this summer. And I was talking with Gus the other day. It must be nice to be like a junior banker and you somehow get the opportunity to be a part of one of the potential largest IPOs in history and like getting that under your belt on your resume right out of college. Like just imagine being right spot, right time, junior banker.
We'll see how it shakes out because it has equal, if not more, opportunity to
That's a good point.
become a story in the other direction. How the hell do you value this?
Yeah, that's true.
At 30 trillion, sinks immediately.
Yeah, no, those are some lofty goals for sure. For sure. Nice Boy is considering buying a little bit more. TV media chanting war while curtain comes undone is the biggest sell-off opportunity since 22. Last time traded PLTR, it worked, but not without some pain. Yeah, I haven't traded PLTR in some time. I remember I had gotten a little bit of short delta on, I think around the time when Gus was getting a little bit of short delta on, and I think Michael Burry was kind of leading the charge of the hate train. Palantir a little bit there. Seems to be slowing down. Seems to be a little bit more range bound considering the last few months over here in Palantir, but we're not stair-stepping lower like we were in the beginning of the year.
Yeah, I mean, if anything else, 130 as a floor has held up the past 3 months now. You've got almost the full 3-month range filled to the upside. A lot potentially to be done here based on historic price action, but
volatility's there.
Yeah, also a divisive company nevertheless. So
No, 100%. I know with Alex Karp being a little bit more vocal, I know he's adding a little bit more personality. Like, a lot of people have a lot of feelings towards him, and I see why. He comes out, I think, trying to rub you the wrong way a little bit. But I also think it's interesting how the CEOs are starting to come out and slap a personality on the company, even NVIDIA and Jensen.
Yeah.
And everything. So
definitely not scared to, but
no, I mean,
hard to blame them for any bit of ego with their kind of run up.
And I mean, when you have contracts with the U.S. government, I mean, that definitely makes you feel another level of safety with your company and that you're not necessarily doing something right, but in terms of being safe, having contracts with the U.S. government definitely helps with that. We got Palo Alto Networks up on the day. Very high IV rank right now, trading about 5 to 6 million shares on the day. 276 stock. What an insane run Palo Alto Networks is actually going on. Runs like these is something that I usually wouldn't hesitate on getting on some short delta. But with how all these underlyings have continued to surpass the moon, I'm so hesitant now, and I don't even want to step in front of those trains.
I don't blame you.
Kaboom for real, Grumpy Mike. So I don't know what short delta you guys are looking at. Let me know what you guys might be getting into, or if you guys are more so just managing your positions heading into this weekend. That weekend risk, though, especially with this administration, I mean, that is definitely something to take into account. I know last weekend we gapped up into a new all-time high, so even carrying some short delta or short positions into the weekend can be so,
definitely a risk.
Break a little bit.
Are you looking primarily at more single name, or does this environment heading into next week have you more confident in sticking to indices, commodities, and a more broad lens?
Yeah, I mean, from a broad lens. So, I mean, I have on a little bit of short delta on QQQ. So it's nice to have something on in there. 49 days left till expiration. But at the same time, I know a lot of the indices are still sitting at the highs. So maybe some of the metals. I know silver and gold was putting in a nice little run yesterday. Haven't checked up on them today.
Big bounce.
Yeah. And I mean, honestly, for me, in my book, if the metals start to rally a little bit more, I'm not opposed to getting on more short delta. Usually whenever we get some pops up to like 90 or 95 or 100, it'll be nice to get some short delta on, just because, not that the market cares about our opinions, but I don't think the metals will make another new high. So I'm going to kind of use that for a little bit of a gauge for the risk to reward playing out. So the metals run a little bit. I think there might be a little bit more range to the downside. I don't know. It's been such a funny year. We got oil going ballistic, got the metals going ballistic. They've been quiet, but definitely a little bit range left, a little bit of meat on the bone.
Yeah, I mean, if anything, what these markets are giving you is more of a range in recent memory, in terms of where the ceiling is certainly, or has been, and where the floor is looking like. And so even getting directionless in one of these markets, so metals, of course, this year, showing no regard for what previous price ranges have been. But now in this new environment, it's nicer to see than only focusing on stock indices that have gone in one direction, trying to time that. But yeah, there's absolutely on a macro level, as we hopefully rotate out of the current geopolitical conflict, it'll be an interesting barometer to see what kind of hype, what kind of speculation gold and silver carry into a new trading environment, because they've been wildly popular under this new elevated rate regime across the board. A non-interest bearing metal is theoretically less attractive. But where do we go from here is the question.
We'll keep it on our radar. I know we got a few moments left. I want to take a quick look at things like Zillow, anything that gives you a little bit of exposure to the housing market. We were talking about yesterday how, the perception of the housing market and what we might want to happen in the housing market is a little bit different and is perceived different depending on the generation that you're in. So I assume you are Gen Z, right?
Yep.
Okay, cool. Because there's some people where you're like, oh, you're actually 28. I could have swore you were like 23, 24 the whole time. So just got to make sure. But I'm curious from your perspective, though, from the housing market perspective, if you were a boomer, would you be doing anything with your assets? Do you blame boomers for not selling their assets? I mean, if you were in that position, what would you do?
No, and I think this is, I try not to blame anyone for any of their rationales, because the bottom line to me is there's no answer across the board, just because of how housing especially has been so regionalized. You're having 4 different trends going on in cities, suburbs, rural areas, and even within urban areas. You have remnants of the COVID flock out, more pronounced in some cities. So every situation very unique. I think what would be top of mind right now for me in this environment would be maybe still beating myself up if I didn't refinance a few years ago, because mortgage rates looking like they're going to stay pretty elevated for the time being. But not a ton of passionate opinion on it. I personally don't anticipate the opportunity to own real estate in the near or medium future. But I also enjoy living in a city, and that's just not on my radar. So
100%.
Yeah,
Things
hopefully we'll get opportunities. Of course, people that are in those older generations have seen a ton of cycles, and perhaps have more nuance for what they were able to do in the previous era and how they're reacting now. But why? What is your main thesis?
I guess to the point that you kind of, I don't really necessarily have such a passionate opinion, but if I were to have an opinion based off of what's happened and how cyclical markets can be in general, even if it's a housing market for that matter, it's a little bit of a slower moving market for sure, not as liquid, not as volatile, but I think the housing market is going to need some type of pullback. I just don't know when that's going to happen, when it's going to come, but I think pullbacks are healthy in any type of market. And I mean, with interest rates being at where they're at, if I had a 2, 3, 4, whatever interest rate, I'm not giving up that interest rate either. I'm going to sit on that forever. So it just really begs the question, like, where will the weakness kind of come in? Or is this going to be an up only, I guess we could say, economy, because everything's going up for the most part.
It'll be something you've never heard of.
Yeah, that's what I'm thinking too. Yeah,
something in the builders.
Yeah, an angle that we just didn't really see coming.
And it'll be a buzzy word as a result, and we'll never forget it.
Then we'll get a Michael Burry 2.0, whoever.
Yeah. Stan, nice, good trade out of you. 11% discount, booyah.
What was that? Some gold or what? What was?
No, a house.
Oh, a house. Okay, okay.
That's a good deal.
That's a big trade.
Yeah,
that's a big trade.
I will, if you want to pass it on, gladly take an equal or greater discount. So just let me know.
Take it. I don't know, those interest rates, those are the golden handcuffs for sure.
Absolutely.
I don't know who wants to get out of those ones. But I know we're coming to a close here. Anything else top of mind you want to leave us with, Glenn? I appreciate you taking the time to come on here. It was really dope that we got to chop it up for a little bit, talk some markets.
Absolutely. Only thing on my radar, if you click on that Tasty FX tab.
Yeah, what you got?
We've got some moving dollar markets.
I apologize. I guess I could have asked you about Forex a little bit.
No, all good. But it's just something to look at if you are thinking about geopolitical risk into the weekend. We've got a softer dollar today running into the weekend. Of course, historical correlation with equities inverse taking shape. But if you're new to the currency space, the highest beta kind of currency pair that's been super active this week, highest correlation among major dollar pairs to gold, crude oil. SP 500 has been the New Zealand dollar, US dollar, and that's up 2% in 2 days. Huge move in the currency space. So that's just something we're monitoring as interest rates continue to stay elevated, where the US sits in that global rate hike landscape. It'll be interesting as we come out of this geopolitical tension, but that's what I'm looking at this weekend.
Yeah, I actually don't trade too many Forex pairs. Maybe one of these days, Gus and I actually have you in and we actually you kind of walk us through a little
100%
startup lesson when it comes down to the Forex pairs.
I'm always here.
All right, say less. Anything else to add before we dip for the day?
No, have a great weekend, guys.
Cool.
Get outside.
Get a tan. Hey, look, I know I can't.
Put sunscreen on.
I know, I've never put on sunscreen before. And I know I was born with a natural tan, but this is pale for me. I promise. This is a little pale for me. With that being said, nice E-Media, nice boy, Rancher, Grumpy Mike, big deal, everybody else. Thanks for taking the time to hang out with us today. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We're back. It's still Friday, May 29th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Ilya Spivak. Ilya, the day has gone on. Oil has fallen and feels like a summer Friday. There's not a lot of enthusiasm in this market one way or the other.
Yeah, it's a bit slow. And I was reminded as I was thinking about this that this is also the month end. We have June on Monday. So
we do.
We do. And so I know it's my favorite month too. It's nothing to do, obviously, with my birthday being in June. Nothing at all.
Doesn't make my top month, but that's July for aforementioned reasons. Go ahead.
Right. And so it's interesting to see because, of course, the market's getting animated by this maybe U.S.-Iran deal. The president laid out all kinds of terms that he needs to see. We still haven't had him triumphantly agree to anything, but the terms he laid out seem like probably not what Iran would want to agree to. And the kind of thing that Iran has blown up before. Famously, Moshtara said that there is no agreement. Moshtara Khamenei, Supreme Leader Jr., he sort of repeatedly has said, ostensibly as a kind of conduit for the voice of the hardliners in the regime, we're not going to give up on nuclear ambitions. That's just not on the table. Meanwhile, the president is very clearly making that a condition. So is the market getting ahead of itself here? Who knows? I'm starting to think that there is the possibility for a buy the rumor, sell the news kind of a thing, as the Baron Rothschild famously quipped, buy the I believe it was buy the cannons, sell the trumpets. If I'm not butchering it, but even then, this sort of concept of the market has already priced in what's about to happen. And when it gets confirmation, when speculation becomes reality, there's just nothing else to do. There's nothing else to put into the price. And that's why you kind of get this meandering response.
Yeah, the meandering is leading to some second half profit taking over the course of today's session. Stocks are off their highs. They're still positive, but there's some decent rotation going on beneath the surface. We can go right to the slides and charts here. Thanks. We find ourselves looking at QQEW. Ilya's up nearly 2% today, right now. NASDAQ is not up nearly 2% right now, and the S&P 500 slipping back below 7,600. But before we get to those charts, we refocus our attention on a macro calendar that gains some steam next week. Two things pop out to me in particular. ISM surveys, both for manufacturing and services. And then on Friday, because it is the third week after the 12th, that is the first Friday, June 5th, where we're going to get our non-farm payrolls report, where job growth may be holding up-ish for now. Is it NFP or bust next week, or do we care more about the PMIs because there's inflation data embedded within?
I think it's to some extent both, right? Because we need essentially to get a pulse on the balance between how the economy is doing versus how much inflation there is on the menu. Because I think the key question for markets here is, all right, well, if we're not going to get rate cuts, then growth better be good. Because we better not need them. Because we're not going to get them. Because inflation is such as a consequence of this war, among other things. Let's be clear. Inflation was already perking up because the economy was solid before this war started. The first quarter was already going to be decent. We saw clearly in the revised GDP numbers, it wasn't going to be a 0.5% growth kind of quarter. Obviously, the fourth quarter last year was an aberration because of the government shutdown. We've come back about halfway in the first quarter. So 2% was the initial expectation. We're down to 1.6 after the revision. Both consumers and business investment take a knockback, but growth does rebound. And so it would be reasonable to think that inflation rebounds too, just on demand pull grounds. So the markets know they're not getting rate cuts. The Fed was, before the war, the Fed was talking about, hey, okay, let's pump the brakes on all these rate cut expectations. We don't think that inflation is going to come down quite as fast as we thought when we were cutting toward the end of 2025. Maybe the labor market doesn't have so much we can do. Maybe it's mostly structural, the weakness there, and demographic, and inflation's a little stickier. Hang on. Right? That was before we struck Iran. So the situation was already going there. And so I think for markets now, it's, okay, we're not getting the rate cuts for sure now. Can we get to a place where we're not going to get a hike because the labor market is not overly hot? And can we get to a place where the economy is good enough that we don't feel like we need cuts and not going to get them? So I think it's a delicate balance. I don't think there is any meaningful reason to think that the ISM numbers won't show explosive inflation. The PMI numbers already showed it from the S&P Global version, and we're going to get those finalized next week. But the collective picture, if it emerges as seems to be coming together, of weak growth but sticky inflation, that is kryptonite if it's bad enough, because then the markets have the worst of all worlds: a weak economy and nothing that the credible policymakers, monetary policymakers in the US can actually do. Because I don't think anybody has a tremendous amount of confidence in what can happen on the fiscal side, especially in a midterm election year. In fact, the thing that might ultimately break sentiment in a very consequential way is, oh no, we need something done on growth, and after the midterms, we're going to have deadlock. So nothing's going to get done. And the Fed can't step in.
Deadlock. We may have to revise
markets like deadlock if things are good. They don't like deadlock if things are not good.
We might have to revise our midterm forecasts given some recent information, but that's for another episode here, Ilya. The Atlanta Fed jobs calculator, in context of this non-farm payrolls report that's coming out on Friday, is telling us that to keep the unemployment rate in check at its current level of 4.3%, assuming the current participation rate of 61.8%, the economy only needs to have, and that's over the next 12 months. So just sustained, stable employment, right? We only need to add 99,477 jobs per month moving forward. So the forecast here is for 96K. This is basically the break-even rate of jobs growth for the economy, given where it stands. It's not good. It's not bad. But it's not a labor market that's melting down either. No. And given where we were,
weakest in 3 months, but tolerable.
There was as we get into this, and we can go over to the charts now, Elia, I want to point out that Torsten Slok over at Apollo sent out his morning research note today, and it was zero evidence of AI-related job losses. He pointed out, can I just open the email here? I think I'm just going to open the email here. Zero evidence of AI-related job losses. The chart below shows the weekly ADP employment data. There is zero evidence lost because of job losses. Instead, many firms are hiring AI implementation experts, and the data I sent about is putting upward pressure on salaries for AI experts and on prices of semiconductors, equipment, and energy. We know that. But the bottom line is that the AI spending boom is stoking both employment and inflation. As a result, non-farm payrolls from May could come in significantly higher than the 95,000 expected for consensus. It's Javon's paradox playing out in real time. Cheaper technology is creating more demand and more jobs. And this is the pop out here, which I'm assuming we're now going to go into because I opened up a link. As that loads, Ilya, here we have it right there. This is the ADP, weekly ADP employment. So it's actually been accelerating here, and it stayed pretty firm throughout the war, which surprised me. I got to give credit. The economy is still holding together.
Yeah. I mean, I think you look at this and you say, right, okay, surely we can see why the second revision of GDP was down, and why it was down in two very particular areas. It wasn't down because of the external sector. No meaningful changes there. It wasn't down because of government spending. No meaningful changes there. Those contributions held pretty steady from the first estimate to the second. The big difference, shocker, consumer spending was revised down because energy and all of the knock-on effects we've now seen in the CPI data. Oh, transportation costs. Oh, freight. Oh, the margins for wholesalers selling lubricants and fuels is surging in the PPI data. Gee, I wonder what that's about. So you can see that. You can see in the retail sales data, you're starting to get a little bit of demand destruction because sales at gas stations collapse in the April numbers, but the price of gas doesn't go down. And the way you count retail sales, because they're not adjusted for inflation, is volume sold times the price. If the price did not go down, but the final number did, what happened? Sales fell. So yes. the actual summation was lower. So it was smaller. So when you look at the sort of architecture of this, you go, okay, well, so the economy is weakening. Okay, business investment was also revised down. That was also weaker. What was that driven by? Well, of course, the data center build out at this point, sort of famously running so fast that it contributed more to GDP than did consumption, even though consumption is by far the largest share, and then some, and business investment is less than a fifth of the overall thing. So you look at this and you go, okay, well, again, here's something that's sensitive to energy, sensitive to input cost. How in the world do you build a data center if you're paying more for the freight to get the materials there, the energy to use them, the labor to do it, because the price of labor is up because of the immigration crackdown and the demographic forces with baby boomers retiring, et cetera, et cetera, et cetera, et cetera. So you already see that the inflation is squeezing the economy very, very clearly. And so it'll be really interesting to see now because, yeah, the economy has held up for now. And maybe that's what gave the markets the luxury to go and dream big dreams about the AI build out without thinking about, well, can we actually get these things done? Like lots of people are saying we're going to spend a bunch of money. The hyperscalers are out there. $750 billion is what we're going to spend this year. Yeah, except close to half of the projects slated for this year have been delayed, at least a year and some more. So are you going to spend it? Just Not in terms of are you actually going to spend the money? Are we going to see the growth impetus of that money this year? Maybe not. And so you start, and the GDP numbers kind of echo that. So you start to see how this becomes a very uncomfortable growth shock downwind. And with oil inventories basically at the bottom of the cup around the world,
they are.
You also kind of see how the energy problem gets worse too.
Well, we're going to talk about that note from the. I posted it last night, but there was a comment made from an Exxon executive, senior vice president of Exxon at the Sanford Bernstein Strategic Decisions Conference, which makes me feel like maybe we should get some more long deltas in oil. But we're going to get there in a minute, Ilya. We have
No, I read that.
90.
I talked about this extensively on Macro Money yesterday. In fact, that was the whole show about like, okay, well, let's say we get
save it for the oil section. Save it for the oil
let's
section.
say we get a deal, and then what?
75.90 here on the S&P 500, 9 points higher right now. Off the highs that we set this morning, right out of the open, 76.11.5. It's another light volume day here, however, so the market's trying to scratch and claw higher. What's interesting is, in my view, Ilya, is the kind of the distribution of what's doing well and what's not doing well here. So you have RSP up by 0.4% and QQEW up nearly 2 right now. That's well above what the market cap weighted indexes futures are doing, 0.1% each on ES and NQ. But then you look to the Russell, and the Russell's actually having a pretty gross session here, down by 0.7%. The sector distribution here, the worst performing sector today is telecom. You talk about end of quarter, maybe that's what's behind this. Telecom has been on an absolute monster run this entire year throughout the Iran war. It never really missed a beat. It kind of just chopped around sideways while everything else was in the blender. It pushed up to a new high just 2 days ago. So maybe it's profit taking. You point out that we are at the end of the month here, which brings us to we could talk about seasonality here for a quick second for the month of June. Past decade for the S&P 500, June has produced a 1.61. And excuse me, that's not the past decade. That's the past 11 years. Rerun that real quick. Past decade, June has produced a 2.02% rally in the S&P 500, 80% of the time. That's followed up by July's 3.29% gain that we've seen over the past decade, 100% of the time. The seasonality, if you kick it back, though, to 2006 to make it a 20-year window, shows that June could be the weak link in the chain. S&P 500 futures only average 0.2% when you encapsulate the 2007, 8, 9, 10, 11 years, which were basically all bad. So kind of pick your poison right now. Not a reason seasonally to be outright bearish per se, but when you have a crowded tape and seasonality that may indicate a bit of a deceleration in some regard, if you're going to be bullish, you still have to do it in a very risk-defined manner. It's not just swimming naked out here in short puts or, out of the money calls. We have to play a somewhat defensive while we're being offensive, so to speak.
Keep your trucks on, everybody.
Please do. NASDAQ here bumping into the top line of its recent trading range, Ilya, near 30,350, kind of poking through, not breaking out so far. We can see the S&P here is still trying to grind higher, but finding some resistance above 7,600. It's difficult for me to take away anything significant about today's price action, good or bad, except for the fact that nothing really has changed. The market's kind of in a little bit of a melt-up-ish mode until we get a new catalyst.
I think that's right. I think that's exactly right. I think that it's the end of the month, that we've been dancing around the idea that there is a desire from both Iran and the US to ultimately walk back this thing to something more manageable. I think all of that basically has been with us since the lows in late March, early April. The difference is that whereas in markets like gold, dollar, bonds, oil itself, the story became, okay, yeah, they want to end this thing, but the price of oil is now stuck higher because of things you can't take away anymore, things you can't walk back. Toothpaste you can't put back in the tube. Okay, What about stocks? Well, stocks went off on a whole other thing. They had the same bottom, but they went off on their AI fever dream and did something else entirely. But if you look at what the other markets are telling you, it's like, yeah, okay, well, we kind of knew that this was coming to this and that it doesn't change the reality of the inflation shock and its consequences because it's too far gone. And so where does the stock market get that realization becomes kind of the operating question. It's less a question of if as a question of when. And when the market gets that realization, does it go, yeah, but growth is good enough that this is not a big deal that we need to worry about? Or, oh no. And we don't know which one it is going to be, but you sort of see how the markets get that kind of mindset, especially ahead of a weekend, especially on the last day of what has been an explosively risk-on month, and go, we're not going to commit right here, right now.
One of the interesting notes that came across the desk today was from Bank of America, their fund manager survey. Ilya, talk about a crowded trade. 73% of respondents in their latest fund manager survey said that they were long semiconductors right now.
Sure.
That's pretty dang crowded. There were points last year, I think at its peak, I was talking about this with Jamal today, I think at its peak during 2025, the fund manager exposure to gold in that survey was 55 to 60%.
Yeah.
So exceptionally concentrated, which also then means because everyone is in the same trade right now, that if it does break, it could break hard as everyone rushes for the exits at the same time.
Yeah.
Which is why if you're going to trade things to the upside, you have to do it in a very cautious manner. I would not be selling puts up here, not selling put spreads up here. No reason to do that at all. No edge. Don't do it.
No edge.
I'm not doing it.
No, you're absolutely right. I think that's exactly the way to think about it. There's just no edge to doing that.
However, Ilya, you know me, I like to draw my lines. If this is a breakout in semiconductors and we have a new consolidation forming, however intraday and micro technical this is,
yes,
this, a bottom left to top right breakout, consolidating to symmetrical triangle, you have to treat this
symmetrical triangle to extrapolation higher. Sure, I'm with you.
So
I just don't think we know that here until there's a break. But I hear you. It does look
so. Just as a bear, I wouldn't step in front. Like if I want to be a bear, I want to get below 580 in semis. Get back into the range.
Yeah. Or I want to be literally like nose up against that resistance at about 620. Let's say, see some sort of an exhaustion candle, like some kind of a long wick thing that doesn't go anywhere. Not unlike what we're seeing in ES the past several days, but right up against that resistance, and then go, all right, well, let me play for risk reward, not unlike what you see in NASDAQ now, and go, okay, I'm gonna play the risk reward game here. This thing doesn't have to break down. It has to revisit the bottom of the range. And then I have asymmetric upside. That's all it has to do. Let me take that stab as a risk-defined thing. And if I do that, then and it works, and then it breaks, that's when I put the gas.
Ilya, I think we can switch off of stocks here. Meandering around right now, still a tenth on 11.11% higher for ES and NQ. That hasn't changed in the past 5 minutes. We'll turn our attention over to oil, which is stable below 90 for the time being. $86.94 here. It's actually approaching the lowest levels that we had since May 6th right now, as more of these headlines pile up around Iran. But I want to bring up what was said yesterday by Neil Chapman, the SVP of Exxon at the Sanford Bernstein Strategic Decisions Conference, where he noted this. Commercial inventories of crude oil, of liquids, of petroleum, gasoline, diesel, jet fuel, they've all run down. And running down, those inventories have mitigated or offset, supplemented by the release of strategic petroleum reserves, which most of the Western countries have done. All of that has mitigated the impact. You can model this. We've modeled it. I think a lot of people in the industry have modeled it. We're now approaching unheard inventory levels. I mean, really, really low levels. You can debate whether that's going to hit those really, really low levels in 2 weeks or 3 weeks. But once you get to that point, then you'll see price shoot up. I mean, I think dated Brent, most people, a model would say dated Brent will shoot up. Once you get to that really low inventory level, up to 150, 160. I should put Brent up here right now, I suppose, BZ, which is at $90. The models would tell you that. And then what happens is when price gets to a certain level, demand destruction brings it back into balance. Prices go so high, it becomes unaffordable. And that's what happens. And we're at that level right now. And I think crude in this sort of 90 to 110 for the last, whatever it was, 6 weeks has been mitigated by running down inventories. It can't last forever. So we'll see what happens. And predicting this in the exact time is always a challenge, but that's the way that we, Exxon Mobil, one of the world's largest oil companies, is looking at the situation. So, Ilya, what does a boy do here? What do we do with our already existing bias of there being a floor underneath the price of oil? And now some of the people who put bread on their table by operating in this industry at a very high level are telling us something bad's coming.
Yeah. Well, so I was really looking forward to speaking with Jeff Curry, who is the former head of commodities at Goldman for 25 years and now senior advisor to Carlyle, who hopefully we get him back. There was a scheduling difference that we had to accommodate.
Guys in high demand.
But man's in high demand for very obvious reasons. But one of the things he's really been pounding the table on, and I stress that he's former Goldman because there goes a trading bank, right? There goes a bank that really doesn't mess around whatsoever with their trading arm and sort of famously only has a few losing days a year, maybe. Days, not weeks. Days. It generally makes money every day in a given year. Single digit numbers and low single digit numbers for losing days for Goldman traders in any given year, in any given market. So when you look at this and you go, okay, what's he saying? Having been sort of the commodities guy within that system. And he's been saying this same thing. That basically, come the beginning of July, you've hit bottom. There's just nothing else to do because all of this has hit basically the whole world's equivalent of strategic reserves.
All gone.
On top of inventories. They're aggressively spent. And that's been what's insulated the market to this point. But even if you had a deal, you're not going to see any meaningful flow through Hormuz for 6 months. So then what do? If you look at it, what's been happening, in particular in the U.S., and we did this at length, as I was saying earlier, on Macro Money yesterday, in the U.S., inventories have fallen aggressively. So has the SPR. Exports have surged. Imports have declined. So how are we seeing oil as anchored as it is? Well, we're pulling out reserves. We're buffering ourselves, and then we're exporting increasingly large amounts to the world to buffer them. But that has a shelf life on it because eventually you run out of capacity to do that. In fact, you couldn't even export all of the SPR or all of the reserves because they sit in salt caverns, which would collapse if you took too many barrels out. A very kind of medieval problem to have, but here we are.
It does feel like a medieval problem to have. You know, these prognostications of doom and gloom that are coming, there is a reality where in the short term, maybe we get another swing higher. But as the analysis itself mentioned, was that when prices go too high, it's the snake eating its own tail. And then they come back down because no one can afford to buy oil at 150. Maybe in the US we can because we're a wealthy economy. What happens to Latin America or Africa or Southeast Asia or Central Asia? Get crushed. And they've already, look at a country like Turkey, they've already spent all of their reserves. They've sold all of their treasuries, basically.
And a ton of their gold.
31.3 IVR.
This is the great de-dollarization irony. Everybody was banging on about de-dollarization, and one might say an economy that might have been favorable to a more diversified, more multipolar world on the currency front that constantly kind of straddles its membership in NATO with its friendly relations with Russia and China and Iran. Turkey was trying to sell as much gold and as much reserve in foreign currency other than dollars it could muster to buy more dollars, because that's what you need if you're going to get crude.
A few weeks ago, we were facing when supply crunch was, imminent, was happening in real time because the war had broken out, and we were trying to make sense of what was going on. Alternative supply routes hadn't been established yet. Folks weren't going to the Gulf. Saudi Arabia hadn't pressurized their Red Sea pipeline yet to reroute those 7+ million barrels a day. We had about a $15 backwardation between the front month and the next month contract in crude, which right now, 87.18, 85.12, it's about $2. So if we're thinking that perhaps this warning world comes true, and this is public information, so we're not betting on anything here, but we're going to help walk people through. If you're really worried about oil going back up, we have to contextualize right now what the trade would look like in this already backwardated world. You would theoretically want to be long the front month and short the back month contract, because the front month will go up more than the back month contract will. And I think that's probably the way that we have to go about this. If we get another tank lows here in oil, Ilya, let's say we start to reach this level where scarcity really kicks in. We go back to a 1970s scenario where people whose license plates end in a vowel, in a vowel, get to go on one day, and if they end in a number, they could get to go on another day. That probably doesn't impact December Z6 as great as it would N6, M6, N6, Q6, U6.
Mm-hmm.
So maybe like a long calendar call spread here is the way to go about this. And even betting on the N6 one, there's only 18 days to expiration. You talk about this 2 to 3 week timeline, but Q6 extends all the way out to July 16th. So something like long the Q6, which is trading at 85.10, and short the Z6, which is trading at 78. There's already $7 of backwardation in there. That probably is the more responsible way to play this, because I don't think the Z6 one is going to be greatly impacted. By the time we get to December, if the strait is reopened and yada, yada, the tanks are starting to get refilled. It supports our thesis of a floor into oil, but not necessarily this thing, the Z6 contract itself, spiking up to like 110 or 120. I still feel really good about selling these puts and pullbacks, puts and put spreads. I know it's only a 32 IVR right now, which isn't exactly the most appealing thing in the world, but getting some directional convexity to the upside. People smarter than us are flagging this as a major issue. I'm not going to pretend I know more than them. Sometimes you can outsource your analysis. In this case, I think I'm going to.
Well, one really interesting thing is you're starting to see quite a bit of convergence. There was a point where obviously the front month contract in crude ran away and was really telling the tale of a shock that was local and that was relatively present in terms of time. And if only you could unlock the strait quickly, then maybe you could avoid any kind of long-term consequences. We're way past that now. And so as the front month, in this case, let's say July, has come in, so too the situation in other sort of further out months has converged. And sort of famously, we've seen that there's been a very kind of similar thing happening where oil, let's say yesterday, where you get this Axios story and oil goes, I'm going to erase gains in the July contract because maybe there's a deal. Well, December went up. And so you look at this and you go, okay, the market is at the same time saying maybe the prices at the front end are a bit hysterical.
Mm-hmm.
And they've been, in fairness, declining. I mean, oil is at the front month off significantly from the highs in, let's call it, mid-May, off by almost 20% on the month. So that's been happening. But the melt up in the other contracts has held pretty well. I mean, the CLZ6 contract, it's up 34%. 37 if you look at year to date, let's say.
It's been good. It's been good.
The CLZ7 contract, end of next year, is up 24% year to date. Now, okay, the front month is up 50. Sure. But recently, the front month was up much more. And so you look at all of this and you go, right, okay, so we're in a situation here then where, okay, maybe there's a bunch of hysteria coming out of the front end, but no inflation issue is fixed at the long end. 20%, 24% more expensive oil 2 years forward. That's a big inflation issue.
No, it's a very big inflation issue. And so going back to the trade here for a second, why am I thinking about, first off, CL versus MCL?
Yeah.
I have a lot of oil on right now. Invest and investigate. I could always add more to an MCL position. I could always like 10x it and get to what the equivalent would be of a CL size position here. But just dipping the toe in the water here, long the July 16th 85 call, short the November 17th 85 call. If a Trump-Iran Hormuz headline hits, we could see this relationship evolve, but not as quickly as like the July-December spread would. And we've already seen in recent weeks how July has been hammered down more than other months along the curve, because that's the contract at the front month that is most sensitive to the supply disruption risk one way or the other, resolution or deepening of the conflict.
Yes.
So, Ilya, this trade in MCL is less than $600 buying power, long the 85 for July, short the 85 for November. If this tank bottom fear comes to fruition, then you're going to see a spike in the front month initially and then perhaps subside. But let's get that going. It's a different way to express this. Maybe having a floor under crude right now is the way to, think about this trade. We can go back to natural gas real quick before we move on to bonds and what have you. But natural gas is pinned here today at that level that we're waiting for it to get through really now to really show us that it has some oomph to it. Bottoming is a process, as it were, in the markets. And the bottom here looks like it's slowly being carved out. I don't have any more exposure to add right now. I do already have the 3738 call spread. I like that out of the money exposure in a low IV product right now. Whereas if this does get a little bounce and run, we have some skin in the game to take advantage of it. And worse comes to worse, it's like a $200-something loss if it doesn't work out. But I like those convexities, risking 1 to make 4. I'll take that if this thing turns the corner. I think you're still in this as well.
I am. I've got a little call vertical here. I do think it seems to be turning. It's tried for an upside breakout, and obviously that hasn't stuck here. But I don't think there's anything about what's going on here that has invalidated the kind of constructive perspective, let's say. It does look like it's turning a corner. And if we're saying all of these things about what's going on in the Strait, we're saying, yeah, okay, there's a deal. Let's say 6 months is the soonest you can get crude oil capacity functionally back to what could be something similar to before the war. For nat gas, it's much longer. We're talking like a year and some change, because the damage that's been done just by Iran bombing infrastructure for the other Gulf countries, and the difficulty of restarting nat gas production as opposed to oil, it's a fussier thing. it's going to take a long time. We're just about to start seeing the Europeans fill their inventories. They've obviously spent a ton of them. We are going to have something similar going on in Asia, and prices in both Asia and Europe for nat gas, they surged as a consequence of this war. They've been digesting. They've not come down in any kind of a meaningful way. We still very much have a nat gas shock in prices outside of the U.S. So, because obviously the U.S., as a function of fracking, is absolutely swimming in nat gas.
Swimming in supply. Well, for now.
For
Unless
now.
we have to start drawing down those
we're
tanks
exporting
too.
a ton of it.
Because we have to start drawing down those tanks
chances
too.
are that supply is going to all end up in Asia and in Europe at this pace. All the excess supply. And that, of course, squeezes prices everywhere.
We turn our attention to bonds here. No auctions today in terms of the auctions that are coming up around the corner, because we do have non-farm payrolls next week, and implications for the Treasury curve, I think, are self-apparent. Bills all next week. So nothing that we really care too much about. It's the week after. Tuesday, June 9th, you get the 3s. The 10th, you get the 10s. And on Thursday, the 11th, you get the 30-year bonds. For today, it's a modest move to the upside as oil continues to come back in. And that really has been the story of bonds. Oil up, bonds down, oil down, bonds up. But it's modest. We may be cracking the downtrend here of the trend from the war high. So that's good news. You can see it in ZB as well right now. But really not a lot of oomph. And I think it's worth emphasizing here that the economy still has some pretty decent tailwinds to it right now. So you have to make an argument in the short term to be a bond bull that something's going to happen with rates. Oil's going back to 6 to have significant aggressive upside here. I think the relationship with how the market's moved, down moves have been elevators, up moves have been stair steps. If oil settles in around 80 or so, how much more can notes rally? Maybe 113, 114. Are we going back to where we were 117, 118? No, because the market has this new inflation premium embedded into it, thanks to the war. And that's going to take time to dissipate right now. So at an 8.2 IVR in ZB, maybe if I want to take a long shot to the upside or the downside, it's worth putting something on. But in terms of selling vol, move on.
Yeah. I don't think there is a selling of vol that really starts to make sense here. I think for me, this is a directional thing. And it's a direct corollary of what ends up happening as the oil shock that's already there continues to work its way into the inflation data. There's about a month's lag between oil and when its impacts show up in CPI, and that's just the energy shock itself. We're already looking at the energy shock's second round effects starting to appear in the data. So in March, you started to see oil work its way in. It hasn't all the way. There's quite a lot more to go as far as just the energy shock itself. But the second round effects are already starting to appear. This will only compound over time. So the story about just how much inflation will come as the delayed consequence of what oil has been doing stuck at these levels for all these months, we don't know what they are yet. And if we look at the Cleveland Fed's inflation nowcasting, we're looking for a lot more inflation downwind, even as soon as next month's data. So there is where I think you have your catalyst for bonds on the downside and for rates on the upside. Tellingly, you're testing the bounds of the down move, but you're not breaking them as a consequence of this story about there being a deal. And so with all of that, I think you don't really need for oil to get more expensive. You just need for there to be a sense that as central banks look at the way that it unfurls into inflation data over the coming several months, you are going to get a response from them that goes, rate cuts. What? No.
We can shift over to metals here. I know we want to get over to currency too. Metals enthusiasm wanes. Gold has been a little bit stronger the past 2 sessions. We do have that bounce with oil declining. It's up 1.2% right now. So again, rallying less than oil is falling. Also runs into its 1-month moving average and gets pinned there and starts to fall back. So let's take a look at silver. Surely silver is doing better, right? It was double down the other day that gold was down. No, silver's not showing a ton of enthusiasm here. And even copper, my boy copper, not doing much of anything right now. So there's this, well, we can't have it here on the platform right now, but real yields are problematic for the precious metals.
They are.
They're, even if oil's coming in, a certain amount of stress has been put into the system that's going to need some time to work its way out. I still like the copper technical setup, Ilya, particularly in a world where we probably don't get the worst case scenario in terms of growth. At least hopeful so far. But if copper starts to fall back, right, we talk about these tank bottoms becoming an issue and inducing a spike in oil prices that could lead to demand destruction.
Mm-hmm.
Copper would be a place to look.
Yeah.
So would gold and silver, because if we go back to the world where central banks and sovereigns need to raise capital or cash to pay for the higher energy prices, these are the things that get thrown overboard first. So not exactly the most encouraging bit of jostling around here today.
Well,
still got
and
time
if
on the
you
board
look
for
at
copper, though.
Copper, it's a really interesting thing with copper because it's followed almost step for step with China's broader CSI 300 index. The ETF on that is ASHR. If you look at that, it looks just like copper, and all of it starts to kind of look together. So you get China's stock index and copper and aluminum and nickel and even tin. So sort of the base metals complex and SMH, all kind of looking similar to various degrees. So aluminum looks more like SMH, copper looks more like Chinese equities, but all of them have very similar structures. And when you see that, you go, okay, well, what's this about? Well, it's the AI build out. You need all of these base metals to build the data centers and the stuff that goes in them. And China really only has economic growth at the moment because its export engine is humming very emphatically because of the AI build out. One might argue the reason that Donald Trump and Xi Jinping had such a kumbaya meeting in Beijing and nobody wanted to say anything too controversial is because nobody wants to break the great and powerful AI engine that both countries absolutely depend on right now. Neither country has happy consumers. So both countries need, on the one hand, for the AI dynamo to keep spinning so that they can export their way to semi-solid growth. China in the first quarter came out of deflation for the first time in over 2 years. And only just. I mean, they basically got back to zero. And in the US, as we've said a gazillion times now, consumers have been weakening for 2 consecutive quarters, and it looks like more so than we even thought after the most recent revision. So you need that business investment surge to continue. So everybody's got skin in the game. And just about the only thing you could point out here is, well, what goes into a data center if everybody is on board to keep this thing spinning and needs it to be spinning? The only stuff that's going to work is the stuff that's needed to make it spin. And sure, that's SMH, but it's also base metals.
Ilya, last section here, we jump over to the dollar, which is mostly down in today's session. So some mixed signals coming across the board here. The Australian dollar is poking back up after spending a week or so, bouncing around between 71 and 71 and a half. It's up to 71.82 today. Not bad considering.
Head and shoulders to you?
No, not yet. No. No.
Looks like it might be carving out that next shoulder, and you don't want to front run that sort of thing. But I'm watching real close because the Aussie has been very sensitive, as it usually is, to risk sentiment and not just sort of pure yield differentials. The euro, the pound have been very circumspect. If you look at what's going on there, they're not going very far at all. They're more like testing the bounds of what is a down move that is unfurling, but not really doing anything else. Similar story for the yen. But when you look at the Aussie, you go, okay, well, if I were to put a horizontal line, essentially right at 72, let's say, all of a sudden I get this really interesting picture. Where you go, hang on a minute now, is the top? And if this is the top, what does that tell me about overall sentiment? Because this thing is kind of the liquid avatar for just general cyclical feelings. It's unclear yet, but this is something I'm watching closely because if we take out 71 on the Aussie, that could very well be step one in a sentiment meltdown that ultimately brings with it stocks and whatever else. Interestingly, Bitcoin might have been the canary in the coal mine. I've actually flipped to the short side in Bitcoin.
Bitcoin's been garbage. It has a little bit of a bounce today, but
Can't
the
really
speculative
stick the
fervor,
landing even on that.
the speculative fervor here isn't fantastic at all. And I think we raised the prospect where you and I have both taken a stab at the long side in recent weeks. But what if this was a bear flag? Hence this channel drawn here, and we have that low from November, and we never quite got through it. So all of a sudden, Elliot, Bitcoin, if it starts dipping below 70K, got a real problem. At least
I'm short now. So, I bought a put vertical here because I'm looking at this and going, okay, well, we tried for the upside breakout. It was nice. I took some money off the table on that upside breakout. Not unlike what we usually talk about with momentum and sort of the last bet in a momentum sequence being the one that loses money, and that's how you know. My last bet on the long side of Bitcoin clearly did not work out. Thankfully, I'm operating strictly in risk-defined terms in these markets.
Sure.
So nothing to derail having made money buying Bitcoin off the lows. On the whole, it's been a profitable series of trades. But now the ship might be turning the other way because, to your point, this might have been a consolidative rise in what is a larger decline. As I was putting together my summary of overnight events for you yesterday, I was looking at data that came out saying that we've had 9 consecutive periods of outflow from Bitcoin ETFs, which is the largest since the spot BTC ETFs were unveiled in 2024. U.S. listed funds recorded an outflow of about 2.8 billion on net just from May 15th through the 28th. That's according to Bloomberg data. Now, of course, Bitcoin is down 40% off the record high. That's a lot. The record high was very recent, of course, in October. But money seems to be leaving this space. And if you wanted, again, another marker for, is risk appetite going to unravel here? That's another little nugget where you go, well, how much do people want to have risk on the table if Bitcoin ETFs are shedding in a way that they haven't done since they were unveiled to the world?
Could I offer a counterpoint? What if people are in Bitcoin because they want the action?
Here.
They want the action.
Counterpoint.
There's no action in Bitcoin right now. Why would you keep your money in IBIT when you could put it into SMH? If you're in IBIT already, there are some folks who are like, yeah, I'm just going to buy and hold this in DCA because there's a diversification benefit. And there are studies out there from wealth managers that you can go out and look up right now on your own audience. About 3 to 4% crypto allocation since its inception would reduce the overall beta weighted deltas of your portfolio in every single year of its existence. Even if you had everything else just in stocks, or the rest split stocks and bonds, or pick, mix and match, right?
Sure.
But if you're a trader right now, the whole appeal of crypto was that there was action. It was going to jump 5, 10, 15% in any given session. There was the potential for it to jump 5, 10, 15% in any given session. If you were on the right side of it with enough size, you could make a nice little bag for yourself. You're not getting those moves anymore here. Those moves are in the semiconductors right now. So the kind of folks who look for that kind of action, they may just have taken their ball and gone elsewhere for a little while, which is not unusual. This has happened before.
I mean, I certainly think that's possible. I am a little bit more skeptical about it because, largely speaking, the reason that you had the moderating of volatility in Bitcoin is because you introduced these ETFs, which then allowed not speculative cowboy type traders, but mom and pop investors to feel better about allocating to this in longer term portfolios, because here you had something that wasn't a futures contract, something that wasn't expiring, something that was on exchange, something that was FINRA monitored, et cetera, et cetera, et cetera. Something that was, from a regulatory and a safety of funds perspective and a counterparty risk perspective, just another stock. And so, to my mind, the outflow from something like an IBIT is probably less about hot money leaving and more about those kinds of people having less appetite for risk. But we'll see. I think it might be a little bit from column A, might be a little bit from column B altogether, but I wouldn't discount the outflows from these ETFs as just speculative players taking their ball and going home, because that's not really who the audience has been for those things.
Ilya, we close out the session here. Volatility is on the floor, 1746 in the vol futures. The VIX is down to a session low near 1531. This would be the lowest close that we've seen going back to mid-January here. ES bouncing around. We were higher by 0.11% earlier when we flipped off stocks. We're now higher by a whole 0.15%, Mr. Spivak. So we go into last call later today.
One place now.
No, but maybe someone is sitting on 0 DTEs at 7,600 that need to.
It'll be really interesting to see how the markets open next week.
And we may have a headline here. Doug Burgum, the Secretary of Interior, saying that he's meeting with President Trump now, who may have a big announcement soon on oil. So keep an eye on your tape here for the last 90 minutes of the session. Data coming out on Monday, ISM manufacturing PMI from the US. That's the big one, but we're done here because it is the last Futures Power Hour for the month of May. I can't believe June is Monday. Wow. Where's this year going? Ilya, we'll see everyone in about an hour's time. Up next, after a brief break, Dr. Jim Schultz with From Theory to Practice.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Friday edition of what it is that we are trying to do. I'm glad that you guys are here because it is only because of you guys that we can do what we do. So thank you guys so very much. If you are watching over on the Tasty Live Network, I would actually drive? Nah, man, I'd pop on over to YouTube and hop in the comments because you can communicate with your brethren who are also watching the show, man. I don't even know on a day like today. Very, very quiet, very, very muted from the indexes. I'm not talking about Dell. I'm not talking about Micron. Those are as crazy as ever. But even S&Ps, NASDAQ, pretty much a 3-day weekend. So you can hop in the chat. Man, you can celebrate. You can commiserate. You can do whatever you feel like doing. Just see where the wind blows you. Because the most important thing is that you share your thoughts and your feelings and your emotions in the chat with me, with the algo. Everybody wants to know. And of course, drop whatever questions you have for me down there, and I'll try to get to as many as I can right around the midway part of the show. I typically get to somewhere between 1.15 and 1.17 questions per show, so I would get that in there earlier. It gives you a higher delta that I will get to your question. You can always bank on a surprise and delight. I mean, you can always push all your chips in the middle on surprise and delight, but I don't know, man. Not a great long-term sustainable strategy. So, Paul, bring us into the market. Man, what is going on out there? Even S&P's up 15. Man, look at that. I thought they had him down there for a second. Oh, no. EMI S&P's up 50. You got the risk-free instrument, also known as the NASDAQ futures, extremely high risk. Product up 87. Man, you got the boomers back for more. We thought they shut it down for the week. Oh, no. Boomers up 303. Got the Russell 3000 down 19. It's only the Russell 2000, but that's going to be pretty short-lived. It should cross the old 3000 mark here in the next couple of days. You got bonds up a little bit. You got notes up a little bit. You got oil down $1.60. You got UB40 on. You got the shifties are celebrating. You got the Hunt Brothers. Where are my Hunt Brothers at? Man, where are these guys at? Got the Hunt Brothers up 10 cents. So you got the Metals Bros and the Metals Bulls that are celebrating today. And so cue the infomercials. Over the weekend, we are going to get hit with all the 800 numbers and all the buy gold today advertising coming down the chutes at us. And man, they are ready. Got the British pound is up. Got the euro is up. Got volatility down on a day like today. Volatility futures down 53 cents. Spot volatility down 48 cents, down to just over 15. Man, 15 VIX. We're doing this again, guys. We're doing it again. And you can't stop it, man. Like, you can't stop it. You can only hope to contain it. Like, that's all you can do. VIX at 15. That means we are one tweet away. Like, we are one. It doesn't even need to be a full taco. It can be like a day old taco. It can be like a leftover taco that's 36 hours old. No problem. That's all we need. And we are a VIX under 15. Like, we are a VIX at 1485, 1490. So, guys, it's coming. It's coming for us all, man. And so that is going to be some brutal, brutal stuff for us premium sellers. And so market's looking strong. You guys are looking rather strong today, might I add. And so let's take a look at the portfolio, which is not looking as strong as maybe it's been at points in yesteryear. So we still have MES, we still have MNQ, Obviously, we're absolutely getting pummeled on both. Everything is exactly the same. And it's pretty wild. It's pretty wild. And I'll tell you what, though, it is a bit confusing because I checked this out, like earlier today to kind of see what was going on. And I'm like, whoa, the NASDAQ is 30,700. I mean, I knew it was bad, but I didn't think it was that bad. But then I remembered that just yesterday we rolled to the U cycle to get out of 21 days to go. I mean, the front month is still the M cycle, which you can see over here. It's going to be that way for the next, I would say, 2 weeks, maybe, give or take. Usually that final week is kind of when the roll really starts to pick up steam. Kind of like that Thursday, Friday before the final week is kind of when things start to pick up. Now, we do have the federal holiday on the Friday of expiration week. Juneteenth, I think, is on that Friday. So expiration is going to get moved up to Thursday. So does that mean that the rolls begin kind of the previous Thursday? I think it's possible. But looking at this, I was kind of like, man, like I thought my underoos would stay pretty dry today, but I'm not so sure anymore. But then I checked the tapes and I'm like, okay, we just rolled this guy to you. It's basically the same situation. It looks a lot worse. It feels a lot worse, but it's actually basically no different than being in the M cycle. And so there's our U contracts in MES and MNQ. I mean, there's not much more to say about those. I mean, I'm going to find another 3.5 minutes, but I've essentially transmitted all the value to you that I possibly can. I'm not sure there is any value, but I've given you all that I can give you on MES and MNQ. So what about Micron? Whew, man, Micron up 33. Why didn't you guys stop me? Why didn't you guys stop me? Right? I understand that it's walking over in the corner and picking up a podcast. Like, I understand it's basically free money, but guys, still, you got to stop me, man. You guys have seen this movie before. You guys have seen the show before. I'm just not very good at this. Like, I'm literally the worst at this. And so you guys need to stop me next time. The next time I want to get short Micron, maybe get short a little Dell. Wonder how Dell's doing today. I heard it's doing pretty well for itself here today. But Micron up 32. There actually is a gimme, believe it or not. There is a gimme. There is a silver lining. And here's what it is. So Micron's pretty deep in the money now. I mean, it's not like crazy. I mean, we're only 1 day away from this thing being back. But still, I mean, we're 30 points in the money. We're not even down a full dollar on the trade. And we only have 7 days to go. This is a product of Micron clinging to its extrinsic value basically to the very end. Now, when it comes to selling premium, like when I sell premium, if I sell a put or I sell a put spread or sell a call spread or whatever, I generally speaking, I want extrinsic value to go down. Like I want extrinsic value to dissipate from the options. And that's all true, of course, if the spread or the option is out of the money. When it moves in the money, right? Because remember, out of the money, in the money are very much mirror images of one another. When it moves in the money, the reverse is actually true. So now all of a sudden, the extrinsic value that's in the options is actually serving as a bit of a shield. It's actually kind of acting as a little bit of a buffer against, getting to maximum loss more quickly. Because just look at the situation. If we were at expiration with this 920 925 short call spread. Let's break out the Final Jeopardy pen just because we can. If we were at expiration, like if this was 7 days from now and we were at expiration, what would the mark price of this strategy be? Of course, it would be $5, right? If you take a vertical spread and it's fully in the money and you take it all the way to expiration, it is going to converge on its maximum value. It is going to fill up to its maximum value. Time has run out. Extrinsic value is all gone. You're only left with the par value of the spread. You're only left with the intrinsic value of the spread. It's fully in the money. Its intrinsic value is going to be maximum amount. And the maximum amount, of course, is the width of the spread. And so because we're not at expiration, because we still have 7 days to go, we're not in that situation. And it's because all of this extrinsic value that you see in Micron is actually acting as a shield against the losses on the strategy. Now, I mean, time is eventually going to run out. Like at a certain point, all the crystals are going to be gone from the hourglass. And so we've only got 7 days left to get our act together in this strategy. But actually, look at this. You can actually see for yourself. This is not even my opinion. Look at the extrinsic value and look at the mark price. And what you will see, now remember, this is, the markets are living and breathing. So it's moving around, it's negotiating bid-ask spread differentials. So it's going to be off here and there. But take a look at this. The extrinsic value plus the mark price should give you, take the absolute value of both, because the reason why it's negative is it's telling me that you're not doing very well. you should probably consider doing something else with this strategy, because if this guy stays where it is going to reach maximum value. Time is working against you. That's why the extrinsic value is negative. But just take the absolute value for the purposes of what I want to illustrate right here. The extrinsic value is 205. The mark price is 295. I'm no Julius Spina, but if I take 205, and we'll just write it out just to be sure, and I add 295, that equals to approximately, just in case, $5. Well, hey, what do you know? The maximum value of the strategy is $5. The width of the spread is $5. It's almost like all this stuff is connected by math. Like, it's almost like there's this quantitative underpinning that is just governing everything we see in the markets. It's almost like that, man. That's some crazy stuff. And so, all right, so Micron, unfortunately, I'm not so sure we're going to make it to Bonefish tonight, but tomorrow night maybe we'll make it. Maybe we can get a little squash into the close to maybe get a little Bonefish brunch. I mean, I could do a little bang bang at 11:30. Like, that sounds all right, actually. And by all right, I mean, that sounds pretty disgusting. But Micron, that is all I have to say on that guy. And then moving on down the list, hey, look at Zscaler. Oh, man, look at Zscaler. Who brought me Zscaler? Again, I'm not doing a good job of keeping my receipts, but one of you guys brought me Zscaler, and I appreciate you guys so much. So take your credit in the chat. Whoever brought me Zscaler. I mean, wait, was it Smack Lovin? I don't think it was Smack Lovin. Smack Lovin had a different question. It was somebody else. If it was you, Smack Lovin, then my apologies for misremembering, but somebody else brought me Zscaler, and look at this thing just scaling up. Look at this thing just scaling to new heights. Zscaler up $8 today. We have an out-of-the-money diagonal spread in Zscaler, and it is the only thing that is allowing us to keep the lights on today. Like, it is the only thing that is allowing us to, move forward in the smallest possible sense right here today. And so I'm very, very glad that we had that trade on. I'm not going to take it off yet because now I'm kind of interested. I mean, we have so much time in the strategy, and we've, because of the setup between the long and the short, we've neutralized our theta. There's really no negative theta in the strategy. There's really no positive theta either. It's essentially neutral. And so I'm like, all right, well, let's take another shot. Let's see if we can get another, a quick little upscale in Zscaler on Monday, Tuesday, Wednesday, Thursday of next week. Get this 140 call in the money. And then I don't know, man. Bonefish might be back on. It might be a little pause in the action, take Friday night off, take Saturday off, maybe take Sunday off. But a Monday night Bonefish, we will be the only ones there. And so Zscaler, doing pretty well. We're going to sit tight and do nothing with that guy. And then Snapchat, there's nothing to talk about. Starbucks getting crushed. Man, I really wish we would have just stuck with that 100 call. Like, that would have been really, really awesome, right? But again, we learned a lot by rolling the call up to the 105. Again, the rearview mirror is doing quite well for itself. So it's always difficult to kind of evaluate yourself after the fact too regularly, because, we all want to evaluate ourselves after the fact, of course. We want to get better. We want to grow. Like, okay, where am I weak? Where do I need to improve? Like, we should all be doing those things. But in terms of, okay, what is the market going to do? What is this stock going to do, and how should I play that? Spoiler alert, you don't know. I don't know. Nobody knows what the market is going to do. Nobody knows what that stock is going to do. So, if you want to do X and the stock ends up doing Y, it's really difficult to beat yourself up for that, 2 weeks later or a month later, saying, man, I should have known it was going to do Y. No, nobody knows. Nobody knows. So what do we need to do? We need to control the things that we do know. What are some of the things that we do know? Our size. What are some of the things that we do know? Our leverage. What are some of the things that we do know? The strategies that we like and that we understand that we want to deploy. Like, we can go, all the way down the list on all the things that we do know. But the one thing that we don't know is what the market's going to do. Now, I know that Johnny Pools 47's got it all figured out on Twitter. I know that Johnny Pools 48, his cousin's got it all figured out on Instagram. Like, I understand this. But we, us common folk, we don't know. And so Starbucks here, I wish I would have stayed at the 100, but alas, this is the situation that we're in. I am, however, going to take off the 105 call. So if you look at the pricing here, the 105 call was $3.92. It's now selling for only 72 cents. I could leave it on, and I could go for a little bit more juice out of the orange, but we've pretty much squeezed this guy dry. Like, we've pretty much gotten all there is to get out of this option as it stands. And so for me, it makes a lot more sense. Hey, let's take the call off. And again, remember, this is one of the huge advantages you have with a strategy like an investment style covered call. The opposite, not the opposite. But the alternative is what I meant to say. The alternative here is just holding the shares, right? I mean, a lot of traders, investors that end up doing investment style covered calls, they're doing this because they're used to holding shares. They're used to holding the indexes long term, whatever, and they've done quite well from this for themselves, especially if it's been, they've been doing this for years or decades. But now they're thinking, I'd really like to explore other ways to potentially be profitable on this strategy. So they want to be more active. They want to bring some premium into the mix using options, blah, 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 blah. Okay. Well, now this is a perfect example of when taking the option off. Yes, again, I wish we would have stayed at the 100 strike, but we didn't. And this is what we've got. Well, now, given what we've got, let's take off the 105 call. It's done its job. It's done more than its job, in my opinion. Let's take it off and let's just leave the shares, man. Like, just leave the long, naked shares to the upside. And that way, if Starbucks does pop again, back over 100, 102, 103, now maybe we sell a 110 call, right? I mean, this is kind of the dream scenario, is it not? It's the dream scenario from the standpoint of you sell some calls, you take them off as the stock just slowly inches up. As the stock just slowly meanders higher. Right, you go ahead and take those, you're taking those calls off and then you're laying them back out slightly higher, slightly higher, slightly higher, kind of laddering up the chain as the stock moves higher. Now, of course, that's the perfect textbook scenario. It never works out that way, as you guys have seen following Starbucks for the last, 18 months. It's very messy. It's very dirty. It's very all over the place. But if you kind of zoom out, that is kind of what has happened to us here. Because again, remember, we bought the shares originally for $92 a share back in December of 24. So we've made about $6.50 on just the shares. Now, we've made a lot more than that on the position because of all the premium that we sold against it along the way. But I think right here, I think we go ahead and we take off that call. So let's do that right now. Let's buy back this call. It looks like we can do it for, 73 cents on the mid price. We'll give it a shot. We got improved. Look at that. All right. Very nice. Okay, so we got out of the Starbucks call. We now just have on our Starbucks shares. And, it's gimmies and gotchas, man. It's always gimmies and gotchas, right? What's the gimme? If Starbucks rallies, we get the move dollar for dollar. And then we can lay out calls further up. We can do all the things I just talked about. What's the gotcha? Well, the gotcha is if Starbucks doesn't rally, if Starbucks crash, boom, bangs, we have no protection. Like, we have no way to slow that down. We have no shield. We have no buffer. Like, we're just straight long shares. And again, that's the game that I want to play here because of the spirit of the strategy investment style covered call. So I'm perfectly okay with that. And so that is Starbucks. And then the last thing I wanted to talk about was Netflix, because we are at 20 days to go in Netflix. And so with this guy, this was an in the money put that we sold for Netflix to play this guy to the upside. And it hasn't worked out yet, but again, it hasn't been too bad either. We're only down about 75 cents on the trade so far. And so for this guy, I'm kind of thinking we don't really have to think too hard about this. We don't really have to think too long about this. I'm still going to talk about it for 6.5 minutes, but it's pretty straightforward. I think you just roll it out. I think you roll it out, just pick it up and move it out and drop it down, right? Pick it up from the June cycle, move it out to July and drop it down. You don't have to change the strikes. You don't have to change, the risk parameters necessarily. You're basically holding the same trade. You're just moving it out in time because you are getting closer and closer to expiration. We are now ever so slightly inside of that 21-day marker. And so I kind of like sticking with the in the money-ness of the strategy because that was the spirit of the strategy. Like, I think there's a lot to be had. I think there's a lot to be gained for sticking with the spirit of the strategy. Like, if you go in with a bullish bias on a given stock or an index, personally, I think until the end, until the very end, you got to stay bullish. Now, you can change, like you can adjust the degree of bullishness and you can be more bullish and less bullish and blah, 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 and all those kinds of things. But one thing that I think can be very, very damaging and very problematic is if you're constantly just flip-flopping around. Like, if you're bullish here and bearish there, because generally speaking, most of us, myself included, it's like, man, if I do that, I'm just going to end up buying tops and selling bottoms. Like, I'm just going to end up, essentially, buying at the worst possible time and selling at the worst possible time. So I kind of think, man, I think we just make our bed in the bathtub of filth and we stew in it. Like, we just sit or even lay down and we stew. Like that is what we are good at. And so I'm going to do the same thing here with Netflix. I want to stay bullish and maintain the spirit of the strategy here. So that is Netflix. That's what we're going to do. Let's just do it. Let's just pick it up and let's roll it out. So if I go to, wait, hold on. When does Netflix have earnings? It's got to be coming up, right? Netflix. The plot thickens. Look at that. So Netflix has earnings on July 16th, the day before July expiration. Look at that. All right. So we're going to take this through Netflix earnings? I mean, I guess so. I don't normally like to do this, but this feels a little bit different because we're not really underwater on the trade. I know we're down 75 cents, but it's basically a scratch at this point. It's not really that big of a deal. You know, I mean, something that's underwater like $3, $5, $10, $15, whatever, you know, and you're kind of using that earnings event as potentially a get out of jail free card. And by get out of jail free, I mean get out of jail where it's going to be quite costly. I don't love that because, you know, obviously if you get the move that you want, then it's all strawberries and sunshine. Like if you get the move that you want, it's like, all right, crack it open. We got the strawberries, we got the sunshine, we got the marshmallows, we got the macaroon, we got the tuna fish, we got the applesauce, obviously. But if it goes the other way, then you really are going to be eating some tuna fish and applesauce. Like that's all you've got left. And so I don't really love that trade. But with Netflix here, I think it's okay. So let's go ahead and roll this guy out. Even though we might be taking this through earnings, I mean, you got to risk it for the biscuit, man. You know, you got to risk it for the biscuit. Now, of course, make sure the biscuit is gluten-free, soy-free. You know, I would even prefer a sugar-free biscuit. You know, if you happen to be Autumn Schultz or my children, because she's the one that's feeding them most of the time. All the stuff that I want to give them, it is not allowed. And so let's go ahead and let's go out to July. I feel bad for the kids in some ways. I feel good for the kids because they're like super healthy and whatever. But sometimes I feel bad because I'll like, you know, sometimes you just got to have a Twinkie, right? Like sometimes you just got to hankering for a Twinkie. And so it's like, I want to sit on my couch in my house and eat a Twinkie, but I can't do that. Are you kidding me? Out in the open with the lights on? No chance, man. So I've got stashes like all around the house and I don't tell anybody about them. The only people that know about them now are me and you. So don't you dare rat me out. I got my little stashes over here. I got my little stashes over there and nobody knows about them. And so I got to eat those things in secret, but it's okay. It's not that bad. It could be worse. So let's go ahead and roll out this Netflix strategy. I'm not exactly sure why we brought that up, but that's pretty typical. All right, so we got filled at $2. There you go. Filled at $2 on Netflix, and we rolled that guy. Okay, so that is it. We covered everything in the portfolio, which is good. And let's see where you guys are at, man. Look at the market. Market's going to be unched on the day. Okay, all right. Let's go ahead and let me see. Can I? Man, I see you guys, man. You guys are putting in some work in that algo. Man, good job. Try to put in a little bit more work. The algo needs more work. On a Friday? Yeah, the algo absolutely needs more work. And so here we go. Let me surprise and delight somebody. Let's see. Well, I see my man Too Much Delta is in the house. What's going on there, Too Much Delta? I don't recall you having been in the chat before. So thank you so much for being here. I really appreciate you. Too Much Delta says, hey, Dr. Jim, what is a buffer trade? Please help me understand. I don't know what that is, honestly. I've never heard of that. I've heard of backstop trades, which I think are like, I've never done a backstop trade, but I've heard of a backstop trade. I think it's like a deep in the money. I could be totally misrepresenting this, but I think it's a deep, long-term in the money short push. I know that trade, but I don't know what a buffer trade is. So Too Much Delta. If you could elaborate on that a little bit, like help me out with like how it sets up and whatnot, and then I'll be happy to talk about it if I can kind of piece together what it is. So I'll come back in. I'll check the bottom of the chat here in a couple of minutes to see if you were able to do that. But let me see here. Where are you guys at? So Ron Vashar is in the house. What's going on there, Ron Vashar? Another surprise and delight. Do you think you may need to sell a put spread against your short call spread in Micron as a defensive hedge? Great question. This is such a good question. Thank you for bringing this up, Ron Vashar. I appreciate you. And most of the time in trading, as we know, the answers are maybe. Most of the time in trading, as we know, the answers are it depends. This time, the answer is pretty clear. No, we're not going to do this. Not going to sell a put spread against my call spread in Micron for one simple reason with maybe three parts to it. When I sold this call spread in Micron, This is a defined risk strategy, right? So one of the biggest benefits of a defined risk strategy is you know your maximum loss. You know your worst case scenario. Even if I am dead wrong, which it appears that's the path that I'm on, right? So if Micron goes to 1,000, 1,100, 1,250, 1,275, whatever, we're going to be out, $300, $280, whatever it is, right? It's not going to get any worse than that. And so in terms of going in and kind of trying to like hedge or even like use stop losses or things like that, that doesn't make sense to me when it comes to a defined risk strategy. I'm actually not a huge fan of stops just in general, but that's a separate discussion for another time. But definitely not with defined risk because you already have a built-in stop. You already have like a built-in mechanism that is going to act as your stop loss. And so like taking it off early, like in terms of like, all right, if it gets to 1x of credit received, I'm taking this guy off or a 50% loss or whatever. I don't love that strategy, especially with a stock like Micron, because this thing is crazy, man. Like this thing could drop 100 points on Monday. I mean, obviously it's not. This time is different. Market never goes down. Like I understand. Like I got it. But hypothetically, it could. Theoretically, it's possible. Right. And so I don't really want to hamstring myself and not be around when that happens. So for those same reasons, I don't feel the need to go in and add a put spread because if I were to do that, that's going to make it potentially very difficult to be profitable on this trade for the same reasons that when you put on a strategy like an iron condor, a lot of times it's very surprising to traders how long it takes them to hit their profit target. Just how difficult it actually is to make money on an iron condor. Now, if you go super wide or whatever, and it's actually more like a strangle, then it's more like a strangle. Like it's not really going to behave like an iron condor because it has more short strangle properties. But if you have like a, like a cookie cutter, plain vanilla Betty Crocker iron condor, like $5 wide, even $10 wide. I mean, there's so much friction between the two sides of the strategy that even when you get in the center, you're like, why am I red? Well, you're red because you still got to wait a lot more time for the extrinsic value to come off of the options. And you've got these two competing forces that are effectively repelling each other. And that is, obviously working against your efforts to be profitable on the strategy. So for me, because I'm already okay, I've already made peace with maximum loss if that's what happens. I don't feel any type of need to go in and like hedge this guy with a short put spread and kind of leg into an iron condor. I'm not really interested in doing that. Now, when you start talking about undefined risk and you start talking about naked strategies like strangles or short puts or short calls, whatever, that's a whole different discussion. And so now the hedges are a big part of the equation and the management and all the different things are definitely a much, much bigger part. So hopefully that helps you there, Ram Vishar. But thank you for bringing that up. Did Too Much Delta drop something in there? He did not, but Antonio said, Dr. Jim, usually Liz and Jenny talk about a buffer trade. Oh, really? Interesting. An in the money short put with an out of the money or at the money put debit spread. Interesting. Let's set one up. Okay. This is another Liz and Jenny special. An in the money short put with an out of the money or at the money put debit spread. So if I went into let me find a stock here. What if I did like IBM? What's IBM at? 294. Yeah, it's still a little too high. I'm trying to think of something I could do that makes sense from a naked standpoint. Let's just do, I'm just going to pick Amazon just so I'm not searching and wasting a bunch of time. Let me go to July. This is going to be too big for me, but it'll still work for us understanding what this means. So in the money, so I don't know how deep in the money I would typically go. Maybe, let's see. Oh, Fauzia does buffer trades. Oh, there you go. Okay. Is a Fauzia special? Nice. So if I sell like a 295 put, pretty deep in the money, and then I buy like an at the money or slightly out of the money put spread. So I'm going to use some of my credit to kind of give me, some downside protection. Let's look at the curve view on this guy. Yeah, so this really looks like, so in a lot of ways, this is going to look like sort of like a short put spread with unlimited risk to the downside. Like that's how I'm looking at this. And so it's obviously not like that at all when you actually say it out loud like that. But but as I'm looking at the curve view, I'm like, well, I've got limited profit potential to the upside. That makes sense because of the in the money short put. But then I've got like this weird little area where, if Amazon goes down a little bit, the put spread that I buy is actually going to kick in, and it's going to help to kind of, buffer against losses. That's where you kind of have this horizontal line in the loss region. But then at a certain point, it's only going to, offer so much buffer, hence the name. And so it's very interesting. I'd have to think about this a little bit more before I put one on, but it's definitely very interesting. I mean, if you're in the same boat as Liz and Jenny and Fauzia, like, man, you are in a really, really good spot. And so I'm going to pass for now, but now I know what a buffer trade is, so that's good. So I appreciate you guys very, very much. Let's see. If I do, let's go back to the beginning, man. Where are you guys at? Look at you guys, man. Just getting it done. Putting in work. Orgdenu's in the house. What's going on there, Orgdenu? Hello, Dr. Jim. Yesterday, you mentioned that in low volatility, we should take more directional shots with future plays. It's definitely an option. Can you elaborate on that? You make trading so much fun. Thank you. I mean, I appreciate you so much. Basically, what I mean by that is this. As premium sellers, right, we prefer to sell premium. As premium sellers, it's the short premium that's going to really be the unlock, the skeleton key, if you will, for everything else that we're trying to do. And that is, that is always the case at all times, in all market conditions. However, when you get in a scenario where the VIX is 15, now all of a sudden, it's like, man, there's not as much to do from a short premium standpoint. Now, again, you've got earnings. You can actually sort by individual stocks and find the high IVR names and what have you. And so you can usually continue to keep things moving forward to some degree, but it's not going to be like it was when the VIX was 24. And it was like, man, sell whatever you want. Like, just close your eyes and pick a stock on the list. Like, it's going to have an IVR that's 40 or 50 or 60 or 70. And it's going to be a great opportunity for you to sell premium. That's not the case anymore. So now we have to get a little bit more, and we have to broaden our horizons, right, when it comes to the different things that we're doing. And a couple of ways that you can do that is if you're comfortable trading futures. I mean, this is when you can take some directional shots, just using the straight futures. You can do your scalps, you can do your swing trades, I mean, whatever you do. And so it could be MNQ, it could be MES. I mean, there's a number of ways that you could play that. Or if you really haven't done futures before, but you're still comfortable with options, of course, this is where doing at the money spreads can make a lot of sense. This is where doing your at the money, like vertical spreads and whatnot, can make a whole lot of sense. And so, volatility is low. Options are relatively cheap. And so from the standpoint of taking directional shots, it's going to make a little bit more sense right now. You could even do like what I talked about in the calculated risk. It was either yesterday or the day before. I think maybe it was yesterday. Talking about the deep in the money options as a synthetic substitute for like, a directional shot or a long or a short stock exposure. Those are also going to be cheaper because the extrinsic values are less. And so you can take, a 90 delta option that's going to basically give you 90% of the stock move, and you can get it for a much lower price than you would be able to when volatility is higher. And so that's what I meant by that, Orgdenu. Hopefully that gives you a few additional thoughts. Samuel's in the house. What's up there, Samuel? Happy Friday, Doc. With this heat, where's the banana natty? I know, man. Time to hydrate before another bloop emotionally damages our positions. Yes, they're definitely going to. They're going to do some things. And then, Doc, check out Dell. The Dell bloop in progress. We need your TA expertise immediately, man. I'll give you what I got. Dell 414, man. Look at Dell, man. Look at that chart, man. Look at that chart. Not a bloop in sight. Not a bloop in sight. I mean, I wish there was. I'd love to muster one up, but I got to be authentic with you guys, man. If it's not there, it's not there. Right? You can't force feed the bloop. Right? You can't square the circle with the bloop. Like, the bloop tells you when it's ready. You don't tell the bloop when it's ready. Right? And so when we're looking at Dell, man, this thing's heading to 500. And again, I don't make the rules, but if you need to know, the next three ticks in Dell are 500. 625 and 71. I mean, that's it. It's written, right? Again, I don't make the rules, but this is the way that it has to be. And so there you go. Dell up $97 today. Man, that's exactly the kind of thing you like to see in a very, very healthy bull market. And so Wolf is in the house. What's going on there, Wolf? Appreciate you, my friend. Griffin Jones is here. What is up there, Griffin Jones? My man. And so Ranch is here. Howdy, Doc. Good afternoon. What's going on there, Ranch? Theta Chair, Dr. Jim, the host on the previous show, are claiming it's nearly June. Please confirm that it is still February. Thank you. Yeah, no, not only is it June, but it is June of 2026, my friend. It's not 2023. It's not 2021. This isn't 2019, right? It is June of 2026. 2026 is half over. Like 2026, done and dusted. Like just shut her down. Like it's over. Like 2030 is, you know, the next tick. And so it's pretty crazy stuff, man. Pretty wild stuff indeed. And so Paul Heyman is here. Paul Heyman sold 2 MU 0 GT 840 puts at 13 cents. One bonefish dinner tonight. That is correct. Paul, you're a good guy, man. You know this is the case, so I don't have to tell you anything that you don't know, but that is a terrible, terrible trade. But you already knew that. But terrible trade or not, I mean, one BEU is one BEU, right? I mean, if you're able to commandeer one bonefish equivalent unit, which again, one bonefish equivalent unit is equal to 25 US dollars. That's one BEU, man. Like, I mean, the Bang Bang shrimps are what, $8? $8 a plate? I mean, with, you know, inflation and stuff, maybe $12.50 now. So you got 2 Bang Bangs. I mean, that's Saturday brunch and Sunday brunch. That's back-to-back brunches. I mean, that's some good stuff, man. And so well done there, my friend. Just don't do that again, man. That's not, I mean, even I know, and I'm not very good at this. Even I know that that is not a good trade. And so Brian Dowdy's in the house. What's going on there, Brian Dowdy? I appreciate you, my friend. Brian Rakuten is here. What is up there, Brian Rakuten? Danish Dynamite is here. What is up there, Danish Dynamite? I hope all is well. This nonstop grind lower in volatility is brutal. Can we please untackle something? Or don't worry. It'll just happen. It'll just do it. It'll just happen naturally. We don't need to force feed it. This is very similar to bloop analysis. Like it will tell you when it's ready. Like when it's ready to bloom, it will take care of it all. You don't have to do anything, right? It's like a wild animal in the jungle, man. It can defend itself. Like you don't have to worry about it. It'll happen. This weekend, almost assuredly. Don't even worry about it. Clean Tigers in the house. What's going on there, Clean Tigers? Right back to 7,600. We are there, man. ES, 75.91. I don't know if you're referring to SPX or ES, but SPX is like 75, right? Oh, 75, 77. Yeah, they're getting close because expiration is getting close, obviously. So you've got the convergence there. Emmett Morrison is here. What is up? Happy Friday, Dr. Jim. Feeling the pain in Dell today. Looks like I'll be managing my way out of this position for the next year or so, man. Whew. Emmett, so you're short Dell and you're also short Micron, right? Man, that's tough stuff, man. That really is tough stuff. And so, I mean, my best advice, all kidding aside, is just make sure your size is in check. I mean, obviously, a lot of pain is a lot of pain. Like at a certain point, there's only so much you can do. Like I understand that, but just make sure your size is in check. And you know, if it is, and you still want to continue to play it short, then play it short. But you know, everybody has a breaking point, man. Everybody has a certain point where it's like, all right, I'm done. Like I've been in the bathtub of filth for a couple days, couple weeks, couple months, whatever it's been. And you're like, hey, I just kind of want to be done with this thing and move on to some other things, right? And hopefully you're not in a situation where, you know, it's really, really damaging to where it's going to take you that much to get out of the hole. I mean, we all have to deal with, you know, small holes, medium holes, even big holes. It's really the kind of huge catastrophic holes that we all want to try to avoid. So hopefully you're not in that scenario. But Dell's that's pretty tricky stuff, man. And so let's see where you guys are at. If I do, no, hold on. There we go. Emmett Morrison. Sergio's in the house. What's up there, Sergio? Michael Ellison is here. What is up there, Michael Ellison? Data Trader, the thing we are trying to do is get Dr. Jim back on an even hour start time instead of this 13:30 hours central daylight time. No, that's not right. Is that right? CDT? I always see CFC, so Central Standard Time. Is it daylight time, CDT? It does not feel right at all. But I agree, it's a little bit janky. It's kind of like seeing a janky strike in the option chain. But come on, man, like you've seen the show, you're part of the core position. Is there anything more perfect than my show starting on a janky strike? That's the only way it has to be, man. Like we should actually move it to like 233, actually. 230 is a little bit too feng shui for my liking the more I think about it. I think I should push for like a 234 start time. That would really fit the vibe of the show perfectly. So, Samuel, algo update. The heat levels are rising. They most certainly are. Hydration now officially a core risk management strategy. What is your go-to, Doc, cocktail besides banana natty? I mean, obviously, you got your Ghost. Obviously, you've got your oat milk lattes, right? Obviously, we mix in a little bit of water. But then, I mean, the king of the jungle, man. Like, the king of the jungle is Diet Pepsi. 100%. Like, there is nothing more delicious. There is nothing more refreshing. Like there was nothing that, I mean, it just, like it tastes like joy. It tastes like happiness. And they haven't changed the formula in 47 years. And so it's some pretty good stuff. So Jeffrey Buffkin is in the house. What is going on? Is the chat hosted on YouTube? It is, my friend. So if you're not watching on YouTube, this is why I always encourage people to bounce on over YouTube. because this is where I'm taking the questions from, because we can't take them on Tasty Live. There's no functionality to do that. And so I'm getting like all the questions that come in the comments and what have you around the second half of the show. I'm getting these from the YouTube chat. So just hop over to Tasty Live's YouTube channel, click on the live tab, click on the live trading. It's just one stream the whole day. So as long as you're watching from 2:30 to 3:15 Eastern, 1:30 to 2:15 CDT apparently, then you can hop into the chat and you can be a part of the discussion. And then you'll kind of see where I'm getting all the questions from and where all the commentary is coming from. But thank you there, Jeffrey Buffkin. And so Margin Walker, well, wait a minute. You knew that because you're in the YouTube chat when you said that. You got me there for a second. I was like, wait a minute. You're actually in the chat. Nicely done, my friend. You may not have even meant to do that, but you did it, man. And you did it quite well. Margin Walker, Dr. J, what up, my man? Should we get Long Dell? I feel like I owe you one on that name. Man, I don't know. I can't buy Dell here, man. I mean, again, I'm not very good at this, but at least I know you can't buy Dell here, right? We're not buying them high and selling them higher. We're not doing that, right? I cannot bring myself to do that, right? This isn't William J. O'Neill hour. Like, we're not doing that. Absolutely not. Now, if you don't want to sell it, you don't want to short it, that's fine. Like, I 100% understand that, right? But getting long here, again, I'm very, very bad at this, and even I know not to do that. E-Media, look at SLV on the TT platform. Why does it say it's fractional, undivided beneficial shares? I thought it's iShares Silver. Man, I don't know. That's crazy. I thought it was too. Fractional, undivided beneficial interests. That kind of sounds like how I typically just refer to what I like to do with my spare time. Like, I would like to spend my time just doing things that are kind of fractional, undivided, and they're beneficial. They're beneficial to my interests. And so that just seems like kind of a personal way that I would describe. Like, when Autumn asks me when I get done with the day today and I go in there when the market closes, she's going to say, well, what do you want to do tonight? I'm going to say, well, now that you ask and now that I think about it, maybe we do something that's kind of fractional, undivided, beneficial shares, beneficial interests. Like, maybe that's what we do. And so that's typically how I would look at that. Samuel, time to enjoy the weekend. Markets out. Bloops are paused. They most certainly are. And the Banana Natty is fully in recovery mode. Now, the Banana Natty is always in get after mode. But I appreciate you there, Sam. Daniel is here. DMZ is here. Any trade on Dell? Not touching it, man. Of course, I would have to be short, but even I know I'm like, okay, that's probably not a good idea either. So we're just going to watch it from the sidelines. You can always just watch from the sidelines. We don't have to be a part of it. Let's see. Griffin Jones, N1C is here. Theta Trader is here. Man, I'm out of time. That's so crazy. I see Joel James is here. What's up there, Joel James? Superstar is here. Man, look at you guys, man. I appreciate you guys so very much. Sparky Dog is here. Man, who else? Clean Tiger. Well, Clean Tiger was out here. Mr. Pillows is here. Smack Lovin is here. Smack Lovin did the ZC ZS scaler. Nice job there, Smack Lovin. I appreciate you, my friend. Too Much Delta. Oh, there's Too Much Delta again. iPod Touch is here. My man. And so I appreciate you guys so very much. I got to run and get you to the next show. But guys, if I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Pay for
backtesting? Nah, trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Hello, everybody. Tim Knight here. Happy Friday. I can't believe it's Friday already. In fact, I get so cross-eyed about what day it was. I think yesterday, I thought Dell had already come out with their earnings. They had not. So, yeah. They had such a strong day yesterday. I figure they must have. But they came out with earnings yesterday afternoon, and wow. They just exploded higher. And that'll actually be our last chart today. But we're at lifetime highs, as usual. Although if you add up the ES, the NQ, the RTY, the YM, divided by 4, you kind of get unchanged at this point. Because, the RTY is down 0.85%, the YM's up 0.6%, ES and NQ are up just a little bit. So it's like a wash overall. Market's tired. We're at exceptionally high levels now, higher than ever, as usual. And it's T-minus 2 weeks until SpaceX. And I just, we're putting together a little surprise for you on that. But it's going to be very exciting in a couple of weeks from today. It's all anybody's going to be talking about, I'm sure. But that's not here yet. It's a couple of weeks off. I've got some charts for you in the meantime. So let us wrap up the week and catch up with what's going on out there. Lifetime highs on the diamonds. Not a surprise. This was our former peak, and we finally bested it a few days ago. We basically spent the week carving out nominally new highs, with today kind of the first big punch higher. But there we have it. The Dow had been kind of a laggard for a while, but now it's definitely caught up. One item that has not been a laggard, of course, is tech stocks. Here's XLK with what continues to astonish me, the most incredible fake out in human history, breakdown and this explosive move higher from out of the blue. And there we have it. Look at that. Never higher. One thing that keeps me going is that the day will come that this whole AI thing makes a U-turn. I don't know if it's going to be next month or 5 years from now, but it's going to be pretty amazing to watch because the plumbing is so complex, the interdependencies are so vast. It's going to be astonishing. But until then, we'll just keep celebrating lifetime highs because semiconductors and anything to do with hyperscaling just keeps vaulting higher and higher. So XLK is showing it very nicely. But yeah, it's just, it's not supposed to do this. This was just absolutely incredible. Although in fairness to the wonderful world of charting, basically this pattern was negated the moment we pierced back into it. I mean, this was the day it was like, yeah, something's wrong here. We didn't know how wrong until later, of course. But yeah, that's XLK. And also just a demonstration of how fear hasn't just left the building, it's left the zip code and the state. Here's UVIX. This is the ultra long VIX futures, which tends to fall anyway. But yeah, grinding to another lifetime low there. The VIX has gone down to like 15 at this point. We're sort of scraping the bottom of the barrel at this point. And of course, anything leveraged against volatility is just burning itself to death. I mean, it's basically a red bar every single day. Shocking stuff. I will say, looking at the semiconductors, they're kind of gasping for breath right now because we've gone very far, very fast. But in retrospect, the sort of completely unimpeded trampling by the bulls ended back here on the 11th of May. We took a stumble. We had another lift. We're just kind of hanging out there. We haven't gone much higher than where we were on May 11. And we're ending May today, of course, from a trading perspective. But this was just straight up virtually. And then we've been a little more wobbly since then. And the past 4 trading days haven't really gone anywhere. It varies from stock to stock, of course. Micron's blasting higher again, whereas some others are looking a little bit weaker. We'll turn back to that in a moment. Over in South Korea, it too has been a big beneficiary of the DRAM and the semiconductor mega rallies. It is off a little right now, almost 1%. Lifetime high was yesterday. We're shaving just a little of it off today. But yeah, you can see, this is kind of normal, what you expect. Nobody cares about South Korean stocks. And then everything changed around April of last year. And so this has gone up. It's hard to believe. 300%. 300% in a little more than a year. That's remarkable. There are some sectors here and there that aren't doing so great, especially when it deals with sort of the Main Street versus Wall Street shtick. Here's XLP, for example, the consumer discretionary, way off its own highs, and even today down over 1.5%, and a new gap having been formed right there. So XLP looking quite weak. And retail, XRT, this is also down almost 2%. It had a nice little top here, fell, pushed back into that pattern, fell again. So it's more range bound here, you can see. For actually coming into years at this point, you can see we're just sort of cycling like so with shorter and shorter periods between each cycle. But we are slipping today somewhat on XRT. Yesterday's peak seems to have been just about all she wrote in terms of this counter trend rally. So now we're starting to weaken again on that. But getting back to everyone's favorite topic, semiconductors, I mentioned yesterday that sector really needs NVIDIA to brush itself off and start to gain some strength. And so far it has done that. We had fallen, as I discussed yesterday, even a little bit into this range again. Yesterday it got up on its feet and pushed higher, and then today we're pushing higher still. So we are bouncing somewhat from that. So that is behaving itself as a support zone so far. In turn, SMH is, as Tom used to say, massively unchanged right now, because that's a combination of like NVIDIA and Micron showing strength, whereas other semiconductor stocks like AMD showing some weakness. So it's all kind of washed out to nothing right now. The past 4 days, really going nowhere fast. Lots of trading, but really nothing in terms of decisive action. You got that one last little leap on Tuesday, but since then, Tuesday, Wednesday, Thursday, Friday. Actually, I keep forgetting this was Friday here. So yeah, into this whole week, the entire week has been just lingering up here. There was no Monday trading. That was Memorial Day, of course. AMD, as I mentioned, is a little pocket of weakness in the midst of an otherwise strong sector. It's down over 2.5% right now. Not that big a deal in terms of the overall picture. You can see it's nothing remarkable at all about today's price bar. It had been for months just banging itself against this resistance, but it finally, we can see in retrospect here, we had a very nice base here. Really an inverted head and shoulders on this one as that completed. And it didn't even bother retracing. It was just a straight shot higher and then a big gap higher, and up we go. So yes, it's a little lower right now, but hardly even worth mentioning. I don't actually have any semiconductor positions except for some Intel puts, which I started buying, I think just earlier this week. INTC. Intel's down today 2.25%. I don't remember the expiration of my puts, but probably October. These days, even September is too soon for me now, so I'm keeping it at least half a year out. But Intel trying to catch its breath there. It peaked itself back on the 11th. Just as I was pointing out, that was kind of the last unvarnished lurch higher, and we're actually been below that ever since, which is pretty bad for a semiconductor firm these days. So yeah, that's Intel. Micron MU is strong, up over $20 today, which translates to about a 2.25% push higher. Lifetime high intraday, probably a lifetime high close, although the past 3 days, trading days, have been red bars. But yeah, you can see just how fantastic that rise has been as well. Maybe if you go back to the late 90s, we can see some action like this. This may be unprecedented in the history of the semiconductor sector. Couple of last ones. AXT has the unusual phenomena of being down every single day this week. That's weird. This had been just a sensational, reliable blast higher. We had moved from, we're talking 100-fold. It's just like, what? But yeah, this was virtually a penny stock back around Liberation Day, and now it's a triple-digit stock. And the recent dip we've seen, again, is not unprecedented. We've seen dips along the way, here and here and here and here and all along the way. So this could be just yet another pause, but it's a little interesting to me that this thing has sunk pretty solidly 4 days in a row. Maybe this was the top on this one, because otherwise it's just a bottle rocket. And one last really interesting one is a very young one, CBRS. This has only been public 2 or 3 weeks. Look at that. We have gone from around 385 down to 234. That's something like a 40% drop. And as I mentioned in a video I just did, the stock has been a great performer and a horrible performer at exactly the same time. Because when it came out, it was supposed to come out like at 115. Then they bumped it up to 150 because demand was so strong. Then they bumped it up to like 180 or 185. And when it came out, it was almost $400. So from that perspective, even after this demolition, it's way higher than even its goosed IPO price. So it's been a great sensation. From a retail perspective, it stinks. It's down almost every day in the context of a raging bull market and a really raging semiconductor sector. So it's like the Schrodinger's cat of stock performance. Up and down. We're always talking about chips and ships here. As far as ship goes, we'll just mention one. This is the UFO ETF. This, of course, is focused on rockets and space, and it has been a tremendous performer as well. It's up hundreds and hundreds of percent since Liberation Day. The funny thing is that if you look at the entire history of it, it actually was a pretty lousy creature. From 2021 to 2024, it lost most of its value. And it really only got to be a superstar starting in 2021. And with increasing fervor, sharper and sharper ascents, all because of SpaceX, of course, it has become a phenomenal stock. Oh, gee, I see we have 2 minutes left. I better pick up the pace. SNDK, SanDisk, another pop on that one, although quite a modest one, just augmenting its huge gains already. A few shorts I've got that are doing okay. Sienna is down about 1.5%. Corning, GLW, has been a good performer, down every single day this week. Another short of mine. Lumentum, which is LITE, not only down again, but I just noticed dainty little head and shoulders top right there. So that could add to some sinkage next week. And Meta gave me a scare on Tuesday, but it's burning off some of those gains. On Wednesday. So it's been slipping, which is helpful too. Bonds are unchanged right now. As I had hoped, as we approach this enormous blob of overhead supply, It is slowing down that price ascent that we've experienced. And we can see this reflected in TLT, which also got very, very close to its price gap, but happily did not violate this price gap. So I've actually added today to those September 30 TLT $86 puts. I'd really appreciate if bonds would fall next week, if you don't mind. In the final moments we've got, let's just wrap it up. A couple of quick things with here's Bitcoin by way of BITI. This is the inverse of Bitcoin. Looks pretty bullish here. That is to say, bearish for Bitcoin. I've re-entered this trade with a tight stop at a few pennies below today's low. And because I'm out of time, I'm just going to jump to the bottom of my chart list to Dell, which is blasting higher by $100 today. Biggest the stock is. I went ahead and I didn't plan to, but I shorted this at 425 earlier today, just because it seems really expensive right now. We'll see if that works out, but at least the earnings risk is gone because happily I did not come into the day short this monster. So tremendous day for Dell there as well. Okay, well, as I say, T-minus 2 weeks to SpaceX. Have a good weekend. I'll see you on Monday, and thanks as always for coming by. Goodbye.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
First thing about tastytrade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
When you trade options at tastytrade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We are back. It's the final 30 minutes of the trading week, final 30 minutes of the trading month, in fact. You're watching Last Call. I'm your host, Chris Vecchio in New York, Elias Spivak in San Francisco. Ilya, we can go right to the charts, Matt. Stocks have perked up a little bit here as we're going into the end of the day. S&P 500 up by 20 points now, 0.25%. NASDAQ up by 0.3%. Your Dow Jones up by 0.7%, nearly 0.8% here, closing in on session highs and what would be all-time highs right now. Oil prices, not exactly the catalyst here in the second half of the day. This is not related to a Iran war headline, Ilya. Oil is pressing some intraday highs, so to speak, up near $88 a barrel. Across the board, though, we do see that bond yields have come in modestly. Notes are off the session highs, but they are still off the session lows. ZB bonds themselves are unchanged on the day. Gold is falling back a bit, as is silver, which has not had that great of a session. Beyond that, though, I think the name of the day or the word of the day is QQEW, which the equal-weighted NASDAQ is up nearly 2% right now to a new what would be all-time closing high here. So a little bit of broadening out still in this AI-driven rally in these markets.
IGB had a massive day.
A lot of short covering there going on too. 5.77% higher here. A lot of names in this basket heavily shorted. I know it's something that you're long, so kudos to you. Let's take a step back here.
I'm having some very rare being long stocks enjoyment.
It must be so uncomfortable.
It's terrible.
So let's consider the price action here at the end of the day, Ilya. Volatility has fallen off a cliff. Like step one, where does the tasty world look? 1528 in the VIX. We head over to VX. It's 1749 right near session lows. These will be closing lows that we've seen in VIX going back to mid-January. And for the VX M26, it will be the cycle close low in the contract. Ilya, why is everyone so hunky-dory, happy, easy-go-lucky heading into another war weekend?
I think it sort of depends what version of hunky-dory you're looking at. So it's a very interesting term structure now in the VIX contract. So, of course, the front end, let's call it the June contract, VXM, 17.5 lows. It's absolutely fallen off a cliff. The gap between that and, let's say, VXQ is widening aggressively. And if you look at the spread between, let's say, January of next year and right now, it's opened up to something like a 5-point spread. So there seems to be this sense that if the market, if you wanted to kind of put a story around what it seems like you're seeing, the market is saying, okay, the immediate near term, holy moly, looks like it's diffused. But the larger, what are we going to do with all of this inflation part of it, that's clearly unresolved and carries with it all manner of uncertainty because, of course, nobody knows what growth is going to do. Because now the key question is, do you actually have an environment where central banks really do need to do something about growth, except they can't, because the reason they have to do something about growth is inflation. And so their hands are tied at a time when you don't really have a great amount of coherence fiscally around the world in general. And so you look at this whole thing and you go, okay, why is volatility this way? Well, yeah, okay, I can understand why June volatility is this way. It looks like maybe this thing is real. We're going to kick this can down the road 60 days and then decide that nobody wants to give up their uranium and nobody is okay with tolls on the Strait of Hormuz. Let's do that in 2 months. In the meantime, that part of it is resolved, so the vol comes out. It escalates very quickly after. And when you start to look at where the vol is for December, for November, it's all very clustered all of a sudden. So June is kind of on an island. And I think that paints a picture.
Short term right now, Ilya, the market is still convinced that this AI rally continues. One of the little quirks about the market right now, S&P 500 short interest as a percent of its market cap is up at 3% here, according to Goldman Sachs. That is the highest it's been since 2012. Yes, that's higher than it was during COVID, higher than it was during the great bear markets of late 2010s. So there is this tail right now. I saw like yesterday a number that CTAs are sitting short like 90 something billion dollars of the S&P 500. So every day where it squeezes a little bit higher, it's forcing a little bit more short covering. So this may be a mechanical squeeze that's playing out in the market right now as this thing kind of runs on fumes. We're only at 1.15 million contracts traded today for a last day of the trading month. It seems a little soft. In terms of positioning, I know that you said you have something on an IGV. I am staring down the barrel of a gun right now at a long 7,600 short 7,625 call spread here. That's at 0 DTE. So I have minutes left for this market to rip a little bit higher so I can squeeze every little drop of blood out of this stone.
Make sure you get filled.
I got, 6 minutes. See what happens. We'll have a little
Just don't go unfilled.
No, but this week, Ilya, I was out here being apparently a fool, as many people are referring to it, and buying the dip in semiconductors. I likewise put on a new position in NVIDIA here, trying to buy the dip when we were getting back into this little former zone of support and resistance that had been established for a number of months here right now. You mentioned the VIX curve here, our volatility curve right now. It can signal complacency, or at least that complacencies are turning. Spot VIX remaining subdued and the VIX futures curve in that steep contango. It supports carry strategies, but more selective premium selling. And that structure really does fit the current tape, right? Equities near highs, oil is coming off. Markets are treating the US-Iran ceasefire headlines as progress, even if we haven't had a finality. The short-term issue is that there's active event risk. Of course, we could have a Iran headline over the weekend. We have inflation remaining above target, as you said. PCE is at 3% now. SpaceX is beginning to market their IPO. Maybe it comes down the pipeline on June 4th. What kind of liquidity event does that produce for stocks?
PCE is almost at 4 now.
So the contango in the volatility curve, it still supports selective premium selling, but in a much more defined risk manner. Up here at highs, I'm not nakedly buying ES. I'm buying an ES call spread. I'm doing that in SMH through defined risk trades right now, because if this thing does reverse, it could reverse hard. The recent Bank of America fund manager survey, 73% of fund managers say they're long SMH right now. So you could get that reflexive
getting a little hot.
Getting a little hot, getting a little crowded, more crowded than gold was at its peak last year, I think.
Yes.
But that's why if you're going to continue to chase this thing higher,
fewer steps on the way down.
Yeah.
More air pockets.
If you're going to continue to chase this thing higher, you have to do it in a very measured way.
Yeah.
The way that I've adapted to this, Ilya, and I'm really not a short-term trader, but it's been working because you have to adapt to the market environment, is to prevent myself from bearing on this risk. I've been trying to stay into like a 0, 1, 2, 3 day option expiry cycle. And when we get those pullbacks into the 1 week moving average, buy that dip and see if it can take us up to new highs. So I'm not looking for like a 45 in, 21 out right now in terms of selling a put spread in ES to express my view, or buying a long call spread. If this thing breaks, it's probably going to break hard. But until it does, on a day-by-day basis, I think it's still efficacious to feed coins into the machine until it stops spitting out those prizes.
I don't think there's anything wrong with that. I just am not going to do it because I do not have confidence in my temperament as a trader to operate on short time scales. I have an approach that sort of works with the way that I think about things. And sure enough, every time I deviate from that approach, it clouds my lens and starts me down a path of decisions that I end up saying, well, if I just was operating in the markets the way I always do, this would not be a mistake that would have been made. And that's something you learn about yourself as you engage with market. So I think all of what you just said makes sense, but I am not going to do it, not because it's not, in my mind, something that is sensible, but because I'm just not going to get into a tractor and drive where typically a Honda CRV is my speed.
Matt, while we have people here, can we throw up the PDT on the screen good time as ever. And before you do that, make sure you like and subscribe for more of our content. PDT going away on June 4th. Maybe the SpaceX IPO day. Oh, gosh. That could be a lot of fun. We're going to be here covering it live. $25,000 account minimum rule is going away. It's going to change maybe how you approach the markets. Mike Butler has explained this far better than I can. He's much more eloquent about it. But I do want to use this as an opportunity to kind of speak to what this change means for some types of traders, particularly futures traders. When you said not doing something different than what you normally do, I myself got into futures trading specifically because the way that I wanted to operate in the market wasn't available through Trading SPY. Ilya and I both come from the FX world where you can trade basically 24/5. And so I was really drawn
with good liquidity.
With good liquidity. And in ES and MES, this is a deep liquid market basically around the clock. There's also the consideration that if you are going into, say SPY versus the S&P 500, you got to consider taxes. People don't ever consider taxes when they think about what product they're trading here. Futures contracts fall under the Section 1256 treatment, which means profits are taxed 60% at the long-term capital gains rate and 40% of the short-term capital gains rate, regardless of how long the trade is held. And that distinction becomes meaningful. If you're a high volume trader who's turning over 20, 30, 50, $100,000 a year in profit, operating in futures versus ES versus SPY could make a meaningful difference in how much money you actually come home with. So to Ilya's point about not stepping away from your trading style, in the same vein, if you've been using ES instead of SPY and it's been working for you, or SPX instead of SPY and it's been working for you, don't change something that's not broken until you have the confidence that your new way of operating in the market around a similar product will still yield the type of returns that you're seeking through your operations. Matt, I think we can go back to the charts here. Fair enough. 7603, Ilya. 26.1 IVR, NASDAQ here pulling up a little bit too. What's been the most surprising part of this market for you this week?
I think the fact that the market is giving the benefit of doubt to the fifth consecutive we have a deal done kind of a thing is, I wouldn't say surprising so much as it is impressive. I mean, this market seamlessly went from, what was it, about 2.5, 3 weeks of we don't care about the Iran war because we have this earnings stuff going on and this sounds good, to when the earnings stuff ended saying, oh, we have a good headline from the Iran war. Okay, we care about that now. And sort of cherry picking the news flow, as you often see, because the market is going to do what the market wants to do at any given time. And just watching, especially over the past, let's say, week and a half, this very grinding rise, I mean, 7 consecutive sessions now, just this relentless rise, but with fading momentum, fading volume, increasingly kind of precarious underpinning, as if the hot potato is getting heavy and you're getting to the point where people really, really don't want to hold it, but are compelled to try. And it's what makes me think, looking at the price action, that we're getting to some sort of an exhaustion, something. But the resilience of this market has just been absolutely relentless, and its capacity to switch from narrative to narrative when it suits that rise has been impressive. Not even a hiccup, just seamless, straight through.
I think the most surprising part of the market this week has been gold, just in terms of the sequencing of how it's traded, where just a few days ago it had that big down day, even though oil was down big. Oil yesterday was flattish. Gold has a big bounce back, kind of digesting the news today. It's up a little bit more with oil down. One of the messages I receive frequently is like, are you ready to buy the dip in gold? I guess I really made that a dominant part of my personality on air last year. So people associated with me, which in fairness, I think was well suited and earned given what I was trading. It feels like this is still a very difficult bull case for me. Volatility is still declining. The market is still in a downtrend. 21 is still below the 50. And all the buyers in the market last year that were propping this thing up, ex-China, are probably sidelined for a bit because they need to spend their money on other things.
Well, in China too.
Even China possibly. So I'm surprised that gold didn't have a better week than it did, given the fact that oil basically fell apart. Oil was trading what at the start of this week? We were talking about mid-90s here. We go to May. What's the first day of this week? The 26th, technically. So we closed last Friday at 96.60.
Yeah.
We're down $9. This is a 10% loss this week for
the big move.
Oil. And yet gold could not be bothered. Silver could not be bothered. Bonds were barely bothered to make a move higher.
I think that's really the most insightful thing that you get from the markets this week, because you saw it in the CPI numbers, you saw it in the PPI numbers, but the market was still sensitive to near-term headlines. I think you just hit the nail on the head. Right here this week, maybe the most interesting thing we saw was the market going, we are not going to unclench inflation risk just because oil is down. It's not about what oil is. It's about this is here now.
A counterpoint to this would be GDX is having a really good day, up 2.4%, and often you don't get a move higher in gold. The miners are going to probably be a tell there of sorts. So GDX and GDXJ doing so well. Maybe there is legitimacy to this gold move now. When gold had been trying to rally previously since its pullback at the end of January, when the miners weren't participating, gold didn't have a prayer. You know, the miners actually cleared. People forget they cleared their late January highs, even if gold prices, gold prices, we go back to the GCQ6 contract, gold prices technically did not here.
Yeah.
So that to me is definitely one of the surprises of the market this week. I don't think we need to read too much more into it than maybe we're carving out a bottom, but trading it like we were trading it last year is not the world we're going back into. And that to me is the biggest takeaway. Just because the Iran war ends, right, doesn't mean that you're returning to a world that existed prior to the Iran war starting.
Yes.
And so it's not like, the war is over, so let's just go back to doing what we were doing in, December, January, February. There's different inputs for the time being in the short term. So Ilya, I think gold right now, if there's a bigger rally here, like if we get to $4,800 an ounce and oil finds itself sticking around the 80s, it probably is going to be a fade for me more than anything else.
Well, I mean, take a look since the highs in April, and I mean, I've looked at this in the most simpleton way imaginable. Here's the high in April. What do we have from then? Lower highs and lower lows. This is by definition a trend that points down. Show me a break of that sequence and I'll change my mind. In the meantime, of course, you're testing this bottom at 4,400 or so, where you landed in late March, early April on the war trade. So not surprising, really, to get some friction right here. But until shown otherwise, the trend in gold is down.
Trend in gold is down. Ilya, we got less than 10 minutes left here, so we're going to take a look at the high options volume page here on the platform. Top three tickers today: SPY, Triple Qs, SPX. Got some notes here from my man behind the screen, Frank. Frank, where did they go, Frank? We're going to find them here, Ilya. The point is, though, that it's some of the usual suspects at the top. NVIDIA right now turning around a little bit here to as we go into the close, but NVIDIA here off by 0.4%. Tesla down by 1.5%, although off the session lows. We have the Russell as a top performer in terms of trading volume today, and Microsoft. Hello. This is the interesting one that we've come across. Jamal has been talking up Microsoft. I've heard, I think, Mike Butler talk up Microsoft recently. He was speaking very favorably about Microsoft yesterday on last call, thinking about a longer term play to the upside. This is starting to look a left shoulder head, shorter right shoulder. We got a pretty clean neckline there. We got a break of a downtrend here. We obviously know it's part of the IGV software story. Hey, you know what's been coming up on my screen? It's Frank typing in a message so that my chat goes right back to the top. So there we go. That's just perfect. In terms of those volume figures here, Anything stand out? Is anything standing out? I don't know if anything's standing out.
Tell you what stands out, not in the volume figures, is the candle today for Dell. My God.
The candle today for Dell, but Ilya, I don't know if you've been following these reports, 33% gain. So
in a day.
Yeah. So two things.
That's some fund manager's year right there.
Yesterday, I pointed out like, how much news is priced in. Maybe it's like NVIDIA, inside and lower. What the market clearly has underpriced the AI infrastructure story still. And then when you look at a Dell, it's like what goes into the computer: CPUs, Intel, GPUs, AMD, internal memory. You're going to have Western Digital.
I mean, these guys are selling server racks.
Right. So, but my original point here, going back to IGV, have you seen that? We shared this yesterday, the Bank of America note. The tokenomics just aren't working out for us right now.
Mm-hmm.
We got another one of these reports. A company apparently spent $500 million in tokens in one single month because it forgot to cap usage rates among its employees. And that company had an internal leaderboard where engineers were encouraged to use as many tokens as possible, which went into their feedback in terms of performance.
Yeah.
Do you know what company that was?
Kevin, Meta, I believe.
It was Amazon, in fact.
Ah, yes.
And so
the leaderboard for AI use, I believe, is Meta or Microsoft.
So Amazon burns an extra $500 million in Anthropic, which increases Anthropic's annual run rate by $6 billion, which then helps lead to a $900 billion plus valuation round, which Amazon owns 20% of. So I think they came out ahead.
Saying it's a little circular.
But Ilya, the point there is, though, about the tokenomics. If the tokenomics aren't working out and you have the CEO of Bank of America coming out and saying this, it doesn't sound like that's a future in which software is eaten by AI. No. It sounds like a future where AI is a layer sitting on top of the software. So the context of the past 2 days move here in IGV, more companies and the Bank of America CEO being public about how the math may not just be mathing.
Mm-hmm.
For some of the AI build out here. IGV is a brilliant,
especially as costs rise and interest rates are higher. So getting the money that would make the math is that much more difficult.
So you can call yourself a bull, if only temporarily. I don't know if we're allowed to give you a pass, but I think we can here. 75.96, Ilya. I should have walked away with my little bag when I had a chance. Nice little pullback here at the end of the day. It's the end of the month as well. It's been a very good month for stocks. Should I take the time to mention seasonality for the month of June? People usually like to know what's coming up around the corner. June's been a good month. Since 2000, we'll do 10 years for the sake of this conversation because I think that's more relevant. June has produced a gain for ES of 2.02%, gaining 80% of the time over the past 10 years, followed up by July's 3.29%. Yeah, July's 3.29% gain, 10 for 10, 100% of the time in the last 10 years. The NASDAQ here, 2.93% average gain in June, up 70% of the time. July, 4.21% of the gain, up 9 of the past 10 years. Those are NASDAQ futures. So we have that going on here, Ilya. Do you think that the chase in this market continues? Everyone wasn't long enough stocks at the end of March, early April. So we've got to keep plowing money into the winners to pad our returns so that we don't lose our clients' funds. Is that still driving this thing?
Needless to say, I don't think that because I'm getting all of these flashing red signs just looking at this chart. From the divergence to the fading volume to the shape of the candles. I mean, it looks awfully toppy before you get into any other consideration. But also momentum here is so strong that one would be crazy to try to step in front of it other than when potential opportunities for just a little crack in the armor appear. And then you go small and risk defined and you see what happens because you're going to lose money on most of those ideas until it's the one that works. And what you hope for is that the one that works is so big because the rubber band has been stretched so far that you pay for your earlier sins. And that's sort of the nature of the game in stocks. But you don't have to only live in the stock indexes, because if what you're looking at is trading the macro as it presents itself, there's the bond market, there are currencies, there is gold, there's the base metals. All of those things are trading the macro narrative in a straightforward, unambiguous kind of way. And they're there for you.
Ilya, we head into this close here, just about 30 seconds away. It's looking like a day where oil is going to be down around 1%, bump it back up to the highest levels we've seen since about 11 a.m. S&P going to break my heart and close a hair below 7,600. That's a bummer. NASDAQ here up by 0.3%, 30,405. The big story going into next week is the vol crush. We'll highlight that again. Ilya, you'll be back on Sunday for first call with Jamal. I'll be out traveling, but volatility here going into next week, 15.33. 3 months into the Iran war, 15.33 VIX, folks. We're done here for today. It's been another good trading week, another good trading month. Thanks for tuning in. Make sure you like and subscribe on your way out. Thanks again to the producers who are putting together a great show. So for Ilya, Spivak, I've been Chris Vecchio. Good luck trading. Come back on Sunday, though. First call, 5:55 Eastern, 4:55 Central. Ilya and Jamal to kick off your trading week. We'll see you there.
See you there, everybody.
Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your